To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, my colleagues Hiral Daria and Sharad Dubey. And guys, suffice to say that there is some bit of green on the screen. May it last, but you've got to keep in mind that oil, being the deep insider, isn't quite reacting the way the equity markets are. So maybe stretched equity markets giving a bit of a bounce, but conflicting statements out there from the Iranian side, and therefore, as is usually the case, nothing is a given right now.
Yeah, nothing is a given. And from yesterday as well, you know, the commentary that we heard from the War Committee in the US and what Trump is coming out and saying is, it's very diplomatic that yes, we are here to make a deal, but provided Iran comes on the table.
And Hiral, there is
as usual when it comes to Trump.
Exactly.
Conflicting statements.
But there's a timeline given by him, and that's
2 to
something
3
new.
weeks.
2 to 3 weeks. Now, how much does it actually fructify? That's the big question.
Yeah, that's the big question that we should be watching on for. But lots happened in terms of the overnight updates from the geopolitical side as well, Sharad.
Exactly, and the war developments are happening. Neeraj mentioned about the commentary from Trump, but something is coming from the other side as well. I'd like to talk about that. The first one definitely is the US President Donald Trump stated that he will be leaving. I mean, the US will be leaving Iran within 2 to 3 weeks. That's an important statement coming in. Trump also stated that he's willing to end the war against Iran even if the Strait of Hormuz remains largely closed. Also, important commentary coming in, especially post-market hours 1 day ago, that was Iran's President Masoud Pezeshkian. He may consider ending the conflict under certain conditions. This is the reports coming in. Today morning itself, UAE is also preparing to help US open the Strait of Hormuz by force. Wall Street Journal is something which will be focusing on. But the important time, 6:30 a.m. Indian Standard Time, that's Thursday morning tomorrow. Yes, markets are open. Asian markets are also open. Trump will be addressing an important developments on Iran as well. In fact, listen into what Trump has said on the government's plan to rein in on the oil prices and the next steps under the Operation Epic Fury.
All I have to do is leave Iran, and we'll be doing that very soon. And they'll become tumbling down. And stock prices were up today almost to a record because they know two things. Number one, we have a safe country. We had to take a little detour because we had a madman named Khomeini who sadly is no longer with us. And we had regime change already. We've knocked out one regime, then we knocked out the second regime. Now we have a group of people that are very different. They're much more reasonable. I think much less radicalized. We have had regime change. We're dealing with people that are much more rational. We leave, probably that's all cleared up. Today I heard tremendous numbers of ships were sailing through. We're negotiating with them right now. We have had regime change. Now, regime change was not one of the things I had as a goal. I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that because we'll hit bridges, and we've hit some. We'll hit some bridges. We've got a couple of nice bridges in mind.
Well, that's the US President. But remember, tomorrow morning, 6:30 a.m., that's what we are tracking. There will be important developments coming in for Iran. But apart from that, the Asian markets, they have opened in optimism on a near-term end of Middle Eastern tensions. Now, despite the signs of de-escalation, the gold price is still up that $4,700 per mark. Slight pullback seen in the global crude baskets, which we are tracking. But nevertheless, the US dollar and the treasury yields are still remaining elevated. The markets need some more important developments, at least when it comes to the de-escalation. But remember, the focus is also on the AI and the Fed rate cut trajectories, which is expected to happen in April. And interestingly, OpenAI, they have raised a record $122 billion at $852 billion valuation. That itself is a big amount as well. But of course, moving on, focus, we are having David Roche. He's a strategist at Quantum Strategy. Good morning, David. Sharad here from NDTV Profit.
Hello.
Hi, David.
Important geopolitical tensions actually coming off right now, important commentary from Trump and even from the other side as well. How do you see this development happening, and what does this mean for the equity markets?
Well, I mean, the equity markets are clearly on a different trajectory to the oil markets. The energy markets are seeing that the disruption caused by Trump's war, which achieved, by the way, nothing except chaos, is going to be long-lasting. That's one conclusion. So the equity markets are doing one thing. The oil markets are doing another thing. I think the equity markets are not realistic. The oil market is much more realistic. So you've got two options. Trump yesterday was going to bomb the Iranians into their electricity plants and everything else. They didn't open up the Straits of Hormuz. Today, he doesn't need to open up the Straits of Hormuz. He says he never had regime change in mind, and that there are huge numbers of tankers are moving through the Gulf. Well, I can tell you from the intelligence point of view that the man is living in fantasy land. And my general feeling is that the Iranians will accept that he goes home defeated, provided they are left in charge of the Gulf. That's the new nuclear weapon. And you can add the Red Sea to that with the Houthis controlling Bab el-Mandeb. That will not give equity markets much respite for long, because you end up in a position which is much worse than where you started from. That's my view.
Well, the oil markets for now, David, good evening or good morning to you respectively, but the oil markets...
And hello, both actually.
Okay, thank you. So the oil markets are not quite showing the same enthusiasm as the US stocks or the Asian market showed, right?
No.
Do you believe that a watch on oil prices would essentially be the lead indicator for which way the equity markets go as far as a trend goes, and not as far as daily moves go?
Well, look, if I was to get, kind of into the peacenik camp, that there's going to be no more war and everything will be wonderful, what would I need to see? That's really what you're asking me. I would need to see 20 million barrels of oil coming out of the Gulf and sailing uninhibited out of the Straits of Hormuz. That's where things get back into balance. If you're left with convoys and 8 million or 10 million barrels coming out, you're still 10 million barrels short. And you also have all the political risks. So I would need to see the oil production reestablished, one. Two, I would have to be convinced that the movement of ships, the free movement and navigation of ships in the Gulf, was not under Iranian control, as it is absolutely at the moment with their toll system around the northern Larkin Island. So anything that moves in the Gulf is now under Iranian control. So that would have to be resolved. At that point in time, I'd say the crisis is over. And I don't think it's going to be over anytime soon.
So, David, that's an interesting take when you're talking about the oil dynamics, specifically when you talk about the oil inventory versus the pricing that we are watching out for and the kind of reserves that everyone is looking at. My question to you is on your wealth preservation portfolio as well, because that's what everyone is looking at. An interesting point I mark is on your asset allocation. Now, you have moved out of the Magnificent Seven and the AI producers to some extent, right? However,
yes,
you do remain long on China tech and AI adoption. Why that kind of divergence?
Because of the economic model behind AI in China versus the United States. In the United States, it's a closed system being fought out between big names, and nothing is really open. So you have a competition to put $600 billion US into AI in the United States this year. It is not clear to me how that $600 billion earns money for investors. I think it's an ego competition between the big AI boys or girls, as the case may be, not to be sexist. If you go to China, the whole open AI system and the broadening of AI away from simply producing the fastest LLM or the fastest bit of Gen AI, the whole emphasis in China is applying it to what I do every day. so that it is an applications game. It may not be as fast as ChatGPT, but it does many, many more things across a much wider swathe of society. That is how you get AI paid for. So the reason I am long China is because the economic model is right and the pricing is right. And the US, the economic model is wrong. Over-concentration of vast amounts of capital, which will never be remunerated, and the economic model is also closed. That's the difference.
In which case, with this corrective move that has happened in the Indian equities, the economic model does seem to be right, even if the macros because of high oil is a bit of a problem. But that hurts China too. Is India, with this valuation correction, also coming in the realms of getting noticed or seeing some bottom fishing?
Well, I can't tell you what the great, the wealthy, and the wise are doing. I can only tell you what I'm doing.
Exactly.
Which is to say that India is one of the two Asian equity markets which I would focus my holdings on. I think a lot of other countries will have permanent problems with the change in their terms of trade as a result of the ongoing effects of the Gulf War. But both India has got domestic critical mass, and China has got a relative immunization from the global energy crisis. So whether you're talking about the application of AI or whatever, India stands out to me as something that I would buy at these levels.
That's an interesting take coming in when it comes to the Indian markets as well. But thank you, David, so much for joining in. Always a pleasure to speak to you. But moving on in terms of markets, just a quick recap, because yesterday was a holiday year. You had Nifty 50 ended in the red. We were seeing cuts of almost 2% below that 22,400 mark. And this is the second consecutive session of losses. However, a bounce back in today's session is what everyone is eyeing with the way Gift Nifty is indicating. Bajaj Finance, SBI, these were the top losers. And the broader markets also underperformed the benchmark indices in trade. Moving on from there, if you see in terms of the mid-cap 150, that was down nearly 2.5% as well. Power Industries, Union Bank of India, these were few of the counters which were trading under pressure. If you see in terms of sectors as well, all of the sectors ended in the negative territory, wherein the PSU Bank Index was the best performing sector, seeing cuts of over 4.5% in trade. Moving from there on, if you see in terms of Bank Nifty, real estate, auto, oil and gas, these were the ones which actually closed in the red for the second consecutive session. And the FI selling, that is what has continued as well. So, Neeraj, I mean, the question over here is, what happens from here on? Because in spite of that bounce back that is expected basis what Gift Nifty is indicating, sustainability is something that the investors are wanting to see.
Yeah, well, I think for now, people would think that this is still a sell-on-rise market, right? I don't think the narrative there changes. But for that one statement where Donald Trump said that the war can end even if the Hormuz remains closed. In some sense, that is, a lot of people would eye it as
so a little bit of certainty is coming in the
maybe, hopefully, right? That's the question. I think people will be clutching at straws, but hoping for almost any kind of optimism right now. The interesting piece is that I saw two people who've been slightly bearish over the last 1.5 months or 2 months, and their notes look slightly different now, and hence I'm standing on the shoulders of Lawrence Blanco and Kotak Securities for today's trade setup. So Lawrence Blanco says that Nifty's decline from February highs is showing signs of maturing. Daily RSI failing to confirm this week's price lows, and early indication of slowing downside momentum. This week's momentum divergence coupled with supports sets up the index for a rebound rally in the coming weeks. Aren't we all hoping for that? From a tactical perspective, Lawrence says that this represents a bottom fishing buy setup. Let's hope that it is true indeed. He expects, of course, that the Nifty will remain contained within the broad 2024 to date trading range, bounded by 21,743 to 21,800 support and 26,270 or 26,340 at resistance. I can tell you without a shadow of doubt, if the markets were to go to those levels, even if it just means kissing the earlier highs, everybody would be happy. But this is the band that Lawrence Blanco is saying. More importantly, he's placing supports at 21,743 to 21,800, which is not too far away from day before yesterday's close. And the other is Kotak Securities in their note that came out 2 days ago. I think that line stood out for me is this, that the 8% correction in the broader markets and more in several stocks since the start of the war implies a prolonged crisis and a large cut to earnings in perpetuity, which is not correct. This is Kotak, which has been skeptical on Indian valuations, now saying that this is not correct and therefore the note is constructive by and large, but this is the main line. So two people who've been fairly bearish and they've gotten proven right are at the margin turning constructive.
I mean, they're just not yet there, but they're just starting to build on now.
They seem to be suggesting that this is a good run.
So which is, I think, a positive trend as well, because everyone is talking about the impact that comes in FY27 more than FY26 as a whole as well. But very quickly, your April F&O series is what actually kicks off, and this is kicking off with a historic level of baggage as well, because your March 2026 was the worst ever series in point terms, when Nifty shed close to 3,100 points in March itself. We're entering a new month where high stakes and heavy short positions are colliding, and you're seeing a glimmer of geopolitical hope from here on. And as even Neeraj was pointing out, two of brokerages who have been slightly bearish are on the constructive side. Talking about the setup that's primed for a massive recovery if the war headline continues to soften, and at around 77%, rollovers are the highest that they've been all year versus that 70.4% average. In fact, if you're talking about high rollovers as well, in a market which is falling, it actually suggests that short positions are being carried forward as well. And the market is now sitting near a 52-week low. Any de-escalation in the Iran war could turn these rollovers into a bear trap, and that's something one should watch out for. March auto sales, again, volumes provide the first real data on whether the consumer demand is holding up despite the war. So watch out for that. You have the RBI policy, which is slated on the 8th of April, and this will be the first policy meet since the time the war began. So markets are desperate for commentary on the rupee, which has hit a record low earlier this week. So again, macros become very important. Your Nifty 50 is currently in a make or break zone and 10.5% below its 200-day EMA as well, which is indicating a deep correction. In fact, experts are suggesting a dead cat bounce that could take it to levels of around 22,500 to 22,700, but a slip below Monday's low could open the gates to 21,700 as well. Bank Nifty, watch out for 50,090 as the support and the resistance at 51,250. So those are the levels we should be watching out for. But the first day of the new series, Puneet, what do you have for us? What is the derivative data indicating? Good morning.
Good morning, Hiral. So definitely the rollover data was one of the key aspects to watch, because the highest that it has been over the last few months, led by, of course, the market condition. Today, the GIFT Nifty implies a 372 point, at least for now, open on the upside, led by the comments coming in from the Iran president first, and largely the global markets showing you that momentum as well. In terms of the Nifty 50, of course, 22,300 odd levels. We are expecting a key support level at 22,800, and with this implied open, we will get there, of course. But in terms of the Bank Nifty, that has seen consistent selling pressure across the board, and the latest RBI measures were a kicker for the Bank Nifty on Monday. Hopefully some momentum now with some quarterly updates expected this week, and the next one is expected to provide some more comfort, at least on the fundamental side, given the numbers will give you perspective of what's happened in the month of March in terms of impacts. Largely, when you look at the foreign investors, they've continued to sell in the cash market. DI reported almost 15,000 crores in the month on Monday specifically. The index long also very, very categorically plays between the 14 to 15% range at 15.1% now, continues to be at a very similar level to how we've ended the last series in the month of March. And specifically in terms of the open interest distribution now, we've actually moved a couple of levels back now, showing 21,900 all the way up to 22,900, because we've seen a massive change in open interest at the 22,000 level. Now, this might be short-lived given what we've seen comments across brokerages, across precedents also of different countries. So 22,000 currently seeing almost 26 lakh contracts for the puts, and 22,500 seeing that divergence of both those levels at this price point for calls and puts as well. But largely open interest gainers and losers also show you the trend for individual stocks, where SAIL, RBL Bank and Solar Industries were the ones which saw massive shorts and longs being built up. For the metal pack continues to offer that favor to the markets, but the open interest thins out very quickly for the losers. So watch out for the auto pack, definitely based on the reactions of the March auto sales. But the IT pack would be something which is very interesting as well. We started to see notes coming in for previews and continue to maintain a decent view as of now, maintaining the constructive view. Albeit impact from the AI part, but continues to be constructive at these valuations and should be available over the next couple of days.
Well, thanks a lot, Puneet, for that. And of course, we will be tracking the auto sector today as well on the March sales number. But moving on to the stocks which should be in focus, paper stocks should be in your radar. It's a slightly positive news flow coming in. Government has extended the minimum import price on paper products till April end. And this move is, of course, there to protect the domestic manufacturers from the low-priced imports and maintain market stability. Channel checks also suggesting a price hike announcement is expected to follow in a week in major categories. And remember, there's a very less exposure of these paper companies in the overall supply chain impact. Most of the raw material, which is the wood pulp, is procured domestically. Second one is the Mumbai realty stocks, especially the smaller names such as Rustomjee, Lotus Developer, Marathon NextGen, Ajmera and even Kolte Patil should be in your focus. Maharashtra ready reckoner rates have been unchanged for FY27 financial year, and our decision is on the account of a slowdown in the real estate sector. Industry is urging minimum rate for the property transactions and cooling related theme stocks. Of course, 2-3 weeks ago, these stocks were buzzing in trade, but I would like to get them back into this scene, especially on the technicals front, as India is expected to see more heat wave days in the month of May and June versus April as per IMD, and Q4 numbers are likely to see a good growth, at least in the primary sales number. Remember, the base quarter which was there was on the lower side last year, so that benefit also kicks in. So you should focus on these stocks as well.
Right, interesting spaces that you've picked, Sharad, because absolutely apt with what IMD has come out and said. So you will see some action there. But moving on my list, I have Corona Remedies, but they've actively expanded their portfolio through strategic acquisitions. They've acquired Walkadine antiseptic brand from Dr. Reddy's, and this will be an entry in the 648 crore povidone iodine market. Now, this follows acquisitions of brands from Bayer as well as Sanofi. Their goal is to strengthen specialized therapeutics business, so watch out for this one in trade. Page Digitex as well, they've won an order worth nearly 500 odd crores from NTPC, and this is a battery energy storage system order, which is a BESS project, and it's located at the Nabinagar Super Thermal Power Station in Bihar. It includes a 15-month execution timeline followed by 11 years of maintenance. So watch out for this one. And lastly, Coforge. They've received an approval from the RBI for an overseas direct investment exceeding $1 billion. Now, this is critical in order to finalize the $2.35 billion acquisition of the US-based AI firm, which is Ancora, and they're aiming to reach $2 billion in annual revenues by March 2027 through this integration. So watch out for this space pretty closely, Neeraj.
Okay, a lot of other stocks also in focus. My three stocks. I wonder if ONGC and Oil India maybe go down a little bit to the crude price, slight bit of a pullback in crude prices, or India opening up nearly 80,000 square kilometer for oil and gas search actually helps these companies in some fashion, because now it is the country showing that they are really wanting to amp up oil exploration, and that could only be construed as positive top line news for oil explorers. So keep an eye out for that whole pocket and cohort of stocks, ONGC, Oil India, some of the oil exploration companies and the ancillaries. All of these could be in focus. So the aim is obviously to boost domestic fuel production and slash import dependence. The days of maybe $55 to $60 per barrel on crude seem to be gone, at least for now. Saman Capital could be in focus. Shares has received about 5,600 crores from IHC for 41.5% stake, and therefore now it's a new promoter on board. You could argue they've been issued at a price of 139 or thereabouts. I believe this should be construed as positive for Saman. Let's wait and watch how this one does in the session today, whether it reacts positively or no. Also watch out for small names, Ganesha Ecosphere, Polyplex, Garware High Tech, because the government has notified 40% recycled content mandatory in food packaging effective April 1st, and therefore the recycled PET, which is rPET as it is usually known or commonly known, And now the business case for this strengthens, and therefore companies in this bucket could actually benefit, maybe even Paca. But yeah, these are 4 or 5 names that you want to keep an eye out for. And of course, watch out, guys, for Interglobe Aviation. Just keep in mind, a lot of news flow out there. I don't know if we miss marking that maybe in totality, but Interglobe Aviation, ATF prices have hiked.
They have doubled almost.
Crude prices have come off, and they have a new person at the helm of affairs. So could be a very interesting stock to monitor.
An interesting stock to watch.
And Street is bullish also on the new hire.
Yeah, the street is very bullish. The only reason being is because now their focus is going to be in terms of where expansion plan goes, and the personality of the incoming person has been a person who does cost cutting. That's the way he functions. Now, the conversation is when Indigo is already a low-cost airline, they function on a similar model. His role becomes much easier, where he can now focus on expansion as well in terms of international markets.
Yeah.
So strategy is going to become key from here on. Let's see where it goes. In fact, the other big news development is where the Reserve Bank of India has deferred the implementation of its new acquisition finance guidelines by 3 months. Now, the rules originally were set to take effect from the 1st of April, will now come into force on the 1st of July, and this extension follows feedback from stakeholders and further review by the central bank as well. In fact, the RBI has also made some revisions to the amendment directions on capital market exposures, which were first announced in February, and the key changes include a refined definition of acquisition finance, limits on lending and clearing norms, and for on lending to subsidiaries and special purpose vehicles. This somewhere is going to be positive, Sharad, as well, when it comes to a sentimental move today.
Well, yes, sentimentally it will be positive because there was a pressure on the limits from the brokers, or you could say the intermediaries, and that is where a little bit of concerns definitely come in. But the definition that has increased for this acquisition financing, just to put that in perspective. And joining us is Ashish Rathi. He is the CEO and whole-time director at HDFC Securities. Good morning, Ashish. Always a pleasure to have you. Ashish, there is a temporary relief happening here for the capital market intermediaries because of the extension of this important update from RBI. But there seems to be changes in the definition also, especially of acquisition financing, and getting in more entities also in the definition. How do you see the changes in the clarifications coming in from the RBI circular?
So just to tell you, so the earlier circulars was dated Feb 30, 2026. I think so from a capital market perspective, more of it was to do with proprietary trading. I think so now on 30th March, they have come up with a press release stating that it has been extended till July 1, 2026. Now, from a capital market perspective, what I see is 2 important things which have happened is, one is on the proprietary trading. The earlier circular did not mention the definition of cash and cash equivalents. Now, I think so they have defined what is meant by cash and cash equivalents, which now includes obviously the money in the bank account, the FDs, and the overnight mutual funds, which you can apply a 10% haircut and do it. So I think that this is where the clarity comes in. Plus what they have, plus the major, I think so the worry for the market was, earlier brokers used to get 50% in terms of cash or cash equivalents and get an exposure of 100%. So I can bring in 50 rupees and get 100 rupees exposure in the capital markets. And proprietary trading was the major one. And if you look at the options volume that happened on the exchange platform, almost 50% is proprietary trading. So what happens now? The leverage reduces. So what leverage was going to reduce on 31st March, now it gets extended to 1st July. And what happens to the cash and cash equivalent component? That definition is there. And earlier it was said that 50% of cash only needs to be bought, but they have widened it to bring 50% of cash and cash equivalents. What we see as an implication of all this, maybe not now, because now that it has been extended till July 1st, I think so we see a 15 to 20% reduction in volumes in maybe futures and options for the brokers. Acquisition finance obviously is one thing which is more pertaining to how you can acquire subsidiaries also they have included. But more from a capital market perspective, this was the implication, and that gets extended by July 1. So brokers get a breather for 3 months.
So, Ashish, the belief is that while for brokers and CMIs, while the norms are, this is Neeraj here, good morning, that stricture overall,
good morning, Neeraj.
They're stricter overall, but the easing on collateral for prop trading, market making, all of that might actually be construed positively. Would that be a fair assessment?
Yes, so market making definitely, which I completely agree, because earlier they were not allowing the collateral which was used in market making to be used as margins again. That definitely helps the market. But market making is a smaller section. The more important section which impacts the volume is prop trading. Over there, the only change that has happened is earlier it was a 50%. Now, so you have to get it 100% collateralized. The change which has happened now, earlier they had said 50% has to be cash, which was in the bank account. Now they have extended that definition to include even bank FDs. So that remains as is. People will have to navigate through it, and maybe 3 months down the line, we may see an impact, and it will be a gradual impact. I think so. The BGs which are currently there in the market may get matured, and accordingly, the new BGs will have to have 100% collateralization. Plus, also one thing which we have to see is now today the new STT norms go into account due to the finance bill, which is a 150% raise in futures STT and a 50% raise in options STT. So this, along with what gets impacted from July 1, cumulatively might have an impact on the options and derivatives volume in the market.
Hear you. Okay. Ashish, well, good to have that 3-month leeway as well. Let's see how people adjust to it. But thank you so much for joining in today. Really appreciate your time.
Thank you. Thank you so much.
We'll take a quick break. Back with more stock-specific conversation. Our guests, Parag Thakkar and Kush Bohra, join in soon.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Welcome back to India Market Open, and moving on, sources are telling NDTV Profit that HDFC Bank's board is likely to recommend incumbent CEO Sashidhar Jagdishan for another term as CEO. Bank's board satisfied with Jagdishan's performance, leadership decisions, and for more on this, we are joined in by my colleague Piyush Shukla. Right, Piyush.
That's right. HDFC, we are hearing from our sources that HDFC Bank's board is likely to recommend the incumbent CEO, Mr. Sashidhar Jagdishan, for a third term in their next meeting on April 18, the next board meeting. The board is satisfied with Mr. Jagdishan's performance and also his leadership decisions taken during the course of our last 5 to 6 years. Jagdishan meets RBI's fit and proper criteria and other regulatory criteria as well for being a CEO of a bank. The current tenure of Mr. Jagdishan ends in October this year. With regard to the bank's ex-chairman's Mr. Atanu Chakraborty's resignation last month, people aware of the development say that the bank had taken action against the 3 senior employees who were engaged in mis-selling of Credit Suisse 81 bonds during Mr. Chakraborty's tenure itself. Bank also ensured timely listing of HDB Financial to ensure that they meet the RBI's upper layer NBFC regulatory requirements of getting listed by September 2025. Sources say that a few words that were used by Mr. Chakraborty in his resignation letter were not warranted. The bank has appointed an external legal firm to assess his resignation letter, and the agency is expected to come up with the final report and submit it to the bank very soon. Back to you.
Okay, Piyush, thanks. This is a big one, of course. Thanks so much for getting us that update. And, we will, of course, talk to Parag Thakkar about this as well. But let's first welcome in Abhizer Divanji, founder of NeoStrat Advisors LLP, to talk about this. And Abhizer, good morning and thank you so much for joining in. Yes, it's one more HDFC Bank conversation, right? The stock doesn't cease to be in news. But this is of our own making, let's put it that way. But here's my question, Abhizer. Does this come as a surprise, even if the news is big, or would you have believed that this would be par for the course?
Oh, so first of all, the fact that the contractual term of a CEO is expiring, conversation around the change in the CEO is inevitable. So I don't think that is an issue.
Right.
RBI does require banks to reset their positions and figure out if there are any internal or external candidates that they may wish to consider. A renewal is not foregone. So in a sense, the board going through a process of deciding who should be appointed, including the incumbent, is a natural process and is a good one at that. So I don't think that is an issue. Now, the second issue is more philosophical in terms of where does one stay in a situation where clearly the bank has been plunged into a crisis situation. Is a leadership change philosophically encouraged in a time like this, unless there is significant underperformance deemed of a CEO? If not, I think stability is more important than change in leadership. And RBI has done this many times. It's given 1-year extensions, it's given 3-year extensions. So I think whatever the regime change that may happen at the bank, it will be a situation where stability will take predominance over the need for a change, which is just regulatorily required.
Abhizer, good morning. Hiral on this side. Now, what you mentioned about right now is absolutely important, that stability becomes the key more than a change in regime. Now, one, we just had the chairman who exited a couple of weeks ago. To add to this, how big a overhang could this October 2026 renewal be? Because everyone was anticipating that the board will start putting in their recommendations in the month of April or May. Until then, this will be an overhang to understand what happens in terms of the CEO as well. Till the time this is finalized, because this is still source-based information that NDTV Profit is picking up, do you think this will remain an overhang when it comes to investors of HDFC Bank, where the thought is still, what's going on?
So I think the investors of HDFC Bank have to, and they have until now relied on the board and should continue to rely on the board and the management. So ideally, RBI requires a period of 4 to 6 months prior to the termination of a CEO for a board to be deliberating and putting forth candidates. So ideally, that process should start and would have started at the bank, I would presume. As far as the confidence and the overhang to the existing issues are concerned, I think the shareholders, as well as the stakeholders, I would say, need to have the level of confidence of what the board has demonstrated in the past. So in the past, I think HDFC was, as a group and as a bank, was an extremely well-run organization. It has got a board where there is voice, and the fact that somebody like the existing or the past chairman had the ability to voice himself first within the board, I presume, and then outside of the board to the general public, also shows that there is a lot of voice making that can happen in the organization. A lot of people expressing their views and a lot of views getting accepted. So ideally, the stakeholders should consider the democratic process that goes on in the bank more positively, to say that there would be deliberations, and these overhangs are not things which will impact the larger decision making or the larger growth of the bank going forward.
Okay, an interesting take coming in there. But thank you, Abhizer, so much for joining in. Always a pleasure to speak to you as well. Parag bhai and Kush, in fact, let me get both of you in as well. Good morning. Parag bhai, your view when it comes to HDFC Bank. I know we've spoken about this. Initially, we were talking about a conversation where the next overhang is with regards to Shashi's renewal, right, in terms of the new term. How are you looking at the story that we have?
So I've worked there, I maintain that. I keep my faith in HDFC Bank's ecosystem. I keep my faith in Mr. Sashi Jagdishan and the entire team, so I would not like to comment on what Mr. Atanu said and what clarification he gave. That is his personal view and choice. But I would like to say that at 1.4 times FY28 book value at 11 PE, there is no problem. There is no problem in the asset quality of the bank. Under Mr. Sashi Jagdishan, one can say that shareholders have not created value, shareholder returns have not come. That is because the merger has depressed their NIMs and ROAs to some extent. I think now we are on the verge of rebounding from there and mean reverting. Slowly and gradually in terms of ROA, NIMs will of course take time. But I would say that from FY27, they have already said that it will grow ahead of the system. In FY26, they are going to grow in line with the system. RBI is okay if CD ratio remains here or it is little bit less. So that is also fine. I think RBI is focused on liquidity coverage ratio, which HDFC Bank will take care of. So in my view, at current valuations and of course with the current team, I am absolutely fine holding HDFC Bank. Of course, the ICICI and Axis we spoke about on that day.
Well, Parag bhai, definitely we speak about the private banks, and Kush, I want to get you on this. There is an overhang in any bank you pick up in the private space, and PSU Bank technically sounds better. Do you still believe in that thesis? Because that really looks well in the monthly setup, weekly setup, at least for the PSU banking segment. How do you see that?
Sure. First of all, very good morning, guys. And just on a lighter note, what's the date today?
It's 1st April.
Are the markets going to fool us? Is the question.
I have a bigger question. Now, is whatever Trump's saying, in line with the theme of the day?
He said it on March 31st.
That's what I'm saying.
I knew Neeraj would pick up on the technicality. Maybe whatever he says tonight, would perhaps. But look, honestly, with him, every day feels like the same theme for the day, right? But one thing that doesn't fool around is data, and I'll come to that in just a bit. I'll answer Sharad's question. Sharad, I was of the belief that, the PSU bank setup is much better than the private banking space. But the kind of drubbing, the private banks have received in the last, month or so, and in fact, prior also, makes a case for the rebound in the private banks to be much sharper. Now, Monday we mentioned that the rubber band effect might just play out a little stronger on the bank nifty, and once the rebound starts, bank nifty might actually outperform nifty on the way up. So private banks also have a very strong case for themselves now, especially with the kind of fall that we saw. Now, just to come back on the setup, on Monday we discussed multiple data points which suggested a mix of capitulation and perhaps a rebound. And it's a good thing to see this kind of a gap up on SGX most likely would transpire to, an opening. The key question is, could this rebound turn into a reversal? Given the technical setup, I would give it a fair degree of probability that yes, this could turn into a reversal and perhaps the end of, the fall. Obviously, we all know and understand that much of it will depend on the news flow that comes out of the West Asia war. But technically, this does look like there could be a bottom formation in place. Nevertheless, 22,000, 22,200, that's a good support zone that should be held intact. But I will yet again see the internals more closely than the Nifty level alone. Remember when the Nifty had a gap up or gap down on Monday, we still said that actually is a good setup because of the internals. The RSI is the market breadth. So I remain constructive. However, I will not chase this gap up. Give it some more time, as most of the investors and traders already have. Let there be a confirmation of the reversal and then take a positional long on the Nifty. For now, just enjoy the rebound and maybe that marginal uptick in your portfolios, as and when it comes about.
Yeah. So, Kush, effectively, it still remains a market where you would be scared of a sell the rise, and you would want to see if that doesn't happen this time around.
Yeah, so I would not go with the sell on the rise.
But you're watching if the market were to do that or not.
Absolutely. One more thing, just to add, why am I, a little cautious? Even if we get this 350, 400 point gap up, that puts Nifty close to that about 22,700 mark, 22,700, correct, right? So even that does not take us above the previous day's high, which is like a first signal of reversal, right? So if we actually go above the previous day's high, which in this case happens to be 22,714, is when you could consider. So right now, like you rightly said, sell on rise is not something that I would look for, but buying on, the rebound also, as in when we get that, extra 1 or 2 data points of confirmation.
I hear you. Okay. Okay, what are the stocks then, Kush, on your radar today?
Yes, with all that optimism, I am going with all long calls. So 3 long calls today. 2 of them, by the way, are ones that have had a good structure but seen a minor profit booking here and there, and the third one is actually something that's given a breakout. So the first 2 are Strides Pharma and Premier Energies. Viewers would know that we've given calls on these in the past, but in market volatility they've seen some profit booking. Structure remains positive. So just to reiterate levels, on Strides Pharma, 960, 990 are your targets, 905 is where you keep that stop loss. Similar setup for Premier Energies, where 950, 940 are your targets now. 865 is where you keep that stop loss. And the one that's giving a breakout, ASK Automotives, right? Remember how I've said I'm very constructive on broadly the auto anch space. This one has given a medium-term downward sloping channel breakout. Volumes also fairly healthy, but the price action alone makes a case for a long trade on this one. 456, 467 are your targets. 434 is where you keep that stop loss.
Right. Importantly, the capital market theme stocks, that's where the positive news flow is coming in. And Neeraj, the BSE's average daily turnover in the month of March was actually higher than the street estimates as well. And we had a discussion also about the capital market theme. So there might be a temporary relief for the capital market theme players. Kush, anything in the broking space which is looking good, or you'd like to stick with the asset management space? It's a safe bet.
Very interesting. AMCs are something that I have remained constructive on. Aditya Birla, even HDFC, AMC, some of these names very constructive. And I know this is where Parag Bhai and I squarely differ. Okay? But I still like BSE.
I think he likes.
I like AMC and wealth management.
Yeah, the latter ones, which is the BSEs and the MCX of the world. I still remain constructive on these. I don't think Parag Bhai does.
No, so if it's simple, market is good, then you can be positive on them. So you have to buy when markets are bad to make money.
And just to put in perspective, yes.
No, but so are they investment candidates?
I am not keen.
You are not keen. On BSE, MCX, you are not keen.
No, I'm not.
On wealth management and AMC, you are keen. For brokers, you are not keen.
Not keen, yeah.
And Kush, there are 8 stocks also coming in the FNO segment, 2 of them from the capital market space, Motilal Oswal Financial Service and Nippon Life India Asset Management as well. Anything attractive on the charts for both of these?
Dead giveaway, Nippon. I would say, despite the kind of fall that it's seen, it's still respecting some of the key support levels. 800, that support zone has acted multiple times from where the stock has rebounded. So yes, not very constructive on the broking names, right now. But yeah, Nippon is something that I would look at positively from a positional trade perspective.
Okay, so Nippon Life, one should be watching out for. But moving on, it's that time of the day where we get you all the chatter from the dealing room, and we have Samit Sarkar who joins in. Samit, good morning. What are the dealing rooms indicating currently? Any positive commentary, or everything is still lackluster?
Well, first day of the new series and the GIFT Nifty is indicating that we will open in green. But 22,700 is something that we need to hold on to for more gains coming into the market is what dealers have indicated. There are a lot of shorts in the system, and for possible short covering or short squeeze, 22,700 level is quite important is what dealers have indicated. Few stocks as well. Prime Focus is the first counter where there are buy flows on the large HNI desk. Dealers are expecting some positive news flow here. For KEI Industries, dealers indicate that management has cut its revenue guidance in one of the privately held investor call group. They have cut the guidance by around 5 percentage points. That is the revenue number I'm talking about. And lastly, when it comes to BHEL and Indigo, a fresh set of sell flows on the FI desk was seen on Friday in the last hour of trade. So it would be important to see how these counters react in trade today. For Indigo, there is a positive news that this new CEO has been announced, but on the flip side, the bigger negative news is the fact that ETF prices have been hiked by more than 100%, which will have a negative impact, and analysts believe that at least 30 to 35% price hike is required by Indigo to pass on this impact completely. So it would be important to track how Indigo reacts in trade today.
So Amit, thanks for that. Just a follow-up, because you track Interglobe Aviation so closely. 2 or 3 things, right? Brent has come off, ATF hiked, new leader at the helm of Interglobe Aviation. What does all of this mean for the very short term, which is today, and the medium term, which is 5 days?
Well, from the medium term, obviously we need to keep a track of how Brent crude prices are moving, because even if they continue to remain above the $100 per barrel mark, this will be negative for the aviation industry overall. In the short term, the ATF price hike news is definitely negative, given the fact that they need to take a steeper price hike to offset this impact. And if they do not, if they don't do the same, then the April numbers on the financial will be very weak, because as per analysts, at least a 2,000 rupees per ticket hike or around 30 to 35% price hike is required by Indigo to offset the impact completely. And obviously the appointment of new CEO, at least the name which has come out, is quite positive, given the fact that the guy who has been appointed has a very vast experience in international expansion. So that is quite important and a positive for Indigo. So mixed set of news coming in. But yes, from medium term, crude movement is something that we need to watch out for.
Crude movement, absolutely important. Thank you, Somit, for that, and laying the ground for Danish to tell us more in terms of what a resignation of Peter Elbers and with William Walsh coming in, what it would actually mean. Danish, what do you have for us? Good morning.
Good morning. Well, William Walsh will be stepping into the role of Indigo CEO from the 3rd of August. And if we look at Indigo's history, he will be the 5th CEO and the 3rd expat CEO for Indigo. But if we look at his experience, he has over 4 decades of experience in the aviation industry. He started as a cadet pilot way back in 1979. And then we saw that he served 3 different stints as a COO and the CEO of Aer Lingus, IAG Group and British Airways. But he's going to step into the role of Indigo in a very challenging time. We are seeing that the ATF prices have literally hit the sky high. They haven't been this high in India's aviation history. On the other hand, Indigo is still navigating itself from the FDTL issue that happened in November. And now, on the other hand, we are seeing that because of the airspace closure over Pakistan and over Middle East, this is hampering Indigo's growth plans of international operations. But with the Willie having a great experience of international operations over the past three decades, we can really expect him to really turn around Indigo into a major global airline. And in fact, the previous CEO had set a new benchmark, and he said that he really wants Indigo to move from the LCC stage to become more of a hybrid airline. And he said that at that point in time when Indigo had just ordered wide-body aircraft. So Mr. Willie Walsh will be entering in Indigo's cockpit on the 3rd of August, and it is expected that he will steer around Indigo. Especially, he could give Indigo a major of choice to become one of the big global carriers in the times to come.
For that, interesting updates coming in. Neeraj also mentioned so much changes are happening. Parag bhai, just wanted to get your view on Interglobe Aviation. There are some positives, there are some negatives. How do you are looking now, at least in the medium term setup, how things are looking for this company?
No, I would say the appointment of a new CEO who has a very good reputation is a structural long-term positive. This huge increase in ATF price was actually overdue, right? Because crude oil went up. And every country has actually seen ATF price going up. So this was likely to happen, and it has happened. So I think I will be a buyer on this stock on the dips, because as Swami rightly pointed out, the near-term results are going to be bad. So you have to buy when the bad result is out.
Okay, so buyer on dips is your strategy. In fact, Jefferies has also maintained a buy. They have a target price of 6,140 when it comes to Interglobe Aviation. And what they are saying is that with the new veteran at the helm, he has 40 years of experience in aviation, including leading British Airways through the crisis. And the quick hire, just 3 weeks after Peter Elbers' resignation, minimizes the leadership gap as well from a strategic perspective. The priorities from here might include reliability, crew issues, and balancing the low-cost model amid the recent cost headwinds that Indigo would be facing. So this is going to be an interesting point in time for Indigo. A quick one, Kush. Indigo SpiceJet, what's the setup looking like right now? Because with ATF fuel price surcharge that will come in right now, somewhere you will see, escalations coming in. I don't know, how many people are going to be willing to travel in this kind of a scenario as well. So it's kind of a double whammy from a fundamental perspective. Are the charts indicating the same?
Let's make that triple whammy from a technical perspective also, because ever since that debacle in December, on the monthly basis, on the monthly setup, the stocks actually made a lower low, lower high formation for 4 months. Even if you go on the weekly setup, 6 to 7 weeks of lower high, lower low formations. Every attempt on rise has been sold into, and from a medium to long term perspective, this 3780, 3800 level remains a crucial one. If that is broken, the rounding top formation will come to an end with a negative bias. So I remain a little skeptical. I want to see at least the first higher high, higher low formation on the weekly basis, and then perhaps turn constructive. For now, it'll be great if the stock just consolidates around the 3800 mark and stems the fall. That'll be the first step. So I wouldn't really buy right now.
Okay, so no buy coming in for Interglobal Aviation. Hopefully it stays in the consolidation. That's what Kush has stated. But moving on, Varsha is joining us with some more stocks to watch out for in today's trade.
Well, let me start with Carborundum Universal, because the company has decided to shut down its German subsidiary. Now this is because the subsidiary kept losing money and had no realistic chance of recovery. Well, what are the key reasons of business not performing? One is the sales kept falling, losses were increasing, and there was too much competition but too little demand from the market. And the global abrasive market, if you see, have excess capacity. Companies are cutting prices aggressively and margins have been collapsed for the company. Raw material energy costs stated very high due to geopolitical issues, and the product and the market itself, if you see, had limitations. Even in good conditions, the products were not performing well, and this was not just a temporary issue but a structural one, and hence company went ahead and is expected to close down this subsidiary voluntarily. Now the winding down process and the financial impact of all this will be around 110 to 130 crore overall. And just a little background, the company acquired this Awuko's assets in Feb 2022 at 6 million euros when the business was doing almost 18 million euros, and the sales fell sharply to 11.5 million euros by FY26. Overall, if you see, from FY23 to 26, it posted EBIT losses of almost 180 crore, and hence company is winding down the process. The next stock which is in focus is of course Bharti Airtel, which has announced $1 billion investment in its data center arm, Extra Data Limited, with funds coming from Alpha Wave Global, Carlyle Group, and this along with the company's own contribution. Alpha Global will invest almost $435 million. Carlyle will invest almost $240 million, and Anchorage will invest almost $35 million, and rest will be contributed by the company itself. And Airtel will continue to hold a controlling stake in Enextra, and the deal is subject to, of course, the regulatory approvals. And the Enextra, if you see, plans to use the funds to expand its data center capacity. So overall, a big thumbs up coming for Airtel and of course the Carborundum. So overall, these are two stocks which will be in focus as of today.
So thanks for that, Varsha. Well, those are two amongst the many that will be in news today. So I want to take two of them and talk to Parag Thakkar about them, and then maybe try and get in Kush's view on those as well. The first one is what Varsha spoke about, which is Airtel. And the next one is Avenue Supermarts, which has had a really strong store addition in the last few time period, last few weeks, if you will. But firstly, Airtel.
So Airtel, as I have maintained, it is third largest holding in our Ford Capital dynamic PMS portfolio, and I continue to be very, very positive on the company. At 5.5% free cash flow, 60,000 crore free cash flow with such a low ARPU of 259 rupees in India, and Africa's business growing at a very good rate. On EBITDA, it is 9 times. Plus this news, plus now that the 60,000 free cash flow is now starting to get invested, and now it is in data center, for example. So I would say that again here also I have full faith in Mr. Sunil Mittal's management, capital allocation, everything, whatever he has done. In fact, this company has survived the most intense competition across any sectors, if you see, and it has emerged very, very strong.
So since you like a lot of these large cap, Prabha, the question to ask you is that what is the pecking order? So let's say between Airtel, ICICI Bank, HDFC Bank, Infosys, HCL Tech, maybe TCS, right? What is the pecking order?
So my pecking order is ICICI Bank first.
Number one. Numero uno.
ICICI,
Okay.
HDFC, Bharti
Bank.
Airtel.
Again, a bank is number two.
HDFC, Bharti Airtel, Axis Bank. Then recently I bought into cement stocks, Ultratech and Remco, and of course. So
IT comes way down.
Yeah, and within that HCL Tech is top of the order.
Okay, that's good clarity. Okay, this is one. Then the guys, Avenue Supermarts.
Yeah.
I mean, what happened to the store addition there?
So the stock has been resilient also, Neeraj. I think in the last 1 week it's not down, it's up I think 5-6%. So I think a good technical strength is coming, but interesting, the store addition, that number is big. We'll be getting to those numbers as well. But last 2-3 quarters, you see Neeraj also mentioned significant store additions.
What, 18 in the last 2 days?
And total 73 in this year, and total now 488 stores.
Yeah, but just the last 2 days.
Yeah, but I
18
think,
stores.
think about it. I think they had some, we should see what was their guidance for FY26. And to meet that guidance is where they fast-tracked probably the additions in that last leg is my
capability to hona chahiye. 18 store 2 din
It's
mein.
demand.
And each store is so big.
That's the point. That's a good answer.
It's demand.
You see, Q3 revenue growth was 13%, EBITDA growth was 20% because private label sales increased. In Q4, I think you will see acceleration of that. That revenue growth will be faster, EBITDA growth will be faster, and private label will sell faster. Don't forget, they have hired a CEO who is from Unilever. So I think there is a great intent to increase private label sales.
Right.
Which will increase the margins.
Exactly. But just getting Kush also on board, 8 stocks are coming in the FNO from today. Includes Adani Power, Cochin Shipyard, Force Motors, Godfrey Phillips, Hyundai Motor, Motilal Oswal Financial, Nippon and Vishal Mega Mart as well. Out of these 8 stocks which are coming in the FNO from today, any stocks which are looking good on the technical charts, maybe like a Vishal Mega Mart or a Hyundai Motor, anything here?
Yeah, so see, right now, given what everything is, a lot of these structures don't look as exciting. Maybe the recovery on Vishal Mega Mart is exciting enough for, a near-term trade, but even that I would avoid. So, like I said, maybe something like a Nippon Life that we discussed just a while ago is something that you can consider. But other than that, I would wait for a meaningful rebound on some of these names. But just to, complete that conversation on DMart, technically also it's looking very, very well poised, and Sharad, as you rightly said, in fact, it's gained in the last couple of weeks. We're in the middle of this week, obviously, but it's gained and on the back of very heavy volumes. So, defying what the market is doing, good strength, good setup, and the gains, on the stock, very encouraging. So, there's a good possibility that this might be a good near to medium term trade. On the downside, supports near the 3700, 3750 mark. If you go long, that should act as your stop loss.
Okay, so that's with regards to where Avenue Supermarts goes. Now with Avenue Supermart, in fact, a lot of your other business updates that have started trickling in as well. And what happens to jewelry stores is another aspect that we want to watch out for because one, the way gold prices have panned out is the question. Two, you have the wedding season, which is right here as well. So from the likes of a Titan, Kalyan Jewelers, all of these counters that remain in focus. Any view, Parag Bhai, when it comes to jewelers?
So basically, I would say that I have not tracked any other jewelry stock other than Titan in my life. I'll stick to the best where I don't have any corporate governance, any issues. And they are growing at a very good rate. So I'll be a buyer on dips. Of course, right now I don't have it in the portfolio due to valuation concerns. But if it comes down, but I'm hearing, so I'm not having it, so it's an unbiased view. I'm hearing that jewelry is doing very well on the ground also. But let's see. But I would wait for any big decline in the stock price to buy. I'm not comfortable still
with the valuations.
So much high valuation.
And just to, because we are in that consumption space, you have a Jubilant Food, which has renewed their franchise rights with Domino's Pizza. And this has been done for 15 years from here on. In fact, the franchise rights in Sri Lanka, Bangladesh have been renewed, and they have an additional option of another 10 years as well. That stock in pre-open is indicating an uptick of around 3.5%. Quick view on the charts, Kush, on a Jubilant Food.
You could have a rebound trade in terms of it being massively oversold, but look at the structure even before this kind of a fall, right? The primary trend is negative, so a rebound here or there is absolutely likely. But is it a constructive positional long trade? I'm afraid not. So I would have it on my list in terms of tracking it, but I wouldn't really initiate a long trade. And just a word on the jewelers. Thangamayil Jewelers is something that we've mentioned even as a call on the channel. Even now it remains attractive. So within the entire basket of jewelers, I think this is the one that stands out very clearly for me.
Yeah, and that stock is also showing you some smart uptake. But let's quickly address the markets right now. 22,800 is what you're tracking, Neeraj, as we speak. An up move of around 500 points is what pre-open is indicating. Let's just look at Bank Nifty as well, because that will tell you whether the pressure has eased when it comes to banking majors, the kind of pressure we saw in terms of Monday's session. But Aptus Value, Aavas Financial, ITC Hotels, Kaplan Point, PVR, JBM, some interesting moves. Adani Enterprises, Keynes Technologies, IRDA, ICICI Bank, Ola, Tata Steel. all of these stocks are seeing upward movement to the tune of 4 to 20% in today's session. I'm sure the rates will be settling at some point in time. But let's get in Chandan Taparia, Head Technical and Derivative Research at Motilal Oswal. Chandan, good morning and welcome to the show. Always a pleasure to speak to you. Hiral on this side. You know, the gap up opening that the GIFT Nifty and the pre-open rates are indicating. My question to you is, how sustainable are these levels right now, and what would you be watching out for in terms of today's trade?
Good morning, Hiral. Thanks for having me. So I think it's going to be a great start of financial year 2026-2027. So wishing everyone a great year. Talking about Nifty, it has been making lower top, lower bottom on the weekly chart from almost last 6-7 weeks. Index has seen a corrective move of more than 3,500 points. Now the important part is the market has formed the bullish divergence, but price has to sustain at higher levels. So first, an important part is to hold beyond 22,800 to 23,000. If market manages to hold above the same, then only the chances of the recovery towards 23,333, 23,500 could be seen in the market. But we need to keep in mind that structure is still negative and market requires follow-up actions. I'll closely watch the India VIX, which is now at 28 marks. If it goes down below 2220, that will be the first sign of market to get the stability. Second sign, if market manages to move beyond 22,800 to 23,000. Third sign will be surge in the put-call ratio. And I think we need to closely watch all three data internal to get the market setup going forward, post the ease out situation in the geopolitical concern.
There is a kind of an easing in the geopolitical concern. That's what Chandan says. Of course, we are expecting a gap up opening. But Chandan, what will be your technical picks today?
Yeah, so good morning. So I'll focus on selective aluminum metal name. Nelco is our first preferred idea, which is really holding well. It really rallied well from last 5 trading session from 347 to 394. Major trend of the counter is positive, and the counter has a resilience nature at the time of market pressure and holding well above its 50-day exponential moving average. So recommended to buy with support of 376, and this aluminum counter can head towards 404 kind of level. Second trading idea, that is buy on DMart. It seems that it already bottomed out and trying to hold beyond 4,000. It witnessed recovery in last 4 days from 3630 to 4,000, closed slightly below the same near 3950, but setup is quite positive. And small market support can take the counter to up by 5 to 10% from current level. So recommending to buy with support of 3870, and DMart can head towards 4100 to 4250.
Interesting. Everybody seems to be long DMart here. Kush spoke about it. Parag Thakkar spoke about it. There is a news flow as well out there. 18 stores added in the last couple of days alone. The market is giving you that support too. It'll be interesting to see if Avenue Supermart turns out to be that big, rather the biggest large cap mover of the day or no. Okay, speaking of movers and speaking of brokerage calls, it's 9:05. This is when we do the big brokerage call for the day. And the call today, or the note today, is the Citi's note, a Citigroup's note on Tenneco Clean. Puneet Johnson with the details of that note. Puneet.
Well, thank you for that. Now, Citi's maintained their buy rating with a target price of 650 on this auto ancillary company. Recent listing back in November has done well for investors since then, and Citi's view that it's a good play in the clean environment, offering a smoother ride at this point of time is what they've said. They've also specifically mentioned that the company maintains a healthy market share in the key segments that it maintains in. So almost 50% of its revenue comes from the clean air solution business. This is the emission norms business. So any change going from BS6 to BS7, or as we are looking at, the CAFE norms 3, whenever such norms comes, this segment continues to grow well, and Tenneco's almost 50% revenue comes from here. The other one is the ART segment, which is the advanced high technology, offers suspension products, and recently offered it over the Mahindra 7XO, which was a key feature of the car. So that is also a premiumization play within the SUV space. And they've specifically mentioned that their order continues to be endurance tech first for Citi, and Tenneco comes in second. After that is Sona BLW. So continuing to maintain their positive view on Tenneco, and a big play in the premium SUV space is what Citi highlights.
Okay, well, 6.5%, 7% higher. But remember, Puneet, thank you so much for that. The point is, viewers, this is the nature of the bounce that you will see today. It's an extended rubber band. Remember, if you bring up the Nifty chart for the last 5 days, you will get a sense. There has been a persistent downtick, if you will, and therefore you're seeing this sharp bounce back. Will it last? I think that's the key. So maybe, just maybe, don't enter into a trade at 9:15 a.m. or 9:16 a.m. Wait for the first 10 minutes. See how the market is behaving. Maybe wait for the first 2 hours and then try and see, because you will actually see elevated prices at 9:15. It might not be the best idea to buy at that level for a trade. So bear that in mind. But be that as it may, Tenneco was the one that we were talking about. The fundamental view has been explained by Citi. Kush on the charts, Tenneco clean.
Rather limited data, but from whatever data is available, I think it looks like 500, 505 is a good support zone. The stock was actually doing well before the war broke out, and the kind of fall that the markets have seen. It's not really seen that kind of a fall. So yes, there are some positive signs. Consolidation also in the market like this is healthy. So yes, with a stop loss around the 500, 505 mark, if you have a position, you could continue to hold.
Okay. If you have some position, you could continue to hold, but rather limited data, so bear that in mind. Banks, viewers, almost everybody is saying that banks is the key sector where you would want to bottom fish. So many people wanting to know, can I bottom fish? So many people getting the March bonuses. Can they put it in the market? Now, if that is your question, we've given you the fundamental take from Parag Thakkar. And I think a lot of brokerages today, HSBC is coming with a note on financials wherein they've also liked banks. So per se, banks seem to be the safe port of call. You know the views of Parag Thakkar and Kush Bohra very, very well. I'm going to ask Chandan. Chandan, for somebody who's a positional investor and not necessarily a trader, what are the banking stocks that look the best poised? Let's say somebody has a 6-month view. Would you recommend putting money into banking stocks? And if so, which are those?
Yeah, so very interesting question. But yes, we need to keep in mind that we can't put the entire March bonuses in the bank Nifty when it is making lower top, lower bottom.
Chandan, I qualify my question. It's not for a trader. A bank Nifty means somebody's a trader. Leave the bank Nifty out. Let's talk about individual names.
Okay, so I think it's good time because after a long time, such kind of corrective move is visible in the market. And I believe that if volatility cools down and Bank Nifty manages to hold the lower levels, selective banks will really do well. Yes, it would be very tough for trader to catch the bottom, but I believe if someone can accumulate, then selective counter can be kept on radar, especially looking at the SBI, one of the strongest bank. It failed because of the market pressure. Otherwise, you are really doing well. It was clearly making high top, high bottom on the monthly chart. But in this month, corrected by almost 20%. I believe 900, 950 is major support. With that support, I think positional 120 to 180 could be the key target on upside. Second, I think can also focus on counter like Indian Bank or Union Bank. So I'll focus on selective PSU bank if I have to pick 1 or 2 name in the banking counter. And apart from that, second name will be ICICI Bank. I believe 1150 is major support for this counter. With that, I think it can bounce towards 1250 to 1300 marks.
ICICI Bank, SBI Bank and select PSU banks. That was the choices of Chandan. But Kush, just to get it perspective, auto sales data is also coming out today. So a couple of numbers are out as well. Are we seeing some kind of a technical up move, or will you see a little bit of consolidation to continue for the auto names?
I think along with banking, one of the first sectors that could see a sharp rebound will actually be autos. Again, I don't want to sound like a broken record, so I'll keep the auto anchs out. I've mentioned enough and more about those in the last couple of weeks. So let's keep those out. But there were positive divergences on the auto index as well. So yes, when you get a stock like Mahindra & Mahindra at such attractive levels, it does make a case for a positional trade. So I would be constructive on Mahindra & Mahindra. TVS Motors, also turning a little constructive on Bajaj Auto at the current levels. But with the kind of selling pressure and the 200-day moving average, I want to see it move above the 9,000, 9,050 mark comfortably and then go long on them. So definitely constructive on auto names. Mahindra & Mahindra, TVS, definitely the first trades, and Bajaj Auto once a couple of key resistance levels are taken out.
And Parag bhai, your picks, if any, in the auto space or anything in the auto ancillary?
See, my entire call on auto depends on how Strait of Hormuz builds up and how crude oil prices actually start correcting. Right now, as we speak, it is still over 105 Brent. But of course, TVS Motors and Mahindra are great companies, and they have fallen nicely in.
Their export potential has also done really well.
Yeah. So TVS though is rocking actually, I would say, and Mahindra, of course, it will be a little bit dependent on monsoon also because of the tractor thing. So I would go with TVS Motors, but we have booked out our profits at a higher level. But definitely, it's a stock which you cannot avoid.
Now, pull up BHEL if we can, and let's see what that is doing in the pre-open session. Because while the stock has shown a bit of a bounce, there are two things out here. One, that the order inflow may pick up, but gas shortage may actually hinder execution. I was reading a JM Financial note in the morning. Long-term positive, short-term not so much. Parag Thakkar, what is your view on BHEL?
So long term definitely positive because thermal power is not going anywhere. We have enough coal and we have to import so much of gas and oil from the Strait of Hormuz, and now that is, so we are exposed to that risk. So definitely we'll take advantage of the coal which we have and we'll put more of thermal power plants, no doubt about it.
Right.
Apart from solar and wind, of course. So BHEL has a good future, but right now in near term there might be concerns around gas, which this note has highlighted. So I would say that I don't buy it for short term, but from long term perspective, I would go with entire coal chain as a buy, whether it is NTPC, NLC, India. Those are all good opportunities in my view.
Where are the setups looking good, Kush? Within these, NLC, NTPC, BHEL, you could actually even think of Coal India for that matter.
Yeah, so Coal India has been a rank outperformer in times of crisis like these. So definitely there is some traction there. I would be a little circumspect because if things ease out, then this might just perhaps begin to consolidate as it has done for the last so many years. Now, as far as the setup goes, BHEL is something that I would avoid. There's a range play, 245 on the downside, 265 on the upside. Bang in the middle of the range and multiple averages converging. So I would be a little skeptical on that. NLC India is something that is on the verge of breakout. So a sustained move above 275 will actually put it in a breakout trajectory, and then from there about 290, 300 plus levels also very much on the card. So NLC India is something that I will keep an eye out on. 260, 265, that's your stop loss.
Okay, so that's with regards to NLC. Chandan, quickly your top pick, next 10 seconds.
Yeah, so I'll focus on National Aluminium, looking for positive strengths in counter. It can rally towards 404, 420, and DMart could be other name as well.
Okay, Avenue Supermarts. Pull up that stock as well, by the way. Chandan Tapari is saying that could be his top idea too, alongside Nalco. Bring up DMart here if we can. And Kush Bora, very quick thoughts here. Is DMart a good buy at 4075?
It is. 4050 was in fact a resistance zone. This is a breakout, still a good buy.
Still a good buy. Watch out for Nalco, watch out for Avenue Supermart. Maybe Kush had another top call too. We'll get to it post-market open. But certainly one large cap name to watch out for is Avenue Supermarts today. Let's see how it does. Expect a bit of green on the screen and it's very, very welcome. This is a wonderful Wednesday. 550 points for the Nifty, 22845. Not a bad start, by the way. Banks are supporting and participating. I would reckon IT may not be doing as much, but I may be wrong here. Let's bring up Nifty IT2. Actually, no, 2.90. Maybe consumption is taking a bit of a backseat because the two heavyweight sectors are actually participating with gusto. Advanced decline looking solid. It doesn't seem like this is the day after Monday, if you will. And bring up the mid cap and the small cap indices very quickly before we get the heat map up. 2% for the small caps, mid caps to about 2.43. Let's get the heat map up on the screen. A sea of green, very little red, I presume. Only one red. ONGC, Brent oil prices have come off to 105. So that is what is helping the market sentiment. A lot of defensives are not doing too much, but Shriram Finance, as has become its pattern, on down days, it falls the most. On up days, it gains the most. 5.9% for that one. Trent, 5% higher. Bajaj Finance, 4% higher. There is BEL, 4% yet again. Larsen & Toubro will be one of the biggest beneficiaries of Middle Eastern tensions ease, is up about 4%. Adani Enterprises, Indigo, despite the ATF price hike, Interglobe Aviation is up 3.5% because crude has fallen and there's a new person at helm of affairs. I think crude is probably the bigger reason here. Adani Ports, SBI, M&M. Hiral, I can go on and on, right? I could recite the top 30 names and all of them are above 2%. This is a brilliant start, but look at Trent, Hiral, 6% higher, the top gainer now.
Yeah, is Trent, where is Trent taking its cues from is the question over here, right? So that's what we need to watch out for. But an interesting day of trade is what you're picking up so far. Let's just quickly pull up the sectoral heat map to understand if there is anything in the red or not. I mean, 100% nothing, but clearly the least amount of gains are coming in with it, which is 1.2% when you're talking about healthcare and pharma. But apart from that, your PSU bank index, which was the top losing sector in terms of Monday session, is the top gaining sector today. Your defense, auto, all of that has bounced back yet again. And auto again, your auto sales numbers that will be trickling in today's session. In terms of broader markets and just the breadth that we're opening up at, let's look at the mid cap and the small cap indices quickly. Mid cap, a 2.6% up move, and if you see in terms of the small cap index as well, almost a 3% up move coming in there. So your broader markets are pretty much in tandem with what your benchmarks are doing right now. And in terms of the advanced decline ratio, clearly that reversal has happened from Monday's session. And let's note, this is the first day of the April series as well. Sustainability is the key. And as Neeraj was pointing out, don't make your trade seeing just the opening rates. Wait for the first couple of hours to start taking positions as well, because you will have to look at the kind of settlements that happen in terms of sustainability. But very quickly, positive brokerage notes coming in from Nephrocare, Tenneco Clean, RateGain and Avenue Supermarts. These are the four counters which have been positive on the calls that have been given out by brokerages. So let's see what the reaction is. Nephrocare is up nearly 4%. Tenneco, again a 4.5% up move coming on that one. RateGain and Avenue Supermarts, these are the other two ones that we're watching out for. Smart moves there. The Maharashtra Ready Reckoner rates have remained unchanged. So all your Maharashtra-based real estate players from a Keystone, Lotus Developers, Marathon, Ajmera, all of them continue to remain in focus, and you're seeing that uptrend that's coming in with regards to real estate players. Heat wave days expected in May and June, and that's what the IMD has come out and said. All your cooling and summer related stocks are seeing a positive trend. Voltas, Blue Star, we already spoke to them on Monday, but KRN Heat, refrigerant chemicals, Amber are the ones we are watching. KRN Heat, interestingly, 7.5% up move. Page Digitex has seen an order win, so that stock is in focus as well. Samman Capital, where a new promoter is onboarded, so that stock is in focus, 3.5% up move there. Adoption of recycled PET is the new theme that we're talking about. So Ganesh Eco, Polyplex, Garware High Tech, a few of the other names which are seeing some smart moves. Jubilant Food on the back of the Domino's food franchisee that has been renewed is a stock which is in focus as well, along with Zaggle, where they have increased the guidance. So interesting names there. Apart from Jubilant, if you look at a Zaggle as well, they've given a guidance of almost 25 to 30% in terms of FY27. That stock is up 11% as we speak. And you have IRDA, Hudco and GRSC. They've come up with their business updates, which are pretty strong or decent, I would say, on the back of which all these counters also seeing an interesting move. Neeraj, I think I have the same statement to say that I can just keep going on and on with the stocks which are reacting with a positive terrain. But I would want to go to Sharad to see if there is anything which is negative on the screen, specifically from the broader markets.
On the broader markets front, it's very hard to actually find the reds. ONGC Oil India is there, which is minor in red. But I think Ganesha Ecosphere, if you like to point that out, that stock, Neeraj also pointed out, there's a beneficiary of PET recycling. That stock is up 8% as well. And the stock of the day, which we have been discussing, is Avenue Supermarts. Let's see what the move is happening. There was a good strong up move coming in. It's up 6%. That 4,200 levels it has already reached. Kush, interesting levels now.
But tell me, Sharad, how long have you been waiting to say there is so much green on the screen, difficult to find red, right? I mean,
it's been 2 sessions. I was on a holiday, but then I have come back and again it's in the green.
You should come back more often.
I think Sharad will say, which means that I'll go for a holiday and come back every alternate day.
Exactly, so you should come back more often. No, but like we discussed, the setup on DMart was looking fabulous. Near-term resistance is taken out. Now the stock is above the 200-day moving average. I think from
positional standpoint, there is still some steam left. Becomes a little difficult to call it a buy from a very near-term perspective, and by that I mean intraday or 5 days. With this kind of a move, which is which already had some legs before this session as well. So yes, from a 1 to 5 day perspective, risk-reward ratio not favorable, but from a medium to long-term perspective, setup is starting to turn positive. If you don't have it, you could still buy it, maybe on decline slightly closer to the 4100, 4075 mark.
Okay, well, I wonder, 4,200 is circa the price that Avenue Supermarts could have been any of the days in the last maybe 4 or 5 years. Heavy consolidation, right, in that stock. Parag, from an investment perspective, is Avenue Supermarts turning the corner, or does it not find a place in your top 10?
No. So basically Q3 onwards, I have been saying, or when the Q3 result came, I have been saying that the corners are turning for this company. And remember, this is a great company. Absolutely fantastic business model, and if you see the rush in the stores still, even after Eternals and Swiggies of the world, I'm amazed sometimes to see that are they giving goods for free? But still they are making 8% margin and on a very high turnover base of 75,000 crores. So I would say that I think from Q3 it was visible. I think it is accelerated in Q4.
Yeah, stunning move there. By the way, so keep an eye out for Avenue Supermarts. In the Interglobe Aviation should also come up. If indeed crude prices fall, the stock has been beaten down so badly that you would see it rise very well. This is circa about maybe 15 times earnings, or maybe slightly more if indeed earnings see some bit of a downtick in the first quarter, if you will. Chandan Tapare, I'm inclined to ask you about a trade on Interglobe Aviation, if you will. You may also, by the way, mention about Avenue Supermarts. It was your top call. It's 6% higher. Kush believes that now maybe for a short-term trade, the risk reward is not in favor. Your view may be different, by the way.
Yeah, so yes, DMart really managed to hold well. In fact, not today. In fact, the counter is finding buying interest from last couple of days, couple of weeks. I believe any small decline could be bought. Now we need to keep in mind that till it holds above 4,000, any decline of 40-50 points can be bought for the next leg of rally towards 4250 to 4400. And if I had to comment on Indigo, yes, the counter is trying to bottom out, but multiple hurdles are still intact because on the weekly chart, counter is still making lower top, lower bottom. So I'll closely watch the broader trading range between 3900 to 4300. So this is the goal post for me as of now. If it moves beyond 4300, then looking for a classical bottom out and the short covering trigger. But as of now, need to keep the support near 3900 if I have to play the range till 4300 marks.
4,300 marks. Okay, well, let's see if that is that is something that you would want to log in at all. By the way, Trent is the other beneficiary, right? I mean, we're talking about Avenue Supermarts doing so well. Look at Trent and look at the way that stock has moved 7% higher, in fact, much better than DMart. I wonder if it's the DMart effect. I presume that is it, or is it something else? But if all of you are wondering, and while you've heard a little bit from us about why DMart is doing what it is doing, Mahima tracks this very closely and joins us for the significance of what has caused this move in Avenue Supermarts. Mahima, take it away.
Right, so Neeraj, what's happened in the last 4 days is that they've constantly and repetitively announced their store additions. In the past 4 days, they've opened 23 stores. On 31st of March, they announced opening of 12 stores. On 30th, around 7 stores were opened. On 29th, around 3 stores, and on 28th, around 1 store. And this is been continuously the case in the past 1 month as well. For Q4 entirely, 58 new stores were opened, and FY26, if we take a look, they've opened around 86 stores, which is much more than the average of store opening that they do in every year, which is around 40 to 50 stores. Now, overall, brokerages have different views on this. Elara has said that strong store addition is completely a beat versus what they were estimating in FY26. And because of this, revenue growth potentially will move towards 18 to 20% in FY27 versus that of 16 to 17% earlier. So, significant uptick in terms of revenue growth also coming in from these store additions. As per Morgan Stanley, strong pace of store opening augurs good revenue growth in FY27. CLS has also said that
because of strong store opening as well as accelerating like for like, the sales momentum should pick up from here on. And not just that, they're also doing geographical expansion in cities where they're not present, and tier 2 and tier 3 cities is where they're focusing on, and this should accelerate their overall performance. So this is the overall view. Plus in the last 4 days, if you take a look at the stock as well, it's been resilient, up 7%, and today also seeing growth of around 5%. So almost up 12% in the past 5 days.
Wow. Yep. So retail is out there. Trent Avenue Supermarts. I wonder if some of the others would also participate, but these are the two notable ones, if you will, right? And really doing well. Chandan, before we thank you, what is, after seeing 10 minutes, is there a call on the index that you're giving right now, or is there a specific stock that you would want to buy at these levels?
Yeah, so again, it's very important for Nifty to hold 22,850 to 23,000 marks. So if market even consolidate here, that will be very positive. So I'll take the next trade-off setup if market manages to hold this certain criteria. Similarly, if I look at the bank Nifty, it witnessed a decent recovery from lower levels, but needs to hold beyond 52,000. So 23,000 in Nifty and 52,000 in bank Nifty is now immediate hurdle. Above that, I'll see stability. Otherwise, look for buy on decline, or will look for wait and watch. Now, looking at the few more trading ideas, already we discussed about DMart and other name. Now I have positive view on the capital market theme. And in fact, multiple times we recommended to go long on BSE, MCX, and I believe buy on decline could continue to hold. And these stocks are really holding well and remain resilient at the time of market decline. So BSE could be one name with support of 2800. It can head towards 2980. MCX looks good with support of 2420. It can head towards 2600. So apart from DMart and Nelco, I would look for buying in MCX and BSE for buy on dip, and also for positional point of view.
Chandan, so are all of these buy on dip, or is there something that you'd buy? I know you said Avenue Supermarts is buy on dip. Between Nalco and MCX, are you buying them at the current level or waiting for a dip?
Nelco, I'll go for buy on current level, but MCX, I'll use small dip to buy.
Okay, fine. Thank you so much for that, Chandan. And just so coincidental that Kush had all of these stocks on his radar as well. So Kush, I'm inclined to ask you, would you buy an MCX on a dip or right now? Would you buy a Nalco on a dip or right now? And in parallel, anything else that is on your radar?
Yeah, so from the calls that we discussed, Premier is not doing well, but Strides on the other hand is doing fabulously well. One stock that's somewhere in the middle of the range is ASK Automotives, and that is something that I remain still very constructive on. Like I said, breakout in the middle of crisis, good sign. So for now, second target of 467, up the stop loss to about 450. That remains still an open call. Now, as far as MCX and Nalco goes, I think MCX is something, and probably slightly different from what Chandan said. MCX is something that you can consider now, and Nalco perhaps on declines because it's already had a good run. MCX is now starting its run.
MCX is now starting its run. So effectively, you will buy MCX at the current level.
Yes, and for that, the stop loss will be around the 2350 mark.
Okay, Parabhai, very quickly, I know you've given your favorites. What about the commodity producers, aluminum companies, for example? Those prices have continued to rise, and there is a business case besides the geopolitical case. Are aluminum producers a good buy?
So Hindalco, I'll go with Hindalco in that space. And apart from that, on the commodity side, I think cement is looking very interesting. The price hikes have started, in my view, and because of the cost pressure, every company will take a price hike. So I think Ultratech, Remco, those kind of stuff. And apart from that, one space which I would like to highlight, which is doing well, is affordable housing finance. I think that is a very interesting space that the stocks have fallen, like Aadhar Housing or Home First, or that particular segment has done very well.
Okay, so what we'll do is, we'll talk about both cement and affordable housing tomorrow with Parag Thakkar in detail, because we have to call it a day right now. Parag Bhai, Kush, thank you so much for joining in. Let's take it across to Titagar Wagons, and Titagar Rail rather, sorry. Titagar Rail Systems, the erstwhile Titagar Wagons. It's received a letter of intent from JSW Port Logistics for a manufacture of 17T wagons. Umesh Chaudhary joins in to talk about this. Umesh, thanks so much for joining in. Starting with the importance of this order, for it could be various reasons, right? The company that has given you the order, the sector that you've gone into, the size of the order, albeit small. What is the importance of this?
I think it's important from many perspectives. First is this is for freight wagons, and freight wagon is the FRS segment or the freight rail segment that we have. As we had discussed earlier also, we have had a little lag in the ordering from the railways right now. We were expecting the larger tender to be out around this time. So the private orders coming in and filling up the order book is a great sign. Is a great sign for us. And of course, the nature of the customer itself, JSW is a very large customer and a very large potential customer. So from that perspective, also it is very significant for us.
Okay. Umesh, what is the ordering activity looking like for FY27? Do you reckon that there could be a slowdown in ordering activity in the immediate 3 to 6 months?
See, there are two ways of looking at it. One is particularly on the freight side. One is that the oil prices are at an all-time high or a significant high. And with that, the compelling argument or reason for moving more traffic from road to rail becomes even more powerful. So from that perspective, we believe that rail should really start gaining more market share than we would have always or ever expected. Just because of the economies, railway is 6 times more fuel efficient than road. So from that perspective, I believe that there should be a boost to the rail traffic. On the other side, there are going to be challenges in terms of the overall financial situation of the companies, of the country, of the world as such, because of the unprecedented conditions that are surrounding the world. But I would only say that at the end of the day, material will have to be moved, and railway does offer the most cost-effective, efficient solution to move the material. So we do not believe that there should be a big cut down on the railway movement per se. So the wagon requirement should come back.
Okay. But do you foresee, Umesh, for example, how do I say, a capex delay in some fashion because of tight finances of the government, and could that hurt?
So, in our case, what is happening is that there are two segments. In the passenger rail segment, we already have the orders which are there. In freight also, we have largely the orders. But what does happen is that the economy is so intertwined and industry is so intertwined. So if there are unprecedented supply chain blockages, then obviously production will get impacted. Like we did have some problems in March, both in terms of consumables and some raw material supplies getting disrupted. Price hike makes an impact. The customers' profitability, particularly when they are private sector customers, their economics make a difference because there is a possibility that they can defer taking delivery of material. But fortunately, we are in a segment which is almost, I would call it an essential goods, because freight is, and both passenger mobility is something that will not wait for economies to turn around. That has to continue. So keeping my fingers crossed that we should not get so badly impacted, apart from maybe some cost impacts that can happen or supply chain impacts that can happen. But from the customer perspective, I am hoping that we should not get too badly impacted.
Okay. One more question. Have you had to hike prices materially due to the cost push or the inflation in raw materials?
So steel prices have gone up steeply. We've seen sharp increase in steel prices of late. Most of our contracts are with price variation clauses. So we are able to pass on those, but there is always a time lag that happens, in terms of the actual increase in prices or actual movement in prices vis-a-vis the indexes. So there is a challenge that we see in that sometimes, but that's only a temporary one because of the movement of the graph.
So any major hit in margins in Q4, Umesh?
So again, as I said, most of our contracts, almost 95-97% of our contracts are with price variation clauses. So normally what happens is that within the quarter, it gets kind of catches up. Sometimes, if the increase or the decrease happens at the end of the quarter, maybe it just kind of carries on to the next quarter marginally. But over a period of within the quarter, it kind of averages out.
Okay. Thanks a lot for that, Umesh. All the best for the times ahead. So keep Titagar Rail in mind as well. A small order win, not terribly concerned about order inflow, believes that the higher fuel would naturally move the focus towards railways and therefore the ordering activity may not slow down. Let's wait and watch if that turns out to be true. Now, more corporate voices, and one of the biggest ones, if not the biggest one, Mr. Gautam Adani, chairman of the Adani Group, he spoke on the occasion of the gateway to growth and the port side and said that ports are not merely gateways for trade. They are gateways to national confidence, competitiveness and destiny. I'm grateful, I'm quoting him, that I'm grateful to our customers, partners and every member of the Adani Port and SEZ family whose dedication and belief have made this milestone possible. I also extend my sincere appreciation to the central and state governments whose policy and commitment to infrastructure have helped create the foundation on which APSEZ has grown. APSEZ crossing the 500 million tons is a signal of our decades-long confidence in the India growth story. Over the years, he says we've built not just ports, but an unparalleled interconnected transport and logistic platform spanning various parameters. And the best of India is ahead of her. Well, this I'm sure nobody doubts. The question only is, from a market's perspective, is it a capital-intensive story that you bet on, or do you bet on consumption? And Hiral, the great words coming in about the port story, because frankly, for a port to handle the kind of traffic that it handles in the current times and to do so efficiently is very interesting. And if you see the recent movements as well, if there's a business that's kind of held its own on the bourses, you could argue that Adani Ports is one of them.
It is one of them, and one in terms of the ambition as well. You're talking about a 1 billion ton capacity of cargo in 2030, and that's what Adani Ports is moving towards, and that's what I think a lot of your analysts and brokerage houses are betting big on, because they've reiterated their target of almost 850 million metric ton of domestic and 150 million metric ton of international cargo volumes. That's the kind of divide you're talking about when you see a 2030 kind of number. So that is positive commentary coming in with regards to where Adani Ports go. Let's just pull up the counter and see what that stock is doing in trade as we speak. At the day's highest levels with gains of nearly 4.5% coming in there. Along with this, if you just pull up Adani Energy as well, that counter also will be in focus because they have now delivered on the 5 gigawatt commitment in FY26, and this would actually mark a global high for the greenfield expansion. They've achieved a new annual capacity of almost 5 gigawatt and the highest by any company globally in a single year, excluding China. So both of these counters are in focus in today's session. We will get you detailed discussion around these as well. But moving on, Samman Capital has become a part of the IHC group following a preferential allotment of equity shares and warrants to IHC through Avenir. Now, before we listen into the management, let's take Puneet, who joins us with all the key details. Puneet, good morning. What are the key highlights?
Well, thank you for that. The transaction valued at almost 8,850 odd crores is one of the bigger ones in the NBFC space, especially in the upper layer NBFCs. Now, they've acquired roughly 41% is what IHC Group through Avenir, which is one of its entities through which they put out this particular transaction. This has also put out a mandatory open offer of almost 26% because of the RBI norms, and hence at 139 rupees is what the open offer has started off. Now, the current market price is about that, as you can see, but this will be structured in 2 layers. The first initial transaction will be almost 5,600 odd crores, and the second one in 3,100 odd crores over the next 18 months. But a lot more perspective from the management because they want to get into the retail focused business a lot compared to a mortgage entity largely in the current state of affairs. So those will be some of the key talking points from this conversation.
Okay. In fact, my colleague Nisha spoke to Gagan Banga. Here out a slice of that conversation.
What does this large capital infusion, Gagan, which has been a trend now in the financial services sector in India, what does this really mean for your competitive edge and for your growth?
Good morning. Thank you for having me on your channel. And yeah, on your point that it has become a trend, it's actually a global trend that in financial services, the big are getting bigger. There is significant consolidation which is happening, which I believe is a bigger de-risking sort of an exercise which is going on. So in that context, it was having fought an existential crisis which came between 2018 and 23, and then subsequently having stabilized the company through 24. It was almost imperative that for the company to be able to pursue a very how should I say, steadily compounding growth journey from here. We needed strong parentage. And one could not have imagined getting a better promoter than IHC, which not only is infusing $1 billion, but given just their size and global reach, would strongly facilitate this entire growth journey from here.
All right. When you talk about, April 7th is one of the board meetings that is being conducted at Samman Capital. And on the agenda is the buyback of dollar-denominated bonds. Can you give us more details on that? And does this capital infusion, Gagan, also help you refinance your key raw material of funding at a lower cost then?
So over the course of the next 12 to 18 months, one of the primary goals of the company is to expand margins by a little over 200 basis points through cost of funds reductions. I see a positive trajectory on our credit ratings. And as a first step, we would use the liquidity available with us and the overall trajectory of our growth of our credit ratings to also engage with the market to see whether we don't need to wait for the next 12 to 18 months and we can perhaps buy some of our higher cost debt almost instantly. So that's the endeavor of this tender program that we hope to get approved on the 7th of April. We've also announced a similar program domestically to buy back some of our NCDs. So the whole thought is that over the next 12 to 18 months, most certainly the flow cost of funds would reduce. What can management do to also reduce the stock cost of funds?
All right, Gagan, that gives a lot of clarity about the future as well. 200 basis points improvement on the margin in 12 to 18 months is a target that you are really setting forth. From April 7th, board decision of really buying back the dollar-denominated bonds, how much of the immediate impact will come in on this 200 basis points target?
Look, these are small bond issuances that we have done. There are further ECB guideline restrictions on how much and what series can we buy and so on. But this is just one of the several initiatives. There's a larger bond program which we run domestically. There is engagement with our banks, which have been tremendously supportive through the years where the firm was having its own issues. We've also managed India's largest deleveraging exercise very successfully without causing pain to anyone, paying on or ahead of time close to about 1.3 lakh crores. So given that there is an overall appreciation on the credit, now with the parentage, I think the 200 basis points reduction should happen very, very quickly.
That's right. A strong parentage will also help you in the funding requirements as well. And of course, the funding that has really come in. But Gagan, how critical is it as part of the overall transaction for IHC to go above the 51 mark and above 60 mark in terms of the shareholding in the company to have more skin in the game and the controlling position as well? By way of the open offer, because the open offer is at 139 rupees per share and the stock price has moved above that. So are you expecting good tendering, and how critical is good tendering for the new buyers to come in?
So the Reserve Bank of India and the other regulatory approvals which have come are giving control to IHC. That control has really nothing to do with the shareholding percentage. It's just a notion that for control you need 51%. This is a listed company. in which control can be had even with 20-odd%.
No, Gagan, I understand. The voting right remains the same, and that has happened in many other transactions also in the other NBFCs. But the new buyers or the foreign investors want more skin in the game as the company is set to grow with their given capital. So I just want to understand in terms of the negotiations, will IHC be comfortable if the tendering is lower, if the stock price is higher than the open offer? I just want to understand that bit.
The comfort that IHC has, or rather the aspirations that IHC has around both Samman and the country, is demonstrated in the fact that despite UAE being in the middle of a war zone, they've turned around the actual allotment of the shares and the transmission of the money within 3 days of the approval coming from Reserve Bank and within 1 day of the approval coming from SEBI. So that just shows, is a testimony of their commitment. They are looking at this business long term. My strong advice to them has been work with the management to see how much more money can come into the company or its affiliates to pursue opportunity. And at 41%, they have more than adequate control. So I don't know, it is for the market to decide whether they want to tender shares in the open offer or not. And statutorily, if they do, they will take it and be happy about it. But as management, I would rather that it is company and its affiliates. I would much rather ask for a larger allocation to a credit fund that I hope to set up shortly. That's the engagement that one would want to do with them.
All right, Gagan. And finally, my last question, and very quickly, you have targets of achieving better ROA, ROE, and also the branch network to expand and also get into from mortgage financing to diversified NBFC status. How much of that is really accounted for or is being targeted for this financial year as we start a new financial year today, and the first tranche is already with you? Give us a target of this financial year, how much of that is likely to get achieved, and without, and also besides refinancing of expensive loans, what else can really add to the growth levers in this very year itself?
So in this very year, the flow of funds, the incremental borrowings that we do would be at a cost which is at least 200 to 250 basis points lower to where we were borrowing till last week. That is an immediate impact which one would see. The second is our disbursements would probably double and would be clocking around 35,000 crores this year, of which 30-odd thousand crores would be in the more traditional mortgage products. We should do 5,000 crores of disbursals in products which we are going to introduce through the course of the year. All of this is important, but the more important thing is that this is not something knee-jerk for 1 year, we grow and then again we have to slow down. The way that we have to calibrate our disbursals and our expansion across segments is more top-down. There is a macro trend which we are catching of low to mid-income being the ever-expanding segment in India. Several loan products would be added, control functions would be added through tech, and we will do what we will do. So we've given ourselves 3 years to get to the targets that we've articulated of getting to about 1.3 lakh crores and covering about 500 cities through 1,500 branches.
And finally, Gagan, is the earlier, vintage issues that were attached to the company Indiabulls Housing Finance with respect to frauds and even the recent Supreme Court indications, is that behind you now with the new parentage coming in?
The new parentage does allow us to do a break from the past. It is the most significant break from the past that we could do. It's a process of a fresh restart, which was multi-staged. Court cases, etc., would go on. The company has put out its case. The agencies have said that they've looked at the company many, many times over, 46 times to be precise, and have found nothing wrong with the company. Whatever else the investigative agencies wish to pursue, they will pursue. The company would continue to support. We are a law-abiding citizen. But beyond that, we have nothing much to do with that.
All right, that's Samman Capital. So keep that at the back of your mind. By the way, a lot of stocks are very, very active today. Interglobe Aviation is top of the pile now amongst the FNO names. In addition to what Avenue Supermarts is doing, Trent is doing, and a few others is doing. 8.27% simply because some reports suggest that maybe, just maybe, the ATF price hike was not the very high number that was spoken about, but a more moderate number, Hiral.
Correct. And that's what we need to just address, the clarification that has come in from IOC as well when you talk about the ATF price hike. We are talking about a 8.5% hike and not a 115% hike that was intimated earlier. This is a clarification that IOC has made with the changes and the rectifications that have come in. The hike in ATF price is 8.5% and not 115%. I mean, this is ongoing, I think, right?
But Hiral, but this is just absurd that a price hike of this nature is let out in a mistaken fashion. These are active markets. It's an actively traded business.
Big companies. I mean, I don't know what to say, but it is shocking to see the least. And I think that's the reason why you've not seen that negative reaction. Because, you know, when we're talking about it as well, that in spite of crude going down, with the new management coming in, but this is one of the biggest impacting aspects when you talk about ATF prices, right? When you talk about input costs. And when the stock was not reacting to this, I think the management did know that it's not 115%, it's 8.5%.
Somebody in the street knew, I mean, independent of the management. The point being that it is now trading at the high point of the day, and with reason, of course. So keep that in mind. Okay, what has the recent spate of market meltdown done to the private markets? Because so many investors are invested in the private markets. So great time to get in somebody who's out there as an institution in the private markets in a meaningful way. And the MD and CEO of Motilal Oswal Private Wealth, Ashish Shankar, joins in on the show today. Ashish, it's been a long time. Thank you so much for taking the time out and being with us today.
Pleasure, Neeraj. Happy to be with you.
Yep. Thank you so much, Ashish. I'm sure private markets have seen a slowdown both in activity and in terms of transactions. How sharp has that been? And are the reasons predominantly the risk-off mood, or is there something else too?
I think, Neeraj, more and more family offices are actually getting organized in their private market investing. I mean, we saw a rampant spate of activity about a couple of years back when markets were buoyant. And slowly the family offices are getting more disciplined about their allocations, where they are going either through a fund route and then going through the co-investment route once they have access to the deals of a particular private equity fund. There has definitely been a slowdown in the recent past, and the reason for that is, typically why would one go to private markets? And they would go to private markets because they are getting themes that are not available in the public market. Point number one. Point number two, private markets offer you a valuation advantage. I mean, typically these deals come at a slight discount to listed markets. And at the same time, you see higher growth because these are emerging sectors. Now, with valuations correcting in the public markets, the private markets take a little longer for the valuations to correct. They're not listed, and hence there is no price tick on a daily basis. So that's one of the reasons for a little bit of a slowdown, and investors are also in a wait and watch mode to see how this entire situation pans out.
Got it. Okay, Ashish, so is the net outcome of this that private markets have been transactions and interest is relatively insulated from the public market meltdown? Or are you saying that yes, this has happened, that even those have slowed down, but they will bounce back as the public markets do, simply because the interest levels are now fairly high? What is it that you're trying to say?
So it's not necessarily insulated, Neeraj. I mean, the similar emotions go on even when you're investing in private markets, and obviously public markets are the barometer for valuations again in private markets. However, private markets have a slightly longer cycle. I would say in no way that the attraction of private markets is over, but I think these cycles in private markets are longer. So, for example, if let's say as a fund, I had made a commitment maybe 3-4 months back. Now, on the ground situation has changed, but it takes about 3 to 4 months for me to go through the due diligence of that particular asset. But I still have to honor the commitment that I've made. So, private markets have slightly longer cycles in terms of investing as well as exit. So, whatever you're seeing right now is just a temporary blip. I mean, you will see more and more activity in the private markets as things settle down.
Ashish, good morning. Hiral on this side. Let's link the private markets to what's happening on the private credit side as well, because in India, from what I was reading, we are growing at 35%, and this was data back in 2024. Returns of around 12 to 18% is what we've seen from there on. Now, one, if you have to look at what's happening to private credit in global markets where redemption is becoming a pressure point, how are you seeing that contagion impact coming to Indian markets as well, if you have to link both the sides?
So if you look at private credit, I mean, it's been growing anywhere between 30 to 35% in India. And we are seeing more and more allocations from global investors as well as family offices in India towards private credit, because it offers a fairly attractive asset in the region of 12 to 18%. See, what's happening globally is very different. And if you see a lot of these stress points that are emerging globally in private credit are coming in the tech sector. However, in India, given the tight regulations by the central banker for banks, a lot of the credit which is opportunistic or required from time to time for corporates or probably at the promoter holdco cannot be made available by banks. And that is the kind of credit market that the private credit funds are catering to. So I would not link the global stress to what's happening in India. In fact, we've seen very, very robust inflows into the private credit ecosystem. I mean, even our house just did a first close of our private equity credit fund at 1,700 crores, and we could raise this money in barely 1.5 months. So it offers a fairly attractive opportunity for domestic investors to get higher yields with very strong governance structures and underwriting.
Ashish, one final question therefore, at least from my end, right? Which sectors will see the highest interest, you reckon, are seeing and will see the highest interest over the course of the next 9 months? In the public markets, as you would also know, but just for saying for the benefit of our viewers, there has been a bit of a change, right? Energy and energy transition has come in, but even energy exploration has now become a real theme. Data centers, a very real theme. Defense has actually gotten activated even more interest, right? You would see similar trends on the private side, or is there something else that gets added?
So in the on the private side, see, look, there are 3 asset classes on the private side. You have private equity, you have private credit,
right,
and let's say you have real assets. Okay. Now, in private equity, a lot of the emerging sectors, see, think of it this way. I mean, India is going from a $4 trillion economy to a $10 trillion economy, let's say, in the next 10 years. Now, a lot of the sectors which are actually growing very, very fast are not necessarily there in the listed space. And I'll give you 3 themes which are going to see a lot of capital movement within the private space. One is manufacturing. When I say manufacturing, it could be contract manufacturing, it could be defense, it could be infrastructure. All 3 areas will see a lot of private market investment. Healthcare as a sector, I mean, you will see far more spent towards healthcare per capita. You will see a lot of investments flowing towards the healthcare sector. And lastly, but not the least, consumer tech. And when I say consumer tech, the emerging area is also AI. I mean, right now, a lot of these companies are smaller and they're getting funded by, let's say, seed or Series A kind of funds. But eventually, as they grow bigger, you will also see a lot of private equity participation in these kind of themes. So a lot of the emerging themes which promise high growth and are going to build the next round of companies as India goes from $4 to $10 trillion will attract a lot of capital. The other thing is real assets, which includes, let's say, data centers, yield-bearing assets within commercial real estate or infra pre-REIT kind of allocations. You will see a lot of capital flowing in there as well. And we just spoke about private credit. That's another market which is very nascent in India. And I see it growing at 30-35% for the foreseeable future.
Right. That's an interesting pocket that you're highlighting, but thank you so much, Ashish, for joining in. Always a pleasure to speak to you. Your commercial real estate spaces where a lot of other bets coming in as well when you talk from a REITs and InvITs perspective right now. But moving on, Adani Green Energy, they've delivered 5 gigawatts of capacity in FY26, setting a global greenfield expansion record outside China. Let me head across to my colleague Mahima, who's standing by to tell us more in terms of the updates and what stands out. Mahima, over to you.
Right, Hiral. So as you rightly mentioned, Adani Green Energy has delivered on the 5 gigawatt commitment that they had made for FY26. This marks basically, their expansion and one of the highest globally as well, excluding China. This means that annual capacity has reached 5 gigawatt plus, and the overall operational portfolio rises to 19.3 gigawatt, and this reinforces their market leadership in the renewable sector. This scale is, of course, anchored by rapid execution that is happening in Khavda, Gujarat. Now, what they're saying is that out of the 30 gigawatt planned by 2029 at Khavda, the company has already installed cumulative capacity of 9.4 gigawatt. The new capacity addition that has taken place is done around 3.4 gigawatt in solar, 0.7 gigawatt in wind, and 1 gigawatt in wind solar hybrid capacity. With regards to the battery energy storage system, the company has said that they've also bought an initial 1376 megawatt hours of battery energy storage system at Khavda, and this is one of the world's largest single location deployments. The capacity was commissioned within 8 months of starting work at the site, supporting grid stability as well as renewable integration. So this is the overall update coming in from Adani Green.
Interesting. Okay, thanks for that, Mahima. Adani Ports has also crossed a major cargo milestone of 500 million tons, as we told you just a little while earlier. Puneet Johnson with details of that. And Puneet, what are the targets that the company is setting sail towards?
Well, thank you for that. As you rightly mentioned, a 500 million ton cargo milestone is what Adani Ports has now crossed through. You read through, Neeraj, about the statement from Chairperson Gautam Adani also talking about this achievement. Now, company operates roughly 19 ports as well as terminals, and this milestone is going on with the company's long-term ambition also in terms of increasing the port India as a whole port volumes, and remains firmly committed at this point of time and on course for the next major ambition and the target of 1 billion tons of cargo by almost 2030. Now, this has been split between 850 million tons of roughly domestic and 150 million tons of international cargo volumes by the same time frame of 2030 as well. Also, when you look at operates roughly 150 ports across almost 11,000 kilometers of India's coastline at this point of time, both on the east and the west coast. And these 4 international ports are strategic for the east-west global corridor as well, which will target almost 150 million tons of cargo by 2030 as well. Within logistics also, it's almost covering 95% of India's hinterland within the connectivity with almost 12 multi-modal logistics parks, as well as leading that with the marine space as well, which is a newer vertical for the company, connecting international waters with global ports as well. So these are some of the key updates. On to the next 500 million target by 2030 is what the company is targeting.
Okay, thank you so much, Puneet, for that. In fact, that's very, you're talking about really strong numbers that are coming in there. But let's quickly just address what Gautam Adani had to say as well in terms of the port business. He said that ports are not merely gateways for trade, and they are actually gateways to national confidence, competitiveness and destiny. And he's grateful to his customers, partners and every member of the APSEZ family whose dedication and belief have made this milestone possible. I also extend my sincere appreciation to the central and state governments whose policy and commitment to infrastructure have helped create the foundation on which APSEZ has grown. So that's the word coming in from Gautam Adani, chairman of Adani Group as well. But we'll quickly slip into a short break. On the other side, lots more lined up. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go.
Welcome back to India Market Open on NDTV Profit. Now, the discussion is with regards to what's happening on the geopolitical side with the updates that have come in. We're talking about a new timeline. Now, whether that timeline holds water or not is anyone's guess, but clearly the aim is to narrow nuclear prevention. Let's get in Professor Dr. Kivraj Jangid, Professor and Director at Jindal Center for Israel Studies. Professor Kivraj, my question coming to you is, in fact, a very good morning first of all. My question is, how are you looking at the developments from the last time that we spoke to now? And the latest being that we are ready to negotiate, we are ready to sit on the table if Iran comes to the table. And two, another 3 to 4 weeks is what Trump is watching out for.
Thank you, Hiral. The war stands at a very turning point. I think it shows us the limits of the military power, but also the success of the military power. Success of the military power, as you said, is to prevent nuclear Iran. Now, nuclearization is certainly a legit issue for many nation states. India got nuclear much against the American wishes and sanctions, but Iran got a much bigger fight against America. It's not only about regional sovereign autonomy. Iran also has declared America as its arch enemy, and it is an ideological war that Iran has been engaged with America. So America cannot, let's say, from their point of view, have Iran a nuclear power when Iran doesn't let go the ideological fight against the West, and particularly America and Israel. The second thing that I think is important is the restraint that Donald Trump has shown. Now, usually he's not a person who speaks the language of the restraint, but if we look at his actions in the last 10 days, from the deadline that he gave about opening of the Hormuz, he has now said, and this is interesting what he has said, that I actually can make a deal or walk out of this war without even assuring the opening of the Hormuz. He's being little more narrow in his imagination, meaning he doesn't think closing of the Hormuz will hurt American energy market as much as it is hurting the Asian economies. So he thinks, why should he actually insist in opening of the Hormuz when he doesn't even have the European powers joining him? Yesterday, France denied use of the airspace, and he's very pissed, and he has made another strategic move to let the rest of the world know that they will have to deal with Iran on their own. He might just end this war without making a deal. Now, without making a deal is also very important strategy for him. We understand that Iran has won this war politically in sustaining the regime as well as showing no backing off. Now, he is in a catch-22 situation. He can continue and show Iran, hard, spot. But he's smart in the sense that he doesn't have to humiliate Iran further. And he can say, well, fair enough, you don't want to open the Hormuz, America will be saved, because America is very energy self-reliant.
Yeah.
And if you look at the last, month, it's the countries like India that has suffered, but not America.
Sure. Professor Kviraj, good morning, Neeraj here. So, does that make US get out of it unscathed and sounding victorious, part one? Part two, what about a third actor in the act, which is Israel? Because they've amped up the attacks on Lebanon and they have not even mentioned anything to the effect of reconciliation or ending the conflict. What happens there?
Well, on the America side, I think I understand Donald Trump, even if I don't appreciate what he all does. But it's interesting that he's making a victory out by saying, I don't really want to fight for the opening of the Hormuz. And that would be a very fascinating move for the rest of the world to deal with him, because the rest of the world doesn't want to join the war with him. And I think it's one of the smartest things that he could come up with in the last 10 days. When it comes to Israel, I think Israel is in a much bigger crisis. Militarily, it is a success for Israel to carry such a strike on Iran, to destroy its military capabilities by, let's say, some years. But the fact that Hezbollah has joined the war has made Israel's position very precarious. Because a year back, assassination of Hassan Nasrallah and a deal with Lebanon was that Hezbollah will not be left armed, and let alone that Hezbollah will pick up another fight with Israel. But Hezbollah has picked up this fight with Israel because Hezbollah has joined the Iranian resilience against this attack. So once Donald Trump declares this war is over, Israel is going to live much more, let's say, violently for coming months. Because which way Benjamin Netanyahu will say the war is over for him, unless and until Hezbollah will stop shooting missiles at Israel. So I think that's why Netanyahu hasn't said anything much, because he's also in a way trying to understand the compulsions of Donald Trump, and he knows that Donald Trump will not carry this war further.
Okay. Professor Kviraj, we unfortunately today slightly packed, so we'll have to wrap it up here today. I would have loved to do at least 2 questions more, but we are running very short on time. So we'll have to call it a day here. But for these 2 pieces of insights, thank you so much for that. Let's see if it's indeed a smart thing done by Donald Trump and we see some bit of an end to this conflict. But really appreciate your time and those insights. Well, interesting thoughts there. And I hope those are helpful. I'm sure the next ones also will be helpful, because we got an ACE fund manager, Rahul Veera, fund manager of equity investments at Nippon India AIF Johnson right now on the show. Rahul, great having you. Thanks so much for taking the time out. And, we were having a macro conversation just before we got you. I would love to understand, how are you thinking about the macro in terms of how will it have an impact on the micro? Is the macro now turning favorable enough at the margin for you to take a bottom-up call of deploying fresh capital to work?
Sure. Hi, good morning, Neeraj, and wish everyone a very happy fiscal year ahead, you and your audience. See, in our first top-down approach, if we see the major impact to India at this point of time is largely the energy crisis that we are going through. Almost of our 53 million metric ton of LPG imports, of which 20 million ton comes directly from the Qatar side of it. Qatar itself has a 80 million ton of capacity, of which almost 40% of that is going offline. It will take a year or two to come in. Now, the countries that are getting impacted are Kuwait, India, Bangladesh, Pakistan, all of these eastern ones. India cannot replace the LPG that easily. This crisis, more or less, is going to further percolate into micro, as we mentioned. Now, the moment we try to dissect the micro, just for example, NSE 500 companies, the profitability is 15 lakh crores cumulative for all companies together, for NSE 500 companies. Your banking itself is 6 lakh crores. Then IT close to 2 lakh crores, and rest of the other small caps and mid caps composite the other 7 lakh crores. Here, the major impact, if we dissect it further, 1.5 lakh crore of manufacturing profits, specifically on the higher capex businesses like metals, chemicals, is going to continue. So almost 50 to 70,000 crores of profit impact can be considered at this point of time. This is the way I've tried to connect the micro and the macros together. Now, 50 to 70,000 crores of PAT is approximately 5% of EPS cut for the NSE 500 companies, which the market has already reacted to in the month of March itself, right? So in terms of valuation correction, it's not happened, but in terms of market correction or time correction, market has already priced in the current till date impact of the war on Indian markets. So we believe from your bottom up picking will help. Be selective between services and manufacturing, slightly tilt towards a little bit more of the services side.
Okay.
Again, sectors go on the manufacturing side, go with pharma or metals. They'll be slightly better.
Okay, and we'll come to the sectors in a bit, Rahul, but just trying to understand, history may not repeat, but it rhymes often, right? Is there a comparison of the valuation damage that has happened right now to any other cycle in the past? Let's say the previous decade had multiple black swans, if I can call them that, right? So there too, the valuation at various point of times would have gotten crunched. Is there a comparison that you guys have been able to do about what's happened now versus what may have happened then?
Sure. So very interesting question, Neeraj. This is exactly that we have been working on. What we dissected, we picked up the data from 2011 to 2019, like the literally pre-COVID cycle. It had a macro impact in 2013, where we considered India as one of the fragile fives, where a very sharp currency depreciation and current account deficit was there. Plus there was GST, plus there was a demon impact across the whole cycle. So 2011 to 2019 cycle has given up some very, very interesting data points. So out of the 800 companies by market cap in the past 16 years, we tried to see which are the companies which are following lower in terms of valuations on a forward basis, on a FY28 basis versus the previous cycle, 2011 to 2019. So there are 66 companies out of the 800 companies which are trading below their previous cycle. Now here, out of 66 companies, majority of them are coming from the banking side, the IT sector and the FMCG sector. Now what we believe, IT, understandably the AI impact is there, hence the current valuations are trading below the previous cycle, even the growth cycle is not there. Again, on the FMCG cycle, we saw what had happened to larger names in the paints and the FMCG sector in that cycle, where margin expansion was there. But in this cycle, the valuations are much cheaper, but volume growth will not be there. Hence, banking turns out to be a very clear winner. In fact, in that cycle, we saw a major NPA cycle during those 10 years. As of now, the NPA cycle is not there, but the valuations are cheaper than that cycle. So we believe banking is a very clear-cut winner for the next couple of years.
Well, that's an interesting point that you make in terms of the analogy that you're picking up there. This is Hiral on this side. Good morning. So let's look at the approach that you have from here on. Now, what has happened in the month of March itself, if you look at the FIs, we've seen an outflow of close to little over 1 lakh crores already. Now, does that actually force you to move to a defensive shift when it comes to your portfolio then?
No, see, frankly speaking, these technical factors, whether SIPs will work on the DI side where FI outflows happen, very difficult to answer those questions. For them, it's always going to be India as one of the asset allocation from a global standpoint of view, where they might have a view, they might not have a view. From our standpoint of view, it's clear that we need to have a bottom-up approach. Valuations should be the key parameter, balance sheet should be the key parameter. In our view, markets are giving a very, very lucrative opportunity from a bottom-up standpoint of view. A lot of companies are available in a single-digit PE as of now, if we have a 2 to 3 year kind of a framework. So we continue to allocate incremental capital towards small caps and mid caps from here on.
So small caps and mid caps is what you're looking at from here on. In past conversations as well, you have been bullish when it comes to energy and upstream companies as well. With what's happening right now, how would you then combine the broader market perspective with your upstream and energy companies?
See, upstream again, it's going to be a call on the crude. We believe this is going to be a temporary impact. 3 to 6 months of $100-$120 is manageable, but it can provide some kind of a benefit to Indian companies like on the upstream side. But we've seen that government intervention will come where any kind of excess profits will be taken away in terms of taxes. Hence, we do not want to allocate anything to the energy sector at this point of time. We remain on the sidelines, but there are a lot of ancillaries like offshore drilling companies. There can be some decent opportunity in these other names.
Oh.
Okay. Rahul, just one small clarity that I wanted. You mentioned that compared to the previous cycle and the current cycle, banking, IT and FMCG are the sectors where the valuations are materially bombed out. But that sector doesn't have too many small caps and mid caps, right? And you are in favor of investing in small caps and mid caps. So how do you combine these two? Do you look at NBFCs? Do you look at small PSU banks, small private banks? How do you kind of marry these two?
Right. So it's going to be small private banks. That is going to be our first preference. Since the NPS cycle is not there, the comfort is much higher on these smaller names. Even large cap have corrected, but we prefer to have the slightly beta in the portfolio and we prefer to go with smaller private banks. Other than that, all the other sectors, small caps are preferring much more better alternatives now versus the large caps.
Rahul, some news flow and you know, the last 2 days, Avenue Supermarts, for example, added 18 stores. That has gotten that entire retail space very, very activated. Now, I know you look at cycles fairly strongly, right? Avenue Supermarts for the last 4 or 5 years hasn't done anything in terms of shareholder returns after having a great listing. Is this a classic case of a large cap consolidating and waiting for a breakout? And can a breakout come into a retail business? Because even Trent, for example, went up all the way to 7,500, etc., and then came off. I'm not asking you to comment on individual names, but I'm just asking that what happens to the large cap retailers at the current context? Because the last 12, 18 months, they have not created wealth. Are they consolidating, and is the consolidation done?
Yes, definitely. See, the entry point of valuation for these names a couple of months, couple of quarters back was extremely expensive.
Right.
They were trading at almost 60, 70 times during those times. As of now, the valuation comfort is definitely there, but we'll have to be in a cautious mode. See, for them, larger names like these, right, where margin becomes very critical. Your QCR business, all the other optionalities are so high, which are impacting the businesses today. We've seen some improvement from the bottom, from where they were impacted. They are slightly improving, but whether they will be a large wealth creator, we'll have to wait and watch. Currently, we are preferring to be on the sidelines.
And with the way, Rahul, the rupee has been moving, we've surpassed and breached that 95 per dollar mark as well. Does that force you to get a shift in terms of strategy when it comes to positions in automotive, in paints, a lot of sectors where you have positions? So how do you look at the rupee movement versus shifts in the portfolio?
So rupee depreciation will help some of these sectors as well. For example, pharma. Right, IT, it's difficult to take a call. There'll be a defensive call at this point of time. Valuations are very cheap, but again, we'll not like to participate in the IT names at this point of time. Pharma and pharma exporters, again, small cap and large cap, both sides. There are lucrative opportunities in the pharma space for sure. So rupee, from the rupee perspective, pharma exporters will be one of the key beneficiaries at this point of time.
Just a follow-up there, because pharma seems to be coming in most conversations. Where within this pharma space are you more constructive? Is it the generic exporters? Is it the CDMOs? Is it the API players? What is looking strong?
As of now, what has happened is because of the logistical issue and the raw material issue, we are seeing a lot of API prices on the domestic end have increased very sharply. So some of the very small cap or mid cap names would see very strong basically benefits because of the raw material prices on the one side. The other impact will be negative, or the gross margin impact for the larger guys. So some of the generic or API players will be the key beneficiaries in this cycle. Again, small cap, mid cap names will offer some of these names in terms of the exports plus higher API prices for some of the companies. Just to give you a perspective, like paracetamol or para-aminophenol that we talk about, almost the prices were 400 rupees. Today it's at 600, 650. Now, if you go to paracetamol or a PAP, that is paraminophenol manufacturers, there'll be some key manufacturers there which will have beneficiary in this cycle.
Pharma is the space, in fact, Neeraj and I were just talking about that a lot of fund managers, CIOs are of the opinion that probably pharma is going to be the new IT sector in 2026. Let's see if that holds water. But a quick question, cement and infrastructure, Rahul, your view, because price hikes are probably on the cards.
Right. See, 20% of the cost on an EBITDA per ton basis directly comes from the fuel side of it. That is petcoke or any other fuel sources that the companies are using. As of now, it's a slightly negative for them in the near term. They'll have to go for price hikes. But given the overall structural cycle at 6 to 7% kind of a volume growth for most of these companies, again, consolidation is happening in the sector as well. We believe here near-term impact may be there because of cost per ton basis increasing slightly higher, but any price rise will be positive. Here we will be selective in terms of mid cap and small cap. Again, large cap names are in a over competitive zone. We've seen them at best like a compounder at best, but some of the small caps, mid caps offer better valuations at this point of time.
Got it. Okay. Well, here's a fund manager talking about looking at small caps and mid caps at the current point of time. Extra beta possible. Rahul Veera, thank you so much for taking the time out and being with us today.
Thank you.
Well, the markets are on some steroids this morning, which is actually a good sign. We haven't been used to this green on the screen. Hopefully it stays for the rest of the day, at least if not longer. 2% higher is not a bad outcome.
Not a bad outcome, but it's not stayed to the levels we started off. There is some mild cooling off that has come in. I think, and the broader market perspective is going to be key again.
Yeah, let's see how it turns out. But for now, from Hiral, me and the team that put India Market Open together, thanks so much for tuning in. Stay tuned though. Up next is Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language, and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life. Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's sustainability mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu?
Hello and welcome. You're watching NDTV Profit and this is Ask Profit. I'm Mahima Vachajani and with me is Puneet Zaveri. Puneet, I think after a really long time we're seeing good gains coming in for the markets, but we're off from the day's high point with regards to where the Nifty 50 goes. The day's high was of course recorded at 22,940 odd levels, but right now we're trading around that 22,700 odd level. So we've seen some dip from the day's high point, but still trading 2% higher on the benchmarks. The Nifty 50 is trading 2% higher. The Bank Nifty also trading 1.8% higher. Let's try to pull up the Nifty 50 heat map to see as to what are the counters that are stealing away in trade today. Interglobe Aviation up 8% as we speak. You have Trent, so retailers doing fairly well, up 6% as well. BEL up 6%. Adani Enterprises, Adani Ports, Adani Group of Companies also doing fairly well, up 5% each. Shriram Finance back in the game, up 4% as well. So largely what we're seeing is that there's a sea of green, at least on the screen today. Some names, in the red, just HDFC Life trading around 0.8% lower. Apollo Hospitals also trading around 0.3% lower, but not much of a concern here. Let's try to pull up the sectoral heat map to see as to how sectors are faring in trade today and what the chart looks like. Of course, all of them in the green at least. You have defense leading the pack, up 5.4%, followed by IT, which is up 3.6% as well. Metals also seeing gains of 3.5%. Media, auto, realty, bank, all of these counters seeing gains in that range of 3 to 2 odd percent. Let's quickly pull up the advanced decline ratio because that indicates as to how the broader end of spectrum is doing, and both the mid cap 150 and the small cap 250 are doing fairly well, and there you go, that's a record number, Puneet. I don't think we've seen that 99 on the screen earlier, and that's consistently remained. I think that is important, and we'll have to wait and watch out for whether that stays or not. But broader end of spectrum also doing fairly well and better as compared to benchmarks as well.
Well, most certainly. I think we've not seen the 2,400 advances also at this point of time, at least when we've done the show together. So it's been a good day for the markets as of now. The mid cap and the small cap also, let's pull up those a couple of indexes as well, because while the Nifty 50 is seeing broad-based gains, the mid cap and the small cap 250 up 3% now as we speak. Mid cap 150 also up 2.7%. And in terms of the BSE 500 individual movers for today's trading session, you are seeing Godrej Industries, Cochin Shipyard up almost 12% as we speak. JBM Auto up 11%. But what a screen there. Almost 6 to 7 top gainers for the BSE 500 are up over 10% now. Tanla Platforms, Uflex, Mazgon Dock, some of the other gainers that are doing very, very well in trade today. In terms of the losers, barring Westlife, just roughly 1 to 2% of declines today. So those 99 stocks also are very visible on your screen. Some of them in the losing end, but are up almost 780 points on the BSE 500 as of now. But let me welcome in our fundamental guest for today, Sameer Dalal of Natwal Lal and Sons Stockbrokers, as well as Swati Hodkar, AVP Technical Research of Nirmal Bang on the technical side. Thanks so much to both of you for joining in today, and a very good morning. The first question, and let me straight get into them. Viewers, you can call us, also WhatsApp us your query as well. It's coming in from Lalita from Bangalore. She's holding shares of Titagarh Rail, bought roughly at around 805. Stocks currently trading at 600 odd levels. Now her question largely is if today's move helps her to get back to those levels. Swati, let me come to you. What do the charts suggest? Is it too early to call it a material movement back towards that 700-800 mark? What would you recommend Lalita to do?
Good morning, all of you. Definitely, from the current level, we are likely to witness some sort of a positive move. Today, the counter is up by almost 6.5%. On a daily chart, we are witnessing a positive divergence, which shows a short-term pullback rally can be continued at least towards to 650 to 670 levels. A resistance provided by the 20 DMA. So I will suggest to hold on the long positions by keeping a strict stop loss of 595 rupees on a downside and carry your long positions for a pullback rally towards to 650 to 670 levels.
Okay, all right. So that's the view on Titagarh. We've got Vinod, our first caller for the day, calling us from Mumbai. Vinod, very good morning to you. How can we help you?
Yeah, good morning. I had a couple of stock queries. First was M&M, Mahindra and Mahindra.
Okay.
Where I have been doing SIP. So should I further increase it for 3 to 5 years horizon? Same question for Fortis Hospital also.
Okay, Vinod, I'll make an exception here and take both view on both of these
thank
counters
you.
for you. Samir, I'll come to you on this one. M&M and Fortis Healthcare is what he's talking about. He says that he's been doing SIP for the next 3 to 5 years. What's your view?
So good morning, my Puneet. And Puneet, still struggling with the name of the company, I can see. But Puneet, thank you for having me on the show. Having said that, let's talk about Mahindra and Mahindra. So yeah, the SIP in Mahindra and Mahindra, I think, should continue. This is a great long-term story. Look at the way the management has done capital allocation efficiently. Ever since Anish has taken over, what he's done is reduce the loss-making entities. The subsidiaries are starting to do well. Mahindra Finance is one of them. We think the hotels business will turn around. The real estate is doing relatively well if you look at the orders, I mean, the sales and the execution and all of that. So we think the subsidiaries will increase in value. And then, of course, the auto business. Now, there is some negative news that has come today, which deals with the electric vehicles getting road tax in Karnataka, and there's a worry of it probably happening in other states as well. That is a genuine worry. But having said that, look, it's going to be something that a shift to electric vehicles, which is going to continue to happen, because we have shown that we cannot have so much dependence on petroleum products, oil and gas in particular. So that shift, as it happens, companies like Mahindra will benefit. Valuations a little bit expensive, but if we look at the next 5-year growth, it's very interesting, and I would buy it. Coming to Fortis Healthcare, yes, the hospital business will also continue to do well. I think the second question was on Fortis, and where we find difficulty in buying Fortis is the valuations. I think they're trading at absurdly high valuations, and the entire hospital space is trading at that. So for me, the risk in Fortis remains that the valuations at some point will start moderating. Having said that, the opportunity is still extremely large, especially when it comes to tourism, for hospitality and for medicines and all of that. And Fortis obviously caters to that. But wait for lower levels, I think, for Fortis. Mahindra, you can go ahead and continue to keep buying.
Got the view, Samir. Samir, sorry, you were mentioning something about, was it Titagarh that you were talking about earlier on?
No, not Titagarh. I was talking when you introduced me from Natwalal and Sons that time. You had a stumbling block, but yeah, coming to Titagarh, we're very positive on that one.
Got it. Got your view, Samir. And probably since you are a regular, I will try and get that one correctly at some point of time. I'm not going to put target on that, but let me go across, take the next query. This one's from Shankar from Bengaluru on Samvardhana Motherson. Now, he's holding roughly 2,500 shares, bought at 121. So currently sitting on a loss. He's asking if he can add 1,000 more shares at this point of time now. Swati, he is asking from a technical standpoint, what would your view be on the stock?
My view is positive because the counter manages to take a very good support at nearby 104, 105 levels, and from there onwards we might witness some sort of a pullback rally. But this is not the right time to take a average out positions. I will suggest that we might witness some more selling pressure, which will take a stock towards 200 to 95 levels. That levels will be a very attractive level, and the risk reward ratio will be a favorable. So any dips towards 200 to 95 rupees, definitely one can go for a long positions. And from there onwards, we are likely to witness some sort of a reversal rally towards to at least 110 to 120 levels. So wait for some more time.
Got that view. The next question coming in from Kunal from Chennai. Kunal, very good morning. Welcome to the show. What's your query?
Yeah, good morning. So I have a share called Hindustan Composites. I've had it for a while now, and it's fallen since my buying price. Given the good book value and good financial backing the company has, the share has not really performed as per my expectation. So would like to know any short-term, medium-term or long-term outlook on this share, please.
Well, Kunal, it's a very small counter, but let me just try and get your view from Swati if I can. Swati, Hindustan Composites, just 543 crores in market cap. Might be a difficult one if you don't track it, but any view that you can offer Kunal at this point of time?
As of now, we were likely to witness some positive move because of some market recovery things. But I believe the short term, the upside rally will be a very short lived, which will take a stock towards to 380 to 385 levels. Not suggested to any long positions, but you can definitely hold on your current positions by keeping a strict stop loss of 350 rupees on the downside.
Okay. All right. The next one is coming in on Sterlite Tech. Our viewer Raghuram from Bhubaneswar wants a long-term to medium-term view on this particular counter. He's not mentioned the time period exactly, but he's holding 1,000 shares at the levels of 118. Sameer, any view on Sterlite Tech?
Yeah, we do have a coverage, and we think, look, the entire space is going to see a great amount of growth, but the stock has already run up quite a bit. So since you're already holding it, I guess you could hold on, but don't expect the stock to have continual performance like you have over the maybe last month or month and a half. We think the stock could go into a consolidation phase. If you have a 3-year view, stay put. I think the stock has higher levels. But for the next 1 year, I think the stock is probably going to languish around these levels. So unless, if you have better opportunities in the market and you want to build a portfolio, it might be better to book profits and sell. But otherwise, company from a long-term perspective is nothing wrong. You can hold on to it.
All right. Okay. The next one is coming in on Saman Capital, and this is from Ramesh, who's writing us from Chennai. Wants to know if this is a good time to buy this counter from a 3 months perspective. Swati, I'll come to you on this one. What are the charts indicating?
Promising at the current levels. If we look towards the weekly chart, the stock was under the consolidation phase within the range of 135 to 150, 155 levels. And I believe looking towards the trend or the price momentum, I believe that very soon we are likely to witness the breakout in this particular stock. So at the current levels, I will suggest at least 20-30% of the quantity can be accumulated at the CMP, and this positive move rally is likely to be continued towards to 175 to 180. And if you're getting any dips towards to 140, you can definitely add on this particular counter.
Got that view, Swati. But the next question coming in now, it's from Sundar. Now, Sameer, his question is, any particular FMCG company that would be on your radar in terms of a buy call from a long term? He's asking between Britannia or ITC, but anyone that's catching your eye now?
Oh, ITC is catching the eye. It's something we are buying. Look, a lot of the negatives from the cigarette business price hikes have been put in. One thing we've seen historically is whenever these price hikes for cigarettes happen, and this one is quite a significant one, I believe the prices have gone up by almost about 27% to 30%. Now, that does affect sales in the short term, but eventually what happens is people get used to the higher prices, and then, business continues as normal. So we believe that, yes, you might see some near-term cash flow issues. Profitability issues, not cash flow, profitability issues. Cash flows will reduce. But long-term, we remain very positive. Now, if you look at the FMCG side of the business, that is scaling up well. They've taken a lot longer than we would have liked to turn more profitable on the FMCG business. But as scale happens, what we've seen is the operating leverages play out. So as you sell more of the product, your margins keep improving. So we believe that side of the business is still to play out. So as that plays out, along with the cigarette business rebounding, I think ITC is a stock that could probably move up back to 500 over the next 2 years, even quicker, probably. So that is the one stock in the FMCG space that we have a strong buy conviction on.
Okay, so that's the view coming in on ITC, and probably 500 target in the next 2 years is what Sameer is looking at. But moving on to the next one, Shri is calling us from Hyderabad. Shri, a very good morning to you. What's your query about?
Can you tell me one stock on pharma, defense and auto to enter as on today?
Okay, and what is the time period that you're looking at? And can you choose one sector out of the three?
Timeline maybe 6 months.
Okay. And would you want a view on pharma or defense?
Pharma, defense and auto.
Okay, I can take up only one, so you have to choose between pharma, defense and auto.
Okay, defense.
Defense, okay. Swati, I'll come to you on this one. 6 months is the time horizon that she's looking at. Today, a lot of these counters in the defense space are rallying. Any particular counter that you're looking at which could potentially see good returns in the next 6 months?
Yes, sir. HL looks very good at the current levels as well. We have already witnessed a very sharp price correction and the counter has entered into the oversold zone. So downside is very limited at the current market price. 3600 is the current levels going on. One can definitely go for a long positions for a target of 4000. And from the pharma pack also, I would like to recommend on the one stock that is Oro Pharma, which looks very promising at the CMP. Currently, the counter has given a very strong breakout on the monthly charts, the consolidation breakouts, and the stock has a potential to reach up to at least 1600. So those two counters are definitely go for a long positions at the same.
Got the view, Swati. But the flash on the bottom of the screen, Mahindra and Mahindra, stellar set of numbers yet again for the month of March. Now we were anticipating a growth of almost 28%, so you might see a slight miss on that, but still a 25% growth to wrap up a very strong year for Mahindra and Mahindra on the passenger vehicle side. Up at almost 6.6 lakh units that they've sold. Samir, of course, gave his view on the stock, but very strong numbers for Mahindra and Mahindra on the PV side. Even on tractors, we were anticipating a growth of almost 18%. It's come out 33% in the month of March. Yet again, you do have to note that the Chaitra Navaratri dates were all combined together in the month of March versus being split last year between March and April. But despite that, the stellar move that the tractor industry has seen, and Mahindra being a key beneficiary here, has shown strength as well. So for the whole year, they've now sold roughly 5.2 lakh tractors. It's a 24% growth as well. Continues to show the momentum for this counter as well. But time now to dive into the F&O market setup, and Sharad is joining in to give us all those cues. Sharad, over to you.
Thanks a lot for that, and a very strong start coming in for the month of April and also the April series. Largely we see there's a cross buying happening across the segments. Only one red is there, that's NTPC, but look at Interglobe Aviation. Stock is up 9%. Trent, BL, Adani Ports, all of these stocks are more than 5% in the trade, and a significant amount of long build-up and short covering is happening. BankX also, the story remains same, and largely support is coming from all the major banks. Interestingly, the VIX has also fallen down, and that augurs well, especially for a positional setup going ahead. But the long build-up includes Mazgaon Dock and Interglobe Aviation. Mazgaon Dock is up almost 10%. Most of these GRSE and the shipyard related stocks are going with strong volumes. Let's see what's there in the short covering. And this includes Bharat Dynamics from the defense pack and KPIT Tech as well. We had mentioned this stock also last week also, where analysts were very much bullish, almost 80% return potential. And now we see a good up move. Stock is up 7%. For long unwinding, we have Oil India and slightly ONGC also on the back of reversal in the oil prices, but not a much bigger trade happening, to be honest, when it comes to the overall setup. A short build-up definitely there for certain life insurance stocks. HDFC Life, that's down almost 1.5%, and Vari Energies also, the stock is down 1.4%, but almost you could say 80 to 85% of the markets is focusing on long build-up and short covering.
Sharad, thanks so much for that. But let me go across, take the next query of Sushila Billeri from Billeri. She's holding shares of MRPL, bought at roughly around 179. Now, Swati, she's holding 5,200 shares. Should she continue to hold this particular counter? What would be your view?
Yes, definitely she can hold on because the current levels are nearby its buying level itself. I believe that the stock has taken a very strong support of 174 rupees and shown some sort of a reversal. And this rally is likely to be continued towards to 190 to 194 levels. So up to that level, you can definitely hold on your long positions. If possible, try to keep a stop loss of 175 and hold the long position for immediate target of 190 to 194 rupees on the upside.
Okay, 100 shares of HDFC bought at the levels of 780. Our viewer wants to know whether to buy or sell or maybe hold and maybe buy more at the current levels. I know Sameer's answer on this one, but Swati, your view on the charts?
At the current level, I will suggest to not to hold the long positions in this particular counters. Any upward rally or any pullback rally towards to 790 to 800 rupees point should definitely exit the long positions. Apart from HDFC Bank, better try to look the another banks such as the Federal Bank or the State Bank of India. Those banks looks very attractive compared to the HDFC Bank.
Got your view, but the next question coming in on Ather Energy now, and it's a very interesting one, Sameer. Our viewer wants to know and buy 50 shares of the company, and he's willing to wait roughly 1 to 2 years. I'm just curious how you see this counter, Sameer, because we've seen TVS and Bajaj, of course, continue to dominate the top twos. market segment, market share in the EV space, but Ather has done phenomenally well in the last 1 year. Stock price has also responded. But do you feel it's a good long-term play at this point of time? Not profitable, and hence P won't be a good multiple. But how are you seeing this counter and this space now?
Yeah, absolutely. PE cannot be looked at in a counter like this. Look, the opportunity is extremely large, right? As you have the shift happening from ICE engines to electric vehicles, Ather, who's able to capture market share. So Ola used to be one of the larger players, but now Ather has caught up and gone far ahead of it. Their products are being well accepted. They are increasing their reach. I believe they're going to increase 100 cities every 6 months for their reach. So, that kind of expansion that is there is obviously going to bode well. But in the initial stages, for the next year and a half, we still believe they will continue to have almost no profit losses to no profitability. And from a fundamental kind of investor, when I'm looking at 2 years with almost no profitability and the stock already having run up from its IPO price, it becomes difficult to justify a buy. We remain very constructive on this company, but we think the price is not correct. So would you buy at 775? No, I wouldn't. I'm going to throw out a number which probably the stock may not achieve. I mean, the stock price may not come, but I would not want to buy it before 450 to 500 odd levels, where I think then from there I could make returns. So like I said, it may not come, but that is where my comfort level comes. So I would not buy at this point, and I'd wait for significant fall of you're talking of over 35%, 40% fall in the stock.
Okay, all right. So that's the view on Ather Energy. The next one is coming in from Sonder, who's asking about Cholamandalam. He's holding 1,000 odd shares bought in 2007. Says he's sitting on a loss right now and wants to know if averaging out at the current level makes sense or not. Samir, I'll come to you on this one. Any view?
So, yeah, I mean, I don't know about 2000 price. I'm not sure if it's even reached that. But anyway, having said that, yes, I think the long term for Chola also continues to remain good. Their financial landscape will do well. You will see some amount of NPA increase happening in Q1 and Q2 thanks to this war, because there will be certain SMEs which would probably face a little bit of difficulty because of not getting raw materials and things like that. But I don't think, I think the company is well capitalized, will be able to tide over those problems quite easily. My suggestion for him is over the next, say, quarter or so, add a little bit more, not immediately. Wait for the Q4 results and, let the management give some guidance for Q1, because I think that's where you're going to see a bit of pain. And when you see the stock closer to maybe 1,300 or 1,250, buy some more, average your cost, and then hold for 2 years, you will make money.
That views, Samir, but let's go across, take our next caller from Hyderabad. And Naveen has a stock query for us. Naveen, very good morning. Welcome to the show. What's your query?
Sir, I bought a JWL share for 4,000. Jupiter Wagon Limited.
Yes.
At a price of 304.
Okay.
But the price is 250. Should I hold it or should I sell it?
And did you buy this, Naveen, for the long term or a short term?
Long term itself.
Long term itself. Got it. Samir, would you recommend Naveen to average down right now on Jupiter Wagons? He's currently sitting on a loss of almost 2 lakh rupees.
So unfortunately, Jupiter Wagon is not under coverage, but we do cover Titagra Rail, which is in a very similar business, which makes the rails and rakes. It's a fully integrated player. Their wheel capacity is going to come up. This year has been a bad year for them because, they were not getting enough wheels. There was a shortage of that. We believe all of that is going to reverse next year. They have a beautiful tie with BHEL for making the metro rakes and for the Vande Bharat. So all of those things are going to start playing out going forward. The stock has seen a massive correction. If you look at the 2-year high, it's closer to 2,000. You're getting 2,000 stock price and now at 600. Valuations look expensive on trailing basis because of the problems they went through. We think this stock can probably run up to 1,100, 1,200 in the next year and a half. This is the stock in that space that we are buying, and that's what I suggest, but no coverage on Jupiter. Sorry.
All right. Okay. So that's the view coming in on Titagarh Rail. But Samir as well as Swati, it's time for a rapid fire round. Try to keep your answers as short as possible. The first one is coming on Shilpa Medicare. Our viewers bought 1580 shares at the level of 370. Book profits hold. Swati, your view on the charts?
I will suggest to hold this particular counter for a target of 390 rupees.
Would you recommend NBCC for the next 2 years? What Joss is asking, Samir.
Yeah, one can look at NBCC and you can buy it.
Okay, Bellrise Industries, our viewer is holding 180 shares at the levels of 157, wants to know from a short-term perspective. Swati, enough data on the charts to give a perspective?
I will suggest maintain the profit stop loss of 185 rupees and carry your long position for immediate target of 200 rupees.
Okay.
Mr. Sharma is holding BEL at 408, roughly 239 shares. Swati, should he continue to hold or book some profits?
I will suggest book the partial profit. Second partial you can hold on by keeping a stop loss of 418 for a target of 440 rupees.
Apollo Microsystems is the next one. Zakir from Dubai wants to know if this is the right time to make an entry. Swati, your view on the charts?
I will suggest not to make a buy price at the current levels buying. Any dips towards to 185 to 80 will be the good levels to take buy on.
Within SAIL as well as Tata Steel, is it a good time to continue holding these stocks, Samir, at this point of time?
For the next 6 months, okay, but do exit in 6 months.
Okay, Lemon Tree or Indian Hotels, which one is a better placed counter considering the current levels and the situation is what our viewers Khurshid is asking. Samir, your view?
Indian Hotels over Lemon Tree, both are good though.
Mamta Machinery, I don't know, Swati, if you track this counter, this is K. Parthasati asking this question. He's holding shares at 445 and asking what he should do now.
Hold on, pullback rally can be witnessed up to the 370. Any rise towards that level should exit the longs.
RVNL bought at the levels of 415. What should I do? Thomas wants to know. Swati, your view on the charts?
At the current momentum, you can hold on by keeping a stop loss of 255 rupees for a target of 270.
Praj Industries bought 2,000 shares at 400. Samir, is there a good ethanol play in that sense, or is it worth? Or should a viewer exit now?
The ethanol play will do well. I think one can hold on, especially after what's happened with the oil prices. I think ethanol will Praj is something to hold.
Dixon Tech 50 shares bought at the levels of 10,200. Hold or sell, Samir?
Buy actually at this price, not sell.
Max Healthcare bought at 1,070. Samir, Sagar from Bengaluru is asking a 3-year view on stock.
Again, same thing. Hospital space, a little bit expensive. Yes, hold, but don't expect great CAGR returns.
Okay, transformers and rectifiers, 300 counters bought at the levels of 280. 6 months view on the charts. Swati?
I will suggest to hold on the long positions by stop loss, keeping a stop loss of 265 for a target of 300 rupees.
Anant Raj Samir bought at 617 by a viewer, Sharat. He's asking if he should continue holding this counter now or average down.
Sadly, no view on this one, but from the data center play that they work on, it might be an interesting, but I haven't studied it.
Okay, India Mart Intermesh, 30 shares bought. The buying price is not mentioned, but Abhijit wants to know view on this one. Swati, your view on the charts?
I will suggest to hold on the long position. Stock has a very strong potential to reach up to 2150 to 2200 levels.
Okay.
Is it a right time to enter Kirloskar oil engine? Swati is what Suman is asking.
Not at the current momentum. Wait for some more time. Any dips towards to 5%, you can definitely go for a long.
NTPC Green bought at the levels of 102 from a long-term perspective. Continue to hold for the next 5 years, Samir?
Absolutely. Continue to hold. The profits are going to skyrocket over as the capacities come up.
Vari Energy also is what Harshit is asking. Samir, should he continue to hold on to this counter and can he enter now?
Enter, no. Hold, yes.
Suzlon bought at the levels of 42.5. Sell or hold? Swati, your view on the charts?
Definitely, you can hold on by keeping a stop loss of 39 rupees. Upside, a pullback rally can be witnessed up to 47 to 48.
Alright, okay, that brings us to the end of our first rapid fire round. But viewers, time to slip into a very, very short break. We'll be right back answering all your queries on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's actually how to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Taman.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries on the WhatsApp number. You can also call us, speak to us as well as our desk directly on the number, landline number that will be flashing on the top of the screen as well. But let's go across, take our next query for now. Now this one's coming in on Ashok Leyland. Our viewer has bought 250 shares at 162, asking if she should hold on or sell into this particular counter. Swati, stock has seen correction post touching 200. What does the momentum on the charts look like now? Swati, I think you might be on mute.
Yes, I'm really sorry. As of now, the stock has entered into the oversold zone. We have already seen a very strong sell-off from 215 to almost 150 levels. Now, I believe that the stock will find out some support zone nearby 150 levels. So downside is limited from the current levels, not to book your losses at the CMP. Wait for some more time. A positive pullback rally can be witnessed into this particular counter, which will take a stock towards 180 rupees. So it's all from my end.
So that's the view on Ashok Leyland. The next one is coming in from Guneet, who's writing us from Mumbai. What's a long-term view on Trent? Samir, I'll come to you on this one. The stock, of course, is buzzing today, and a lot of these retail names are buzzing on the back of store additions. But overall view from long-term perspective, what's the view on Trent?
Okay, so I have someone who works at Trent, so just want to put that disclaimer out in my family, and very, very bullish on the long-term prospects. From the simple reason that, we talk about store additions, that's great because they need to increase their footprint. They're barely scratched the surface when it comes to West Side. Zudio, of course, has reached 800 plus stores, so that is doing well. But what is the key trigger for these counters is not the store addition, it's the same store sales growth. And we believe, that will see a further pickup. They call it LFL, like for like. We think going forward, as whenever the Indian economy and the Indian consumer comes back, it'll take 6 months. When you see SSSG coming through, what you will see is a massive re-rating. Why? Because when SSSG comes through, the operating leverage plays out. And when that happens, the profits increase far higher than what the top line increases. When you have store addition increases, what it does is also increases costs simultaneously. So profits don't rise. But we believe that the SSSG play is going to work out. They've added a lot of stores over the last 3 years, and all of them are reaching a point where they're going to become very profitable. So for me, trend is a buy at this point. I think the stock could probably go back up to 5,000 to 6,000 over the next year to 2 years. Strong recommendation of a buy.
So strong recommendation by Samir on Trend. Samir, I hope you're getting some discounts as well on Trend on West Side, because generally a very no discount in policy across there. So I see an affirmation coming in from you. I hope you're getting some of them at this point of time. But sticking with you, Samir, on JK Tyre, that's the next question. Viewer wants to know if it's a good buy for the next 3 years. Samir, rightly the most undervalued stock, right, in that sense, in the tyre space. But does it get a buy recommendation from you on this one?
Not immediately. Look, a lot of these tire counters, unfortunately, are going to feel a lot of the brunt of the crude price increases because a lot of their raw materials come through crude derivatives. When crude prices rise the way they have, what it does do, obviously, is hurt their margins. I'm sure they'll pass on some of their price increases, but they may not be able to pass all of them on, especially to OEMs. To the retail side, of course they will. But if you look at it, JK is not as big when it comes to the seconds market. They're bigger when it comes to OEM play. So for me, short term is going to be a tricky period. If you have a 3-year view, probably buy, but buy closer to 330, 340.
Okay, all right. So that's the view coming in on JK Tyre. The next one is coming in on TTK Prestige. Jake from Kochi is asking this. Says that he's initially bought this from a long-term perspective, but the price has dropped and now he's worried. Can he continue to hold this for a year or not? So I think I'll come to you on this one, a slightly long-term perspective on the charts. Of course, these stocks rallied on the back of the induction cooktop wave, and viewers just bought this stock left, right and center. But considering the charts, do you think there is more steam left?
Definitely, we have seen a very strong selling pressure on the price wise along with the volumes also. The stock is trading nearby the lower levels of 2018 or 2019 levels. These levels has been tested. So the downside will be limited from here onwards, and we bought it at very elevated levels. I will suggest to hold on for some more time, or if possible, try to average out the positions at the CMP by keeping a strict stop loss of 420 rupees on the downside. The stock has a potential to see some sort of a reversal along with the volumes towards 500 to 540 levels. So it's a hold from my end.
Hold from Swati's end, at least coming on TTK Prestige. But let's go across, take our next caller from Andhra Pradesh, and Sai has a stock query for us. Sai, very good morning. Welcome to the show. What's your query?
Hi, sir. Very good morning. Sir, actually, I brought HDFC shares at average price of 781, 500 shares. Should I sell it now, or can I average it by adding some more shares?
Got it. We have taken this query today, at least with Swati, but and I know Samir is very bullish on this, but Samir, just a quick view if you can for Sai, since he's called us on HDFC Bank, because we are going to see in the next 1 week the latest quarterly updates come in as well. There's also news flow today that we've broken on NDTV Profit that in this quarter itself on the 18th you could see the board take up Shashi Jagdishan term as well, because the regulations mandate that since it's only 6 months to go. Either way, how are you viewing this stock now, given that, and it doesn't matter in terms of continuity of management for you, how do you view the stock?
So obviously continuity of management does matter, because there's a strategic goal that the management sets out and they have to achieve it. Now, when you have a change in management, what the new strategy obviously comes into question. But looking at HDFC as an entity, it's not one man that's driving it. He's the one who's giving it direction. So the direction changes, but which segments to focus on. But it doesn't change the fact that the bank is very strong structurally. They've got their underwriting schemes and processes well under control. And we honestly do believe that the stock is massively undervalued when you look at historical valuations, and growth will come back. It's an unbelievable buying opportunity from a 2-year perspective. So for me, it's very clear-cut buy. I've explained this multiple times, and I stand by that view. And I think someone who holds it for a year will actually make over 25% CAGR return.
Okay, all right. So that's the view on HDFC Bank. The next one is coming in from Lokesh, who's writing us from Bengaluru, asking about Afcom Holdings. He's bought 120 shares at the levels of 698. Wants to know if he can continue to hold this for a year or so. Swati, a slightly long-term view on the charts. He's sitting on a loss of around 50,000 rupees right now.
Yes, you can definitely hold on this particular counter because from the last 4 to 5 weeks, the stock is under the consolidation phase. We have not much seen the price correction from the last 4 to 5 weeks. So I will suggest we might witness slowly and steadily a more rally towards at least a target of 340 will be the initial targets. And beyond that levels, 400 levels can be seen. So you can definitely hold on the long positions.
All right, okay. The next one is coming in from Mohammed. I think he's calling us from Bengaluru. A very good morning to you. What's your query about?
Good morning to you all. I have JB Chemical and Pharma, 26 stocks. I want to know the short-term view on this and what should be the stop loss.
Okay, got your question, Mohammed. I'll take this up with Swati. Swati, your view on JB Chemicals? His buying price is 2106.
My long-term view is definitely positive, but if you look towards a very short period of time, it's a little bit cautious because in the last 2 days back, the counter has given the breakdown of the 20 days moving average, which was coming nearby 2100 rupees, and it's currently trading below those levels from the last 2 trading sessions. So the view is a little bit cautious as we have already witnessed a very strong up-move rally from 1700 to 2100 levels, and the profit bookings cannot be denied at the high levels. So I will suggest to exit the longs, or if possible, try to keep a strict stop loss of 2000 rupees on a downside. If it's break those level, then more selling pressure is likely to be intensified, which will take a stop towards to 1940 to 1900 levels. So the view is a little bit cautious. Please place the stop loss.
Got that view, Swati. The next question coming in on LIC. Now, Suresh Nair from Hyderabad is a long-term investor holding shares at 904. Now, the stock has not performed since listing, which has been quite a while ago, so has been a key underperformer there. Samir, from a long-term standpoint, on the valuation multiple is definitely cheap, but would you recommend a buy? Because also Q4 of last year, we had that big profit of almost 19,000 crores that the company reported. Might not be able to report that yet again in this quarter. So do you think this is the bottom, or can the stock see some more correction and then be a very lucrative buy according to you?
So it's a lucrative buy even at this point. We discussed the fact that they reported a very strong number last year. But if you look at it, where does this profit come from? It comes from the embedded value of the shares that they hold, right? If you go and look at LIC's holding, they are holding stocks like Reliance, ITC. I mean, name it, the blue chips, at their cost must be almost nothing for them. So as and when they book a little bit of profit, so the profits will come, may not be 19,000, but it will be very good. Having said that, if you just look at the total embedded value of the assets that they hold in real estate, in equity, and you add that, the stock is trading, I think, at a massive discount to what it should be trading at. We believe the insurance business will continue to grow. In India, we are very underpenetrated. So not only are we talking of growth in business, but there's also value which is hidden, not hidden, but undiscovered. And I think the stock over the next 2 years will do well. The biggest problem with LIC is the government overhang, because, they need to meet the norms of 10% at least of public shareholding, and every time we see a rally there, what happens is people get worried that the OFS will come. So that is the big overhang. Once that is done, I think you'll see a long runway of growth for the stock.
Got it. The government does hold 96.5% shareholding, and definitely, looking at these valuations, even the Department Secretary might not want to sell it at this price, right? Because at 0.6, 0.7 doesn't bake in those gains yet as of now. So point well taken, Samir. Our viewer Vijay Khiti is actually asking us this next question. He's holding Gale, but he's bought it at 251. Now, definitely these current concerns of the Israel-Iran war is having an impact there as well on the stock. But Swati, on the charts as well, would you recommend this particular counter to average down right now, or hold, or recommend Vijay Khiti to hold?
At the current levels, definitely the prices are very attractive because the stock manages to take a very strong support of 2019 levels. These levels we have witnessed it around 135 to 140 levels. And the stock has maintained a very positive closing above those levels from the last few trading sessions. So I believe you can average it out at the current market price as well because the risk reward ratio is favorable. Slowly and steadily, we are likely to witness the up move rally towards at least 160 to 165 levels. So I'm positive on this particular counter. You can hold on the long positions.
Is coming in on Oracle Financial Services. Om wants to know if this is the right time to make an entry into this counter. Swati, I'll stick with you for this one. Your view on the charts?
My view is positive in this particular counter because the counter is on the verge of giving the breakouts of the downward sloping trend lines on the weekly chart. So on a larger degree, the counter looks very positive on a short period of time. It manages to give this resistance breakouts of 6900 to 6920 with the decent volumes in the last week. So I believe this positive momentum rally is likely to be continued towards to at least 7500 rupees and beyond that level 8000 levels can be seen. So long positions can be held or even can be created by keeping a strict stop loss of 6600 rupees on the downside.
All right, the next one is coming in from Sivakumar, who's writing us from Bengaluru, asking about HDB Financial Services. He's got 145 shares at the levels of 740. Wants to know if he will be able to make any profits in the future or not. Samir, I'll come to you on this one. Your view?
I think he will be able to make profits. Look, the lending business is something we are positive on. Like we said, the next 6 months, you might see some amount of pain from the fact that, MSMEs, especially where HDB is lending to, will face some amount of pain. Whenever you see that, pain and you see a little bit of correction in the stock closer to 500, I would say go out and buy. Short term, like I said, for the entire market, it's not only a stock, but I think the entire market is going to see short term pain continue. But long term, we are very, very positive because if this war were to end and everything normalizes, things would return to normalcy. Businesses would come out of their NPAs and they get the financing cycle going, they get their operations going, and everything would normalize. So long term, very positive. I think this is a stock one can add on at lower levels and expect a little pain in the short term.
Got that view, Samir. But the next question that's coming in now, it's on Blue Jet Healthcare. Actually, our viewer is holding shares at 798. Now, stock's down almost 60 to 70% from those highs and has been a rank underperformer. But Samir, just in terms of that, right, because it's already fallen so much, someone who's already holding the shares, should he continue to hold, probably wait on for some commentary from the management in Q4, or would you recommend selling out even at these prices?
Possible to take it to Swati. I don't cover Blue Jet.
Swati, anything on the charts? Stock's up 6% today, but any view?
Yes, at the current levels, the view will be a positive. Why so? Because whatever the rally we have seen from 2024, from almost 350 to 2020 levels, the stock has retraced 100% those rally. So I believe the risk reward ratio is favorable. No need to book the losses at the lower end. Hold for some more time. The stock will find out some good support nearby 320 to 330 levels. So if possible, try to keep a stop loss of those levels. And any pullback rally towards to 450 to 500 should be utilized to exit the loss.
Okay, all right. We've got our next caller. Sai is calling us from Hyderabad. Sai, very good morning to you. What's your query about?
Actually, I'm holding in a Bajaj Housing Finance shares of 511 at an average price of 139.
Okay.
Currently, I'm loss of almost 50,000. What is your opinion? Should I need to hold or should I need to sell?
Okay, Sai, what was the time period that you had in mind when you bought this?
During the listing time, I bought it 188 and I have made an average and the average price came down to 139.
Okay, gotcha. So from a long-term perspective, so I'll take Samir's view on this one. Samir, your view on Bajaj Housing Finance, because he bought it at 139. The stock is currently, I think, trading at 76 odd rupees. What should he do?
So honestly, people bought this thinking this was the gold standard, because it had the Bajaj brand to it. Unfortunately, everything comes good at a price. And you're paying the price for that, for not heeding to that. For me, Bajaj Housing Finance from here has limited downside. But look, the housing finance space is a very competitive and aggressive space. Bajaj does have lower cost of funding, but are they going to be able to grow the way they grew in the other businesses? I don't think so. So getting back your cost, I think, is going to take you maybe 2 years, a little maybe over that as well. There are other NBFCs in the housing finance space also, which you can look at, which are trading at under book value, where the re-rating can happen. It was discussed earlier, Samman Capital. They've just raised a lot of money, 8,000 crores at 140 rupees. You're getting it at 150 rupees. So you're getting it 10 rupees higher than where the money is coming in. This is trading at 0.6 times book. I think it can, even if it moves up over the year to a one-time book, you're looking at the stock doubling from here. Plus, when the growth comes in, you will see the book value going up. So probably get better returns there. So my suggestion, take your loss, use that loss against something else you have profits in, and play Samman Capital where I think there's more upside. They are also housing finance, but they're going to diversify, and that is the better play, I think.
Got that view, Sameer. So the numbers, auto sales numbers continue to drive in at this point of time. So Hyundai coming in there, it's been a disappointing performance yet again, even since listing for the stock, as well as the monthly sales numbers haven't quite held up yet over the last few months, even at a time where Mahindra, Tata, and Maruti all have done very well. So that disappointing trend continues now, much below the IPO price of almost 1,900 odd rupees as well. Stocks fallen from 2,800 all the way down to 1,750 now. But the last 6 months haven't been good in terms of sales performance, especially when the industry has done well. So continue to monitor Hyundai India today as well. But next question is coming in from Shiva from Hyderabad. Now, Swati, actually, let me come to you because he has roughly 2 lakh rupees to invest, and he wants the very short-term view because he wants to enter into 2 to 3 stocks. Anything that's on your radar that you would recommend?
Levels and positive on JSW Steel, Oro Pharma. Those 2 counters are really doing very well from the last few trading sessions as well, and taken very strong supports of the important moving averages. So one can go for a long position in this particular count.
Okay, all right. The next one is coming in from Shiva, I think. Have you taken this query?
Yeah, Shiva is
okay,
done,
we've taken this query. All right. The next one then is coming in from Anil, who's writing us from Jalandhar, and he's asking about Petronet LNG from a short-term perspective. He says he's bought 5,000 shares at the levels of 320. 1 month view on the chart, Swati?
My view is positive. 320 will be levels will take a more time. As mentioned, 300 to 280 levels are the immediate targets level I'm looking forward. By keeping a tight stop loss of a 245, you can definitely hold on for a target of 280 to 300 levels. 320, it will take a long period of time to achieve those kind of targets.
ONGC is the next counter, and Sudhir actually has bought these shares at roughly around 219 rupees per share. So he's currently sitting on good profits as of now. Now, Sameer has questioned largely if he should sell out now that the stock's at 52-week high. Now, we've seen, of course, this volatility work well for ONGC, but would you recommend exiting now? What would you recommend on ONGC?
Okay, so if you said you bought it at 290, I think that's where the price is pretty much. So he's not really making any
219, Sameer, sorry.
219, okay.
Yeah.
So he's making good money. I would say book your profits. I'll tell you why. 2 things. One, if the war comes to a conclusion sooner rather than later, then what you will see is crude prices coming off, so the benefit will go. 2, if the war continues also for longer, I see the government putting windfall tax back on ONGC, and what you will see is the sentiment turning sour. So irrespective of either way it goes, ONGC is a stock that never gets a lot of the benefit because government takes away a lot of the benefit. So for me, at this point of time, I would sell it, take your money. There are far better stocks which have corrected aggressively. Buy those, you will make lots of money and you'll book your profits here as well.
Got that view, Sameer. But time now for the rapid fire round in this edition of Ask Profit. Of course, the second one now. Sameer as well as Swati, you know the drill. The first question coming in on PG Electroplast. Our viewer GS Arun is holding shares at 547. Sameer, is it a good time to average now?
Don't average, hold on.
ICTC is the next one. Yuvraj wants to know that the stock has been falling since 2024. Is this a good time to kind of average out bulk quantity? Sameer, your view?
Oh, absolutely. I think it's a great monopoly play, long term, very good. Buy it, average it, yes.
Vishwanath is holding 3,000 shares of Varun Beverages at 435. Sameer, would you recommend to continue holding these, and is averaging on the cards too?
It's barely down from where he's bought 430 and 400. Yeah. I think you can just hold on. Don't add up right now.
Okay, Sunil from Pune wants to know the short-term target and stop loss for Nalco. Swati, your view on the charts for Nalco?
My view is positive. Definitely, you can hold on for a target of 420 to 430 levels.
Samir, do you still like Kalyan Jewellers is what Narayana is asking from the medium term.
Oh, absolutely. I think if you have medium term, I don't know what he means, but if you have a 2-year view, I see the stock at about 550. If you have a 4-year view, I see it above 800.
All right, Balaji Mines is the next one. Is this a good time to make an entry from a slightly long-term perspective? Swati, your view on the charts?
Yes, you can definitely go for a long position for immediate target of 1,200 rupees.
Siva is actually holding 8,300 shares of Z Entertainment bought at 119. So Samir is sitting on a loss of 3.5 lakh rupees. What would you recommend here? Because the fundamentals don't match up, but should he exit because of the loss?
Yeah, I think exit. You want to take a play in the same space. Look at Sun TV. The value unlocking that has just happened. The IPL franchisees could benefit Sun TV, and then the advertisement business continues to do well.
Okay, Force Motors, is this the right time to buy? Someone from Kolkata wants to know. Swati, your view on the charts?
Not at the current market price, any dips towards 18,500 to 19,000 levels at that actual levels.
REC bought by Preeti at 540. Swati, she's asking a 6-month view on the counter.
I would suggest to hold on. The immediate target from the current level will be a 380 to 400 rupees. So you can definitely hold on.
Tanla Platforms, 25 shares bought at the levels of 758. Can I accumulate more? Samba from Chennai is asking this. So Samir, any view?
No, you are Tanla, sorry.
Swati, quick view on the charts?
No, I will not suggest to accumulate at the same wait for some more time.
IOCL bought at 135 by Vivek. Samir, what would be your view on the stock now?
Get out, sell out.
Amara Raja, Swati, your view on the charts? Meher Prem wants a view.
My view is positive. I believe the stock has a potential to reach up to at least from the current levels towards 800 rupees. So you can definitely hold on.
Samir, do you track Force Motors? Any view on the long term?
So we do cover it. Long term is good. Valuation in the short term too expensive. I would not buy above 15,000 or actually 14,000 actually.
Got it. Well, that's the next question that's coming in now. It's on Aquitas Chemicals. Our viewer holds it at 2445. What would be your view on this, Swati?
My view is a little bit cautious at the current momentum. So I believe sell-on rise strategy should be implemented in this particular counter.
Okay, Affle India, Dinesh has bought 50 shares at the levels of 1,012. Hold or sell? Swati?
I will suggest to hold on for a target of 1,500 to 1,570 levels.
The next one's coming in from Afreen. Her question largely being on the cement space. Samir, is there anything you track and anything that's a buy?
Yeah, so ACC is something we like. I mean, you can buy Ambuja also because their merger ratios are now. The other one we think is good as part of this correction is Ultratech.
Transray Lighting, Rajiv wants to know a 6 months view on this one. Swati, your view?
View is a little bit cautious, but yes, pullback rally can be witnessed up to 540 to 520 levels. So you can hold on the long positions.
Mascon Doc bought roughly around 2,400 by a viewer. Samir, should he buy a little bit more now or continue to hold?
I would say just hold at this point. I'm expecting the stock to go lower also. Valuations are too rich.
Got it. Well, that's the end of the rapid fire as well as this edition of Fast Profit. Samir as well as Swati, thanks so much for helping us solve all these queries over the last 1 hour. But viewers, if you've missed your query, we'll try and taking it back again at 2 p.m. For Ask Profit, the afternoon edition. To do, stay tuned. That's all the time on the show. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand?
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is one of the hottest shows on KYC where we get you interesting trending companies which should be on your radar and maybe make money as well. But before that, I'd like to give you some hints about it. This company is Asia's largest dialysis service provider. Dialysis, kidney ka treatment hota hai if you have diabetes or hypertension because of that. The second important hint is the stock was recently listed December 17, 2025. It's just been 3 months. And also, the company is backed by Fidelity Investments. Good name in the IPO anchor list, but the stock has remained resilient. It's up 15% from the IPO price as well. Guess the company what it is. It's NephroCare Health. That's the company I'm talking about. Kidney dialysis ka treatment ki company hai. But it's not only in India, it's in the emerging markets as well. This is the company I'm talking about, which should be in your focus. But the question remains is, why are we calling this company? Of course, recently there was a broking upgrade also, but there is much more to that rather than just the upgrade. The opportunities in the dialysis market segment, especially in the emerging countries, this also includes India and other Asian nations, especially the expansion part. That is what we are excited about, especially the Philippines. There is Uzbekistan, there is Saudi Arabia angle to it, which I'll give you all of that in some time. Where is the stickiness and the scalability looking like for this industry? If you are a customer, it becomes very recurring because the dialysis treatment is not one-off, it keeps on happening. That means the stickiness is there in this business model. And of course, the profitability. Where is the high margin moving towards? Is it the Indian business? Is it the global business? And where the contribution is coming? That's something we'll ask the management. And of course, the trends on the hospital partnerships and the government contracts. Whenever the government contract comes, payments at times become lumpiness also. But will that happen to this company or not? Or is there any asset light model at play? All these questions will be answered. And of course, is the revenue per treatment, is it plateauing? We saw good growth coming, especially to the run up to the IPO. But will the operational parameters plateau here or will they keep growing? That's the big question. And price hikes. Generally, the new financial year, some price hikes are also announced across the core offerings. And generally, these offerings are passed on very nicely with the consumers. So we'll ask that. And Rohit Singh, the Group CEO of Nephro Plus, that's the brand which I'm talking about, which the company has rebranded of their core products. He will be joining us and Rohit will give us the entire picture, the 360 degree of this industry, what it is all about and why this stock is commanding a premium valuation. All these details will be there on the show in KYC. But let's give you some more details about NephroCare, Nephro Plus, what this company is all about. Company karti kya hai? We have mentioned is Asia's largest dialysis service provider. Also recently it was listed on December 17, 2025. But let's get into more details about it. The Q3 numbers were aided by a strong growth especially in the international markets. That's where the revenue contribution also went up, and I will explain you the revenue contribution also. The company has acquired 9 clinics in 9 months FY26. So of course, this is just not organic expansion. There is a lot of inorganic expansion at play, and that is how you become a market leader in this kind of industry, because it's a lot of dialysis centers are in the unorganized space. They have expanded into Philippines and Uzbekistan. That is where the alpha might be there. Also, Saudi Arabia is in focus. They have entered this market with JV with Al Faisala Group. Now, what this JV means, what are the numbers looking like, projections, this is all we'll ask Rohit. And also, the 52% of clinics are under the revenue sharing model. Now, when I speak about revenue sharing model, this is largely the asset light angle as an investor, which you should note down for this company. A lot of positives are there regarding this. Also, operational numbers, 521 clinics globally. This includes Asian markets as of now, 290 Indian cities, but the story is not in India. The story is in Bharat. 78% clinics is just there in tier 2 and tier 3 cities. This is where the magic happens, and that's where the growth is something which the street is giving a good premium to. Indian markets, roughly 59% of the revenue. The remaining 41% comes in for the global markets, and just 1 quarter ahead this number was just 29%. So see the growth which has happened, and 41% of revenue contribution coming in. This is important because the return ratios are better, the margins are better, and that's why the financial numbers, that's where the up move happens. But let me explain you kidney dialysis का industry क्या है, क्यों इतना बड़ा है, why I have called this company, to make you understand that dialysis industry is at a very, very nascent stage when it comes to India. But look at the numbers. Indian market size is roughly $8 billion. Growth rate, compare that with IVF and other players, that's around 20 to 22%. That's a significant growth rate I'm talking about. लेकिन इसमें अगर आप पैसा डालें तो payback कितना दिन में आएगा? That's very less, 1.5 to 2 years. Other diagnostic players, if you talk about it, or other businesses also, this ranges between 2 to 8 years. Capex heavy ज़्यादा नहीं होता है. EBITDA margin is also significantly higher. That's roughly 70 to 20%. So all the sides, there is a green ticks happening when it comes to the kidney dialysis industry, and the company is very, very bullish on this. But why? That's the first question. Stock's resilience has been seen despite a weaker markets in the 4th quarter of FY26. We are seeing that good momentum happening. It's a single specialty healthcare service provider by definition, and a recurring revenue potential. That is something which is very much important. एक बार dialysis लग जाता है तो आपको बार-बार जाना पड़ता है dialysis treatment के लिए. This is important. Strong growth opportunities, especially with the organized players in the emerging markets. Largely this area is having German, European and US players, and this is the only proper Asian player coming in the market. And remember, the base is very small compared to the global numbers. Also, Nomura is expecting the EBITDA CAGR of 18% over the next 2 years, driven by mid to high teen revenue growth as per Nomura. Mid to high teen means around 15 to 18 to 19%. That is where Nephro Healthcare is a bullish bet when it comes to the brokers, analysts, and even through my analysis. But analysis in KYC is very interesting because we get you 8 rating parameters. And of course, for this company, especially the cash flow segment I have removed, have got in the operational parameters. That's what you should be looking at. And also the return ratios. That is where we'll be focusing on the adjusted ROC numbers as well. Also the shareholding street cred, remember their trading history is very less. It's just been 3 months, but nevertheless this is very much important. अगर ये पैसा बनाया है कि नहीं, that's in street cred. And shareholding, of course, we'll look at the key shareholders, FIs, DIs included. Valuations, there are 4 or 5 multi-specialty hospitals where we'll do the comparison of it. It's likely to be apple to oranges because the company is focusing totally on dialysis. Other players are also there, but there are some minor kind of up moves, or you could say contribution from this segment. And outlook is very much important for the industry especially, and also company's growth prospects as well. So 8 rating parameters where we'll judge the company. But let's go on to the first trading parameter, and that is the income statement. And let's see what the growth has all been. The EBITDA number is something which has caught my eye. That's 119% 3-year CAGR numbers. Of course, these numbers are before the IPO numbers, but imagine the growth happening. Is it because of just the international expansion plans, or there is a change in product mix? That's what we'll ask the management. But look at the Q3 numbers as well. This is also very much important, and they have maintained that ratios are around 24-26%. So is this the peak of that ratios or the margins to look at going ahead, or is there a further scope for growth from here? That's what the main question is. But net all across the numbers have been really strong. And look at the growth coming in, and this has sustained, and this is around the 23.5% operational margin as well. That shows strength in the overall income statement. So it's a strong thumbs up when it comes to Nephrocare for income statement. Let's talk about the balance sheet also. And of course, balance sheet, I'll keep a neutral rating on it. The borrowings, they have actually come down, and this is of course the IPO proceeds were taken in. So there's a lightness in the balance sheet. Company says it's capex light model, the way they are going up across, but the expansion plans, the acquisition plans, that is where I feel that a larger amount of deployment of sources can be there. Roughly 113 crore rupees of cash balance is left. So it's evenly balanced, but yes, company is under expansion mode. They have appointed 21 people in the development team just for acquisition. That's an interesting data which I got from the numbers. But net kharcha to company karega. So balance sheet is going to be neutral when it comes to the overall numbers. But also let's talk about an interesting number, and that's not going to be cash flow. This is generally, if there is no government contracts involved, it's a stable business, koi stress nahi aata payment ka. But operational performance kya raha hai? Number of guests or the number of folks who have entered and used the services, that is where they have shown a good growth coming in. The CAGR numbers are in the high teens for most of their operational parameters, and also in terms of treatments, that has also gone up. And remember, this is just the 9-month FY26 numbers. It's roughly 2.85. If you annualize it, this goes past this 3.3 mark comfortably. Also, let's talk about the expenses, or you could say the revenue per treatment. That's the important number to talk about. This is the return ratios. We'll understand, but this is from the perspective of the operational front. FY23, it was roughly 1900 rupees. Now that has jumped to 2600 rupees. We're expecting this to touch the 3000 mark in the next 3 months or 6 months. That's the big question to be asked. But why is there so much stickiness or scalable in the model that the company is able to have these price hikes as well? That's the big question to be asked. We'll answer that, but as of now, operational parameters is a strong thumbs up. Let's talk about the return ratios, and these are the adjusted ROC numbers. The calculated ones are in teens, but this is what the company has given, and this is a significant jump coming in. It's largely in track with the margin story which we have seen with the company. So the numbers are maxing. Is it maxing at the top, or is there more scope from here? That's the big question. But return ratios as of now, I'll give a strong thumbs up as well. So now let's talk about shareholding, and to be honest, it's just been 1 quarter of data coming in. Promoters are having a 64% stake, FIs, DIs 9 to 8%. It's evenly balanced. Let's give it more time to actually judge the company. It's a neutral rating for shareholding pattern, but company has done well when it comes to the street cred. Let's talk about the street cred, how important this is. Remember, the history is very small. It was listed in December 17, 2025, 3 महीना का data है, but nevertheless, खराब market था, उसके बावजूद year-to-date basis stock is up 14%. Remember, January, February, March was a really big devastating show for the mid caps and the small caps. From IPO price, it's up 15%, and even from listing price, the stock is positive. That means post IPO also there is strength in the buying, and the stock has not fallen, and because of that, I'll give a very strong thumbs up when it comes to the street cred for Nephrocare. Let's talk about valuations, and of course, if there is a good up move in the stock, valuations might be premium. At times, question is the IPO price a bit expensive? Maybe, and maybe the company is justifying that valuation, and it's expensive. 68 times the P numbers which we are talking about, or Dr. Agarwala's, that's on the higher side, 152 times, but the other players like Rainbow Children Care, Jupiter Life, they are ranging between 40s in terms of P, and we talk about the other companies as well in their category. The ratio is between 40 to 50. So there is a 15-20% premium which Nephrocare is enjoying. Is it good to enter now, or need to wait out for a correction? That's what we'll wait out for. But importantly, the valuations are neutral as of now. It might, or it is justifying that valuation against its peers. Outlook is strong. Dialysis services, this is sticky and scalable, and we made you understand why this is. The strategic acquisitions, especially in the Philippines front, how much benefit comes in, the growth comes in, that's all we'll be understanding about. But the management is bullish and they're expanding in the micro markets and clusters as well. And remember, there are a lot of catchment areas. A lot of our viewers from Gorakhpur or Siliguri will understand how important this is for these medical clusters to grow. And also the company is well positioned to prevail in the emerging markets. Largely the European and the US players have not penetrated that, and this is where the alpha comes in KYC. That's why I get these companies, so that you understand the pricing mix is still favorable than peers because of the product which they have. There's a concentration on that and the repeat customers are there. That's what makes this business model unique. So net outlook is also very strong. But let's see what are the KYC ratings for this company, how much we have given in our analysis, and largely this is a very strong flow show coming in. Income statement balances have been good, return ratios have been really strong. Instead of cash flow, this is the operational parameters I'm talking about, that's also strong. Thumbs up I have given. Looking at shareholding, let's give it more time, but street cred, that is where the company has been resilient despite what we have seen in the markets. Valuations, company is commanding a bit of premium, maybe a bit lofty as of now, but the outlook, that is where the alpha comes in, and this is something which we'll be watching out for. But to get in more details about that, we'll first give you the KYC rating. It's one of the highest KYC ratings I have given. Generally the highest is 7, but almost the second highest numbers, 6.5 out of it. The performance has been good, the future potential also looks good. This is for NephroCare Health. And joining us would be Rohit Singh. He's the Group CEO of Nephro Plus. And good afternoon, Rohit. It's always a pleasure to have you with us. And Nephro Health Services, the company itself, now there's a brand also which you have made out of that. Just make us first understand what this dialysis industry is all about, how big a player you are, how is this market looking like? If you just give us that explanation, because this is a very unique kind of a company in a unique kind of an industry.
Absolutely. First of all, thank you, Sharad, for having me here. And thanks for the viewers who are watching us right now. So before I go into the market, a brief about Nephro Plus. So our brand is Nephro Plus. Organization is called, the legal entity is called NephroCare Health Services Private Limited, but we are popularly known as Nephro Plus. We are a 16-year-old company started by a co-founder who's a dialysis patient himself. And that's where the company realized that there is a huge demand, huge need for a pure play dialysis organization to kind of cater to this unmet need and this growing up need. So we started 16 years ago with one standalone clinic in Hyderabad, slowly, gradually ramped it up. We did a large acquisition, first acquisition in 2018 of Davita, which is world's second largest organization. Davita India business we acquired in 2018, and then we also realized to make a scalable impact we have to work with the governments, and did our first PPP project around the same time period. And then in 2020 we looked at creating a scalable impact and looked over to the overseas market as well. Our first entry was in the Philippines. Then we went to Uzbekistan, Nepal, and just a few years ago, we have done a joint venture in Saudi Arabia as well. So all in all, Nephro Plus today, fast forward 16 years, is operating 520 plus clinics in 5 geographies. In India, our home market, we continue to grow, and we've had a comfortable run till now. And there is a huge unmet need there. Talking about the market.
Right. Yeah, Rohit, I just wanted to get that perspective only, that how big this market is, you're talking about it, and you give me 2 perspectives. One is, of course, the Indian perspective as well as the Asian perspective where you are expanding.
Sure. So from an Indian perspective, I'll first give a size of the patients and unmet need there. So CKD, which is the chronic kidney disease space. So it's a stage of 1 to 5. 5 is when the kidneys have failed and dialysis is required. 1 is the transition that slowly when the kidneys are failing. So approximately 8.7% people have a CKD in India, which translates to close to 12.4 crore people. But India has low diagnostics, low percolation, healthcare facilities have still not gone to the roots of India. So there is typically 7% or 7, 8, 10% people who get identified. And in that, if you were to look at the ratio with the given present population, we should have somewhere close to 40 odd lakhs dialysis patients in India. Should have. However, as we speak, there are only 3 lakh active dialysis patients approximately. Again, there is these numbers that we have taken from our clinical research and our other papers. So approximately there are 3 lakh patients that are being serviced right now in India. So one can see that the percolation or the people who need dialysis, only close to 10% of them are getting it. So there is a huge unmet need in India, and with better facilities coming in, existing patients on dialysis will live longer. There is a huge unmet need, and then there is a burden because of the lifestyle disease that we all are seeing, diabetes and hypertension, which translates into renal failure later on. So all this put together, we can comfortably expect this segment to have a CAGR of anything between 20 to 24%.
Right. And the Asian aspect, especially, I want to talk about the expansion plans. Rohit, the thing is the growth outlook has been strong. The return profile for any international business in your segment is stronger. Interesting thing is your revenue contribution has gone up. It's almost 41%. Earlier it was 29%, if I'm not wrong. Now, global business expansion, will you look at more acquisitions or JVs? Or any organic growth you can expect? And if yes, any numbers if you can give it to the audience, especially in your global business front?
So great question, Sharath. I think, as I mentioned, that 6 years ago, we realized that we are poised with the best quality cost combination. And just to give a little perspective to it, India operates at close to $22 price point, which is probably the lowest in the world. Anywhere else we go, we operate in Philippines, it's $100 plus. We operate in Uzbekistan, that's $70 plus. Saudi Arabia is $250 plus. US is a $350 plus market. So you can understand the price per treatment in India is so low. So any organization that operates at scale and at that price point and is profitable obviously has a strong business moat and has a advantage to kind of go overseas and command in the higher priced markets. So India, as you mentioned in your presentation, is close to a $0.8 billion market, but largely dialysis market is considered to be around $79 to $80 billion dialysis services market. So that's the opportunity. We started with Southeast Asia. We are in CIS as well in Uzbekistan. And now we are also exploring GCC region, as I said, in Saudi Arabia. We are actively involved in developing business there, yet to start. So market is, the TAM, global TAM is $80 billion. And as I mentioned, there is a huge higher price point markets that are available. And with our quality cost leadership in India, I think NephroPlus is fairly well poised to grow in your geographies as well.
Right, Rohan, let's talk about the margin profile also, and I'm talking about the blended margin profile. There was the domestic business as well as the international business. It seems that 25 to 26% margin is like one of the highest margins you can get. Can we expect this margin outlook to touch 30% going ahead, like if you're pushing really hard on the international business, or can we say that we have come to that plateau region right now?
So, Sharath, to look at it, this is obviously depending on the geography we enter, the price point there is, and the cost structure, because healthcare, as we go out, delivery business is fairly regulated. So cost structure also modulates as per the price point. So it's not exactly transposable, but obviously India advantage plays a huge role there. So how we look at it is that we are expecting anything between 15 to 20% CAGR in the 3 to 4 years range on the revenue front. And our margin profile would remain in the similar range, while it will improve few basis point on annual basis because of the efficiencies of scale that will come in. So I think, and our ROCE, as you have also mentioned, that we have significantly swung it in the last 3 years. My sense is in a steady state, we should be having a ROCE of a 20 to 22% in that range, and growth rate of 15 to 20% on revenue on a 3 to 4 year horizon.
Right, so revenue growth around 15 to 20% and the ROC numbers, a little bit more expansion we can see, but yes, we are near the top. But what kind of acquisition plans, we can expect, especially because we have seen 2-3 international names which you have taken, but there must be other geographies also which you are studying. There are a lot of underpenetrated markets. Even in Philippines, we are already having the presence. So I wanted to understand, you have 113 crores in cash balance as well. Are you looking at kind of any acquisitions, or you're going to wait it out because you have already done some recent new ones?
So, great question, Sharath. I think it's important to kind of take a step back and understand how the growth happens in this business, right? So, we have three primary growth levers. One is our in-center growth, or the existing clinics, which grow on volume and price marginally. So that's the one growth lever for the company. Second growth lever is a clinic roll-ups in our existing markets. Like we are operating in India, we've been adding 30 to 40 clinics easily for the last few years, and we expect the momentum to continue. Similarly, in Philippines, we have scaled up. We entered with an acquisition of 6 clinics in 2020, and now we operate 43 clinics there. So you can see how we have scaled up in Philippines. So there's individual center roll-ups that happens, which is the second growth lever in the existing markets. And recently we have added 2 more clinics in Uzbekistan. We're operating 4, now we're operating 6. Smaller size, but there is footprint expansion that happened in that country. And the third, the largest and the most significant needle mover is new geography expansion, or a large M&A, or a large PPP project, state level or a country level. This is the third chunky needle mover on the growth, which is the most unpredictable. So the first model of organic and the price increase, we can fairly predict on a monthly to quarter basis. Second, center roll-ups, given our trajectory of the last 15 years, we can predict it on an annual basis comfortably, because there will be transitioning that would take time. But the third and the most important one, which is a M&A or a large PPP or a new geography, that is highly unpredictable. But we are confident that in a year to 2 year horizon, we'll be unlocking any of one of these levers.
So there is value unlocking here. We are short of time, Rohit. I just want one short answer from you, but it's very important. Are we expecting any price hikes? We are into the new financial year. I've seen your revenue per treatment numbers also going up. Little bit of plateauing definitely happening as we compare it to the last financial year. But Rohit, any price hikes we can expect from your key products going into this new fiscal?
So dialysis as a business, since it's chronic and life-saving, so it does not have a periodic price increase. But whenever the price increase happen, it's lumpy. So we just realized in November, I think, this last year, CGHS increased their price by 35%. But that increase came after several years. Similarly, in Philippines, we saw PhilHealth, which is a national insurance scheme, that increased their price in 2024 October. So in dialysis business, we have lumpy price increases, but the periodicity cannot be clearly defined. But we are seeing that trend, and this will continue on a mid to large term basis.
Okay, so that's the view coming in on a mid to long-term basis as well. But commentary has been strong, and the global expansion is something which the street is looking for. Thank you very much, Rohan, for giving it your time and giving the entire picture for Nephro Brand Plus of what's the entire company looking like, and especially the dialysis industry. That is where we get you the discovery. So that's a pretty interesting take coming in for the KYC stocks. And that's all, folks. And thanks for tuning into NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
when others are warming up and raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamar.
The first trading day of FY27 starts on a positive note. Optimism over Middle East war. De-escalation cheers the Lal Street today. Nifty snaps two-day losing streak, trading near 22,800 levels. All sectors trade in the green today. The board of HDFC Bank is likely to approve the reappointment of Shashidhar Jagdishan as the MD and CEO for a third term, citing satisfactory performance and sound leadership decisions. This comes amid speculations regarding sudden resignation of bank's chairman Atanu Chakrabarti on March 18th. Interglobe Aviation has appointed William Walsh as the new Chief Executive Officer. Walsh will take charge from August 3rd. This comes days after Peter Elbers resigned from his position as the CEO of the aviation company. The Ministry of Petroleum and Natural Gas announced a mandatory 25% cap on the monthly hike of domestic aviation turbine fuel or ATF prices. This after global ATF prices more than doubled to a record. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take a look at the market. It's first day of FY27's trading day and there is positive momentum seen in the markets also because of the many overnight overtures that have been made from both the sides, Iran as well as the US, for de-escalation of the Middle East tension, and that really has had an impact on the Indian markets. So at the current moment, Sensex is really gaining almost 1,600 points in trade and almost 450 plus points when it comes to Nifty 50. But remember, it's still below 22,800 level at the current moment, kissing distance to that. But that gives some consolation in terms of the kind of gain that and the recovery from the past losses that Nifty 50 has seen. Looking at the overall market, well, if you look at all the sectoral indices, they are trading in the green and the lead has been taken by the defense sector today. So that is really gaining by a huge margin compared to others. IT, metal, banking as also doing pretty well in trade. When we take a look at some of the internals which are contributing to Nifty 50's gains, HDFC Bank is coming in as one of the big gainers. Remember, this particular counter had been suppressed in trade, taking the wrath of its internal top brass as well. And now it's recovering with some leadership, commitment and visibility coming in for the future. Big boy Reliance Industries from the IT pack, Infosys, and from banks, SBI, the big boy, and L&T are also there in trade, which are really doing well. All right, let's take it straight to the top headline that we are tracking today. Sources are telling NDTV Profit that HDFC HDFC Bank board is likely to recommend the incumbent CEO Shashidhar Jagdishan for another term, as the CEO bank's board satisfied for his performance and also the leadership decisions that has been taken by Shashidhar in his last 2 tenures. So for more on this, we are joined by my colleague Piyush Shukla, who gets us the exclusive details on this particular development. Piyush, when we spoke to the HDFC Bank CEO last, they had really said he was really keen. What are your sources telling you?
HDFC, we are hearing from our sources that HDFC Bank's board is likely to recommend the incumbent CEO, Mr. Shashidhar Jagdishan, for a 3rd term in their next meeting on April 18, the next board meeting. The board is satisfied with Mr. Jagdishan's performance and also his leadership decisions taken during the course of our last 5 to 6 years. Jagdishan meets RBI's fit and proper criteria and other regulatory criteria as well for being a CEO of a bank. The current tenure of Mr. Jagdishan ends in October this year. With regard to the bank's ex-chairman's Mr. Atanu Chakraborty's resignation last month, people aware of the development say that the bank had taken action against the 3 senior employees who were engaged in mis-selling of Credit Suisse 81 bonds during Mr. Chakraborty's tenure itself. Bank also ensured timely listing of HDB Financial to ensure that they meet the RBI's upper layer NBFC regulatory requirements of getting listed by September 2025. Sources say that a few words that were used by Mr. Chakraborty in his resignation letter were not warranted. The bank has appointed an external legal firm to assess his resignation letter, and the agency is expected to come up with a final report and submit it to the bank very soon.
All right. Thanks so much, Piyush, for getting us all those exclusive details. And yes, the HDFC Bank stock is really gaining on the really continuity of the leadership coming in. Remember, the Herculean task of the merger of HDFC and HDFC Bank was something that this particular leadership has really taken care of. And there is more to come while meeting the regulatory norms when a merged entity is concerned. So that's what is really comforting this particular counter. Let's talk about the overall market then. Feroz Aziz, the joint CEO at Anand Rathi Wealth, joins in now. Feroz, looking at the kind of recovery that the market is seeing today, market is getting into the mood swing mode basis the escalation or de-escalation talks on war in Middle East. Now, how do you see the confirmation of this kind of a recovery and the path ahead in the short term?
Good afternoon, Nisha. I think, like I've always been saying, markets are going to be buoyant. Markets are, of course, in high-octane news dependency. That's what happens when stuff like this happens, when there's a war. Of course, news is going to drive it. A war, will it get over? The answer is yes. How long? We don't know. Right? So will the markets go back to 25,179, where it started falling from that weekend? It will. That's my judgment. Okay, over the last 12 wars, markets always, after the war finishes, have gone up 7-8% more than the level from where they started falling. This is a very, very reassuring data. War khatam hogi, wo to nishchit hai. Kab khatam hogi, pata nahi. But whenever it has happened, then the war is over, markets go back to that level or even more. There's only one instance where after the war was over, the market was still -7 from the where it started falling. So I'm reinforced that the market stability is there. One, when valuations are not so elevated, markets can't fall like a knife. That's very clear and data says so. So if the markets were to again refall 5, 7, 8%, I won't be surprised. But it'll recover very, very passionately in a very ferocious manner. So if you're a long-term investor, if you don't buy this dip, then I don't think you should be in equity ever. Because markets can fall next 5 days, 10 days, 15 days. This is 3 years. There is just one fund out of the total diversified equity funds, which is negative after 3 years. Only one fund. The rest of them are all positive. Even after at the worst part, which is the last NAV, 3 financial years. If someone were to hold it, he has still not lost money. There's only one fund which has lost money. There might be several stocks which have lost money on a 3-year holding, but diversified portfolio does it.
That's right, Feroz. And in fact, one of the key factors that the market is really taking cue from is the crude oil prices. So Brent crude, because of de-escalation talks, has come closer to $100 per barrel from the elevated levels of 116 and 17 that it had touched a few days back. How do you see the crude oil movement and that really putting pressure not just on the market, but of course it has the economic factor attached to it, where our import bill rises and a lot of our macro data gets impacted. So it's not just sentimental, but it also has a material impact on the companies as well as the macros. How does one analyze that bit?
Yes, I think whenever you look at a very high beta variable or a high standard deviation variable like crude oil, it's generally had very large standard deviations because it is a variable which gets impacted immediately during a war, especially in the Gulf region. So whenever you look at a variable like that, you have to see what is the peak it made. If it made 119, 120 as the peak, one is you can see that it went down to 90, came back to 100, went to 110, now cooled off again to 100. But how far are you from the peak is the most important distance you have to measure. Is the peak still ahead of us? I doubt that. If 121 was achieved in a short term, when I think it was 16th, 17th of March, it touched that, and then it has cooled off reasonably. I'm very happy that it's 19% or 18% from the top on the lower side. So if it went up again tomorrow, will the markets again become subdued a few more percent? Yes, it can. But I'm not too worried that it'll establish 150, 170, even 200. I read articles, brokerage firms, when it goes to 120, they start writing 200. When it goes to 70, people start writing 40. They just extrapolate what is happening over the last 1 month. So don't get carried away with recency bias on the crude price. But I'm happy that it's 18% lower than the peak it achieved, which is a very important thing to track.
That's right. In fact, Feroz, defense sector is the one which is gaining the most, and that has been highly volatile. There have been days when it has fallen the most also. While a lot of experts say that defense will not start showing results immediately because there are long tenor orders which will need to be fulfilled. So it's a long haul game. But the sentiment of the war is also impacting defense. How will you play a sector like this?
See, I will play that sector completely bottom up. If I have to play that sector, you have to play it bottom up because each of these stocks are not very highly represented in the top 100. There's hardly any representation of that sector in Nifty 50. Okay, so what kind of free float each stock has? Generally, in times like these, any stocks which have a very low free float in terms of rupee terms or percentage terms, they suddenly shoot up. If three FIIs decide on a specific stock, it can go up 40%. So low free float stocks could be very scary, in my judgment, after the rally. Because the rally may not be too many people have not created that rally. 2-3 people can decide and create a stock, create a movement in the stock of 30-40%. So play it bottom up. If you're already buying a stock which has risen, be very clear that you buy a very high free float stock. Or just buy the defense index, maybe if you don't want to, or buy a defense mutual fund. HDFC has a fund, you can buy that rather than buying an index as well. So there is some degree of active management needed. You buy it for 3 years, it'll pan out like you rightly said, Nisha. But if you're buying specific stocks, don't buy low free float stock, especially at this stage of the war, where the war could also be cooling off rather than increasing its momentum.
That's right, Feroz. So be defensive when it comes to the defense sector and also be judicious. But which are the sectors which you will say, Feroz, are absolutely, because of the overall market fall, they are also impacted in terms of sentiment, but are now at mouth-watering valuations, and these are the sectors where accumulation can be safely done?
See, when you are in the eye of the storm, I generally recommend diversified strategies because you don't know where you're headed over the next few days, especially when you're buying stocks yourself. If small cap has corrected reasonably and mid caps have corrected reasonably, I would say buying small and mid caps is safer than buying one or two sectors. Like banking was, of course, one of the cheaper sectors, and I liked it. ABC, I used to call it auto, banking, and consumption. and defense, ABCD, right? But banking had a sudden surprise, as you know. So point I'm trying to get to is when you're trying to make 17-18% from equity markets, your odds are highest when you buy today. But when you buy today, just buy diversification is what my belief is, because sectors could be a lot more riskier. If you want to make 30% compounded for the next 2 years, then you have no choice but to go into stocks and specific sectors. But I think people should not be too greedy at these moments and buy more diversified. But if you really want to put, if I had to put my money in a sector, then definitely it will be private sector banks where they stand today.
Yes, private sector banks, that's what is giving comfort to the market. And yes, banks have taken a hit because of the overall nervousness whenever it crops up because of the war situation. Thank you so much, Feroz Aziz, for chatting with us on your market expertise and your insights. Thank you for joining us. All right, let's take it straight to some of the big developments coming in from the corporates today. And Adani Ports has crossed a major cargo milestone of 500 million tons and set sight on doubling this by 2030. Puneet, my colleague, has the latest details and also the developments and the targets the company is setting sail towards. Tell us, Puneet.
Well, thank you for that. It's definitely a major milestone hit in India's port as well as maritime sector, because 500 million ton cargo volume has been hit by Adani Ports at this point of time. There's also emphasis the long-term ambition that the company has and taken to the 1 million ton target essentially by 2030, as you rightly mentioned. Now, management has also retained that roughly 850 million ton cargo will be done via domestic by 2030, and the rest 150 million ton cargo target will be achieved by the international ports that the company has, almost 4 of them now at this point of time. So the diversified strategy is working out very well. When you also look at the integrated network that Adani Ports operates, roughly 15 ports around with 11,000 kilometers of India's coastline, both on the west as well as on the east coast, and roughly 4 international ports on helping the east-west global corridor as well. The logistics side of the business is also seeing strong momentum at this point of time, covering roughly 95% of India's hinterland, and helps with a nationwide connectivity with almost 12 multi-modal logistics parks for the company as well. And the third key segment, which is the marine segment, where they're connecting international waters with the global ports as well, with their 180 nearshore tugboats amongst others. So there is a strategy there in terms of doubling their port volumes till then. And within those segments, logistics as well as marine are some of the additions that will be seeing with scale over the next 5 years.
Right. Thanks so much, Puneet, for getting us all those important details. And let's shift focus to another Adani Group company, which is Adani Green Energy, which delivered over 5 gigawatts of capacity in FY26, setting a global greenfield expansion record outside China. Its operational portfolio now stands at 19.3 gigawatts, led by the rapid execution at the Khavda Renewable Energy Park. In fact, my colleague Mahima joins in with all the details. Tell us, Mahima.
Right. So, Nisha, as you rightly mentioned, Adani Green Energy has delivered the 5 gigawatt commitment that they had made for FY26. This marks a global high for greenfield expansion. Of course, not considering China in this, it's achieved an annual capacity addition of 5 gigawatt, highest by any company globally in a single year, barring China. The operational portfolio has risen now to 19.3 gigawatt, reinforcing market leadership in India's renewable sector. The scale is anchored by rapid execution as well as this happening at the world's largest renewable energy plant in Khavda, Gujarat. Out of the plant, 30 gigawatt by 2029 at Khavda, Adani Green has already installed a cumulative capacity of 9.4 gigawatt there. The new capacity addition of this breakup of 5 gigawatt overall, 3.4 gigawatt was solar, 0.7 gigawatt was wind, and 1 gigawatt was hybrid, that is wind and solar both. With regards to battery energy storage system as well, at Khavda, the company has also bought in an initial 1376 megawatt hours of battery energy storage system at Khavda, and this is one of the world's largest single location deployments. The capacity was commissioned within 8 months of starting work at the site, supporting grid stability and renewable integration as well. So this is the overall view on the recent development coming in from Adani Green.
All right. Thanks so much, Mahima, for getting us all those important details. Now, let's focus on the aviation sector, which is impacted a lot because of the crude oil prices, the ATF prices going up, and several other aspects. Let's first focus on Indigo, and that share is really, that stock price is really gaining in trade today. Weeks after the abrupt resignation, remember, of Peter Elbers, well, Indigo has named William Walsh as the new Chief Executive Officer of the company. William Walsh is currently the DG of IATA. And for more on this, we are joined by my colleague Danish, who gets us all the details on this development. Danish, tell us.
Well, William Walsh will be stepping into the role of Indigo CEO from the 3rd of August. And if we look at Indigo's history, he will be the 5th CEO and the 3rd expat CEO for Indigo. But if we look at his experience, he has over 4 decades of experience in the aviation industry. He started as a cadet pilot way back in 1979. And then we saw that he served 3 different stints as a COO and the CEO of Aer Lingus, IAG Group and British Airways. But he's going to step into the role of Indigo in a very challenging time. We are seeing that the ATF prices have literally hit the sky high. They haven't been this high in India's aviation history. On the other hand, Indigo is still navigating itself from the FDTL issue that happened in November. And now, on the other hand, we are seeing that because of the airspace closure over Pakistan and over Middle East, this is hampering Indigo's growth plans of international operations. But with the Willie having a great experience of international operations over the past 3 decades, we can really expect him to really turn around Indigo into a major global airline. And in fact, the previous CEO had set a new benchmark, and he said that he really wants Indigo to move from the LCC stage to become more of a hybrid airline. And he said that at that point in time when Indigo had just ordered wide-body aircraft. So Mr. Willie Walsh will be entering as in Indigo's cockpit on the 3rd of August, and it is expected that he will steer around Indigo. Especially, he could give Indigo a major choice to become one of the big global carriers in the times to come.
All right. Thanks so much, Danish, for getting us all those important details. And of course, Indigo's stock is really comforted by this particular announcement that is coming in. But remember that the aviation sector on the whole is in focus, also because of the kind of pressure that the aviation turbine fuel price really puts on this particular sector. In fact, the Ministry of Petroleum and Natural Gas has announced a mandatory 25% cap on the monthly hike of the domestic aviation turbine fuel prices. This after global ATF prices more than doubled to a record level. Remember, it's linked to the crude oil prices and it has been spiking. Let me also get in the experts to talk about this. We have with us Amit Mittal, who's the director of Aeroin Intellect Aviation, and we have Prabal Sen, the VP Equity Research at ICICI Securities. Gentlemen, good to have you on NDTV Profit. Prabal, what does this really mean for the sector? First was the cap on the flight prices being lifted, and the second, there is a cap of 25% hike in a month on ATF prices. Will this give enough comfort to the sector?
So I would refrain from commenting on what the impact is going to be on aviation. From an OMC standpoint, obviously it again increases the losses in the system by a significant degree. So, that's something that is again marginally negative. When we saw the price increase being affected, that is, if the full price increase is actually passed through, then that would obviously mean the OMC profitability at least gets compensated partly, because remember that petrol and diesel prices are still being held up. So those losses are anyways fairly significant. As for the impact on aviation, I don't really track the aviation sector.
No, all right. So from the OMC's perspective, this is coming in as a big hit, Prabal. And yes, there will be a marginal impact on their profitability as well, is what you're saying. If you're penciled in any numbers, I'll urge you to speak on that as well, that how much of an impact, considering that crude oil prices or Brent crude remains elevated above $100 to $101 per barrel, what is the kind of impact in a month's time that you could see on the OMCs because of this particular cap coming in?
Honestly, aviation, while it is a major part, but the bigger impact still comes from the losses that are there in petrol and diesel. If I look at aviation as a percentage of
overall products that are sold by the OMCs, it is still under 10%. So while this cap, and remember from what we understand, international ATF that is being provided for international travel, even from domestic sources, those are obviously going to be priced at a different rate. So this is primarily applicable to the domestic fares or the domestic usage of ATF. And so, on an overall basis, what we have basically looked at in terms of OMCs is that if this war continues to sort of last for maybe about 2 more months, earnings for all the 3 OMCs get cut on an annualized basis for FY27 by between 40 to 70%.
That's a huge amount, Prabal. Yes.
Yeah, but that's not including just ATF. What we are talking about is essentially
the overall
impact of petrol, diesel, and everything else, LPG and all of that.
Sure.
You would have seen the report that LPG losses are also widening quite a bit.
All right. A quick question from Amit Mittal as well. Amit, is it significant relief coming in, the cap on both ATF price increase as well as the cap lifted on the flight tickets?
Yes. So basically, thank you for calling me here. In ATF, almost comprised of 40% of the operating cost of the airline. And airlines were facing dual pressure. One was the longer routes because of the geographical restrictions, and second one was lower traffic on international routes. So increasing the airfares, ATF prices will have the impact on the overall operating cost of the airline. On the other hand, lifting of the cap on the airfares will give some headroom to the airline to mitigate the operational cost.
Right, but overall, how do you see, Amit, this particular quarter panning out, considering that the oil prices remain elevated, and at this particular point, the airline sector is not just facing the crude impact, but also many routes are changed, and even commuting is difficult in a war situation in several geographies.
Yes, in this particular quarter, of course, all is linked to the situation in the West Asia. And as an aviation professional, I would like to say that, of course, there is a huge pressure on the international air traffic. On the domestic front, the passengers which are coming from abroad or who plan to go from India from various cities, those connectivity routes will be affected a lot. Because there is a percolating effect of international traffic on the domestic sector as well. And overall sentiment is that airlines are facing a lot of pressure in terms of ATF prices as well as other aspects related to operationals like the longer routes and everything. So this quarter is wait and watch, and everybody is keeping his fingers crossed that the war situation should get over and stability should come. So that the ATF prices come back to the normalized prices which were earlier. It were around 96,600 per kiloliter in Delhi. Now it is around 1.054 lakh per kiloliter in Delhi.
All right, Amit, that point well made, but today is a good day to talk about it because the crude oil prices, Brent crude, has come below $100 per barrel after a very long time. Thank you so much, Amit and Prabal, for putting some insights into the new developments coming in both oil, OMCs as well as aviation. With that, it's a wrap on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up and raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hira Dadia and Sharad Dubey, who's standing at the NDTV Profit market pit with all the action in the markets today. Good afternoon, Sharad. It seems, markets have actually played the April Fool's prank today.
Well, yes, good afternoon, Hiral. Yes, the markets have played a prank, and the prank is from the bulls to the bears. But look at that. The strong momentum has been holding. It's up 500 points, Nifty, and the same thing is mirroring for Nifty Bank as well. Interestingly, the VIX has also cooled down. That makes it a good momentum for the positional setup as well. Interesting, Nifty Bank is at day's high, Hiral. That is where a little bit of strength is coming. India VIX, that's down 10% as well. That's a good sign coming ahead. But will this continue or not? That's something to look out for. This is a wonderful Wednesday, and April FNO series, you can say it's a very good start on that. The de-escalation buzz coming in from both sides of Iran as well as US, especially from Donald Trump. That's what we'll be looking at. The Brent crude also saw a little bit of correction. Traders' strategy is the sell on rise markets till now also, and they are sticking by it. The third important trigger for the markets for you to track is that fresh investment positions are being made at this is the first day of the fiscal year as well. So you can see some purses loosening their strings as well. The value buying we are seeing continuously in the small and mid cap space. And apart from that, interestingly, the India VIX has fallen 10% near the 25 level. Now the positional setup does come into play as well. Little bit more fall, and then it becomes a good positional buy. Rupee bond markets, remember, is shut today, and the markets are factoring in the future apart from the war, and that includes macro data, AI news, and the Q4 updates. That's where the focus is coming in. But tomorrow is a very important day. Tomorrow 6:30 a.m. Trump's address on Iran. That is what everybody would be looking out for. But today itself is a great day, Hiral, when it comes to the markets, be it the large caps, mid caps or small caps. All of them are doing really well in the trade.
Okay, so interesting moves, bulls to bears is what you're tracking right now as we speak. But let's quickly look at the watch list, in terms of what we're tracking. Indigo, the hike in ETF prices is not something which is impacting Indigo, and it's lower versus what the street was estimating. DMart has opened 12 stores in just the last couple of days, and that's what is giving it a fillip. Trent has also rebounded post a 52-week low, and I think it's taking cues from what a DMart has done and the positivity that is surrounding a DMart. Adani Ports is buzzing in trade on the 500 million tons cargo milestone that they've crossed, and Adani Energy has delivered 5 gigawatt commitment in FY26. Ganesh Ecosphere is buzzing in trade on the back of the 40% recycled content, which is becoming mandatory. And Samman Capital has become a IHC group company. GRSC has received the highest ever turnover, and that's the reason why that stock is buzzing. But along with that, you have a Garden Reach, you have a Cochin Shipyard, all the others which are buzzing in trade as well. And Zaggle is expecting 40% growth in FY27. That's a strong guidance that's coming in from the management. Godrej Industries, again, a strong volumes there. Westlife, on the back of the commercial LPG price hike, is down in trade. Jubilant has renewed its 5-year Domino's franchise contract, and that's giving it a fillip. Accutas, that stock is up 71% in the last 6 months. What's happening on that front? And you have BSE Angel One on the RBI framework, which has been deferred by 3 months, is what is giving a fillip to your capital market stocks. So that's what the watch list is looking like. But Sharad, over to you to take the rapid fire with Sachin Janardhan of IDBI Capital.
Thanks a lot, Hiral, for that. Good afternoon, Sachin. Always a pleasure to have you. The first one in the rapid fire, the company in focus would be Avenue Supermart. Strong store additions and a good technical reversal. What would be the first stock? It's actually Trend, the first one, sorry.
The overall trend, we can see it was in a downtrend, and right now the bounce has been happened around the 161.8% of the previous down move, basically. So this is a good support. If 3200 is been holded, we can see 3900 in the near term.
Right, and the next stock is Ganesha Ecosphere. I want to take your views on that. Stock has run up, especially on the announcement coming on the recyclable PET bottle manufacturers and their capacity in the food packaging segment. Your views on it? Good time to take a profit on this, or say stay invested?
One can stay invested, as currently the stock is locked in a 20% upper circuit, and we can see more upside till 1100 and 1150 levels.
All right, 1100 to 1150 levels is something to watch out for. The next stock is Godrej Industries. Of course, volumes have picked up. Sachin, your view on that?
So Godrej Industries, today's bull candle has been like missing for many days. So this is, we can say, this is a kickstarter for Godrej Industries. On a long-term time frame, today if we are closing above the 200-week EMA, which is around 866 level, then we can see around 1000 levels in Godrej Industries.
Right, and what about Westlife Food World? Your views on that? Important levels to track, Sachin?
So Westlife, even we can see the previous week low is very much important, as it was a double bottom type of a pattern, which is 398 levels. If we are holding that levels, we can see 540 and 595 levels in the near term.
And a play from the chemicals Accutas. The stock is up more than 70% in the last 6 months. How the charts suggesting the key levels for this stock, Sachin?
So overall today only it has like formed a bearish engulfing type of a candlestick pattern, which is bearish in nature. It is down by 8%. But however, the near term support levels are 2100 and 2089 levels. If we are holding that levels, we can again see the 2600, 2700 levels. But buy on dips will be a good strategy, not today.
Right, it's not today, but buy on dip strategy would be there. Sachin, your views on Samman Capital now? IHC is the promoter of the company. Already important corporate development has taken place. Your views on that?
This stock actually, many of the companies, wherein it is always into the ban period, basically we normally avoid this stock because the trend is also not like good. Today actually it has taken us resistance around 78%, 78.6% around 155 levels of the previous down move from 162 to 129. So I think stay away from this stock.
Sachin, your views on Garden Reach, good volume pickup and price action we are seeing in this counter?
So today again in GRSC we haven't seen such kind of a bull action. Almost 20% the stock has moved, and this is really a very strong price action, and that too from the 61.8% from the previous up move from 1184 to 3500. So this is a very strong and short to medium term upside. We can see 2600 and 2900 as well.
Right, and medium term setup looks strong for Hoodco. We saw good operational update also. Sachin, your views on that?
So Woodco today I have noticed basically it has made on a weekly chart double bottom pattern, and if we are closing above 170 levels, which will be very crucial, which is 200 week EMA, we can see in a near term 200 levels in this stock.
Right, and your views on IREDA? From the top, the stock has seen a good correction, but today it seems the volumes are back in this counter. Your views on that and key levels to track?
So from all-time low to all-time high, the stock has right now around 78.6%, which is a superb support levels. If we are holding 105 levels, we can see in the near term 127 and 142 on the upside.
Let's get in M&M and Maruti. Both of the stocks have come out with their March numbers as well. Operationally, the numbers are decent. Good up move chance you can expect in the auto counters, especially M&M and Maruti.
So compared to M&M and Maruti, I will prefer M&M, and that too with a strict stop loss of 2800. If we are holding 2800, we can see 3300 on the upside.
All right. Thanks, Sachin, for the rapid fire. Over to you, Hiral.
Okay, so that's with regards to where, the rapid fire goes. But let's quickly look at the stocks which are trending on Google. Let me pull up those one on the screens and see what's happening with stocks which are, in focus. I'm sure there'll be a whole host of them. Tata Motors, again, this is on the way the auto sales numbers have panned out. SBI, NSDL, Hindustan Foods, BEL. Few of the names which are pretty active. BEL is what I want to pick up. Sachin, a quick view on a BEL.
So on a defense sector, basically this is one of the best stock which I love, because the trend is super. The trend is up, the momentum is up. Even the structure of the stock, whenever it comes around 20-day or 50-day moving average, this is a short buying opportunity. Today we getting a bounce from the 50-day moving average. So we can see around 470, 480 levels on the upside in the near term.
That's with regards to where the stocks which are trending on Google go. But thank you so much for joining in, Sachin. Always a pleasure to speak to you. Moving on, Page Digitech. That's one stock which has been in focus on the back of the order win. Venugopal Rao, Madisetti, Chairman and Managing Director, joins in. That stock is seeing gains of nearly 8.5%. Sir, if you could help us understand details of the order and, what's the kind of revenue recognition you're seeing?
Yeah, good afternoon. This is an order from NTPC for the, we are going to provide the energy storage for their, super power plant in Bihar, Nabinagar, where they would like to run the plant at an optimized level, so that now the demand is varying. So naturally, they are losing the ramp up and ramp down time. So by adding this energy storage, the plant can run at optimum levels. So that is the scope of work, and we'll be supplying and executing the project and maintaining the project for about 11 years. That is the scope which we have signed up with. And this project value is about 494 crores basic value plus the taxes extra. So we'll be commissioning this project in 15 months of time.
So how much revenue will you recognize in FY27, and how much of it will be spilled over to FY28?
About 70 to 75% will be recognizing in FY27, and the balance will spill over to the FY28, in the Q1 of FY28.
Right, Mr. Rao, Sharad here. Good afternoon. Mr. Rao, what's your current order book currently standing at, and BESS, the battery energy storage segment, how much of that order is there in the total pie of the order book?
The total order book is quite healthy now. We have crossed 11,000 crores order book with this new order. And out of that is about 8,300 goes towards the energy storage. That is the main focus for us now in terms of manufacturing and deploying the projects. And the balance of 2,700 crores is from the telecom, which is our ongoing and existing business. So put together, it's about 11,000 crores we have crossed, and some more also in the pipeline. Though we have been announced as L1, we have not yet got the orders in hand, which is going to happen probably in this month of April.
So just a follow-up question, what's the revenue visibility like on this order book right now? Is it safe to say 12 to 18 months, or is it more?
It's 15 months is the completion time. So as I mentioned, about 75% of this revenue would be recognized in this financial year towards Q3, Q4. And maybe about 20 to 25% would spill over to the Q1 of next financial year.
Okay, so tell me one thing, sir. So if you have to look at the way the order book has been panning out currently, what is that outlook looking like if you have to look at FY27 as a year? Because in Q3 itself, a double-digit revenue growth is what you were looking at. You know, you did see some bit of margin contraction, but you had said that from here on, there will see some bit of stabilizing as well. 2,600 to 2,700 crores is your guidance for FY26. 27, 3,100 to 3,000 crores. Does this remain on track, or do you think it will better from here on?
For the FY26, it is in the same lines, what we have with the guidance provided earlier. So it is on track. And for FY27, it could even better that 3,100 number, because we have all the orders in hand. So we would be probably increasing more, So as I said, we have the orders, and now we'll be focusing on the execution part. And once probably after Q2, we'll come to know that what is the exact number, but it will be better than the guidance numbers.
Thanks a lot, Mr. Rao, for that, giving an entire picture about Pace Digitech and its recent order win. And moving on, we are joined in by Ghulam Zia of Knight Frank. Good afternoon, Ghulam. Always a pleasure to have you here. But the reality space itself, especially the Mumbai metropolitan region, a little bit of concerns is definitely coming in regarding the overall registrations and the price changes. And interestingly, the government has also come out by not changing the ready reckoner rates in Maharashtra, at least for this financial year as well. Your views on the Mumbai realty setup right now?
Good afternoon to you and all your viewers. Mumbai real estate is behaving slightly strange compared to most of the other cities. Like if I talk about Delhi, Bangalore, there is a very visible slowdown in Delhi. We were expecting even Mumbai to behave the same way. However, the February that we had last month, we had fantastic sales, record-breaking numbers. And so is March. Even March, we have done 15,500 plus kind of number of transactions in Mumbai, which is the best March month for a decade and a half. So the numbers are not yet showing any slowdown in Mumbai at least. While what you're talking about is spoken about everywhere, developers are privately talking about a slowing down market transaction numbers, etc. But at least on registration numbers, it is not showing. One of the reasons perhaps is typically March end is when most of them close their books. And that's where you do see bunching up of a lot of sales just to show that the year is ending well. So that's what I would typically, not look at March numbers with much conviction. But that said, even February had behaved very differently than what the perceptions were. So very stark contrast. While rest of the country is showing slowdown, Mumbai has nothing to talk about as far as any kind of a slowdown is concerned. So real estate in Mumbai is going great guns. The upper end continues to show the same numbers, the very, very stable numbers that we are looking at for the super luxury segment as well. It's only the lowest end where we do see some kind of restacking. Below 50 lakh numbers have actually shrunk a lot, but above 1 to 5 crore numbers have actually shot up. Otherwise, the markets are stable. So net, Mumbai is not behaving the way rest of the country is.
Interesting take on that, but Ghulam, I just wanted to get your views on the larger organized players and especially the listed players also. So these data which you're talking about, it augurs well for them because most of the categories they are actually functioning in is above that 1 crore rupees per flat range. So your views on the organized and the larger players in Mumbai?
Well, another very important thing that you and your viewers must also remember is that while I spoke about regional differences, like Delhi was the first one to fall about a year or so of a slowdown, very evident one. The southern markets, the Bangalore, etc., have also been showing clear signs of slowdown. But Today, there's a huge difference compared to a couple of years back. Most of the developers are today national. I'm talking about listed players. And a few of those players that are, say, from Bengaluru or Delhi, but operating very actively in Mumbai, continuing to show good growth because Mumbai is supporting their numbers overall. So that's a big difference. While Mumbai developers, especially the listed players you're talking about, are reaping rich benefits out of the consumers, looking out for reliable and more respected developers, which typically means the listed players. So the numbers, at least as far as the listed players are concerned, are looking really good. The non-listed players, the private developers who are still, not looked upon with much of a conviction, are showing much more slowdowns. But at least the listed players have nothing to worry about. Mumbai is giving them good numbers to compensate for the losses in other markets.
All right. Thanks a lot, Ghulam, for that and giving us an interesting perspective on the Mumbai realty segment. But joining us is Gaurang Shah. Good afternoon, Gaurang. Always a pleasure to have you. You spoke about Mumbai realty players actually doing well as compared to the NCR or other south-based players as of now from Ghulam. Your initial views on the realty play, the entire Nifty realty pack has taken a big beating in last year. The index itself is down more than 15%. Your views on it. Good afternoon.
Thank you, Sharad, for having me on the show. Good afternoon to all your viewers of NDTV Profit, and to you a small disclosure that all recommendations that I'll be sharing with you this afternoon on your show, Sharad, they are part for fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share recommendations on similar lines with our clients. They might have their investment interest. So yes, Mumbai has done totally opposite compared to some of the other metro cities pan-India. And I think this run rate is going to continue. And I would definitely agree with certain extent as far as bunching up of sales is concerned and showing them in the month of March so that your financial year ending looks a little bit rosier. Having said that, I think a lot is happening in Mumbai, Sharad, be it from a new development to redevelopment and to big society redevelopment. So this redevelopment tag is actually picking up quite space, and it is actually inviting a lot of players who are outside Maharashtra or Mumbai to come and start up with redevelopment. And we've heard names like Shobha and Prestige already putting their foot in Mumbai redevelopment market. So, and of course the big ticket size flats are still going quite well in terms of registration. So we are positive on the real estate sector, Sharad, but a small caveat or a disclosure that despite of all the regulations and all the discipline that the government wanted to bring in, real estate sector still remains a high beta, high risk, high return. That's the kind of behavior that real estate gives you. Some of the companies that where we have coverage, DLF, Godrej Properties, Shobha Limited, Oberoi Realty, Prestige Estates. These are some of the names wherein we have fundamental coverage.
Okay, this is interesting to see in terms of what's happening with the real estate players, specifically when it comes to Maharashtra. But moving on, Avenue Supermarts is in focus as well. And if you see the kind of store additions that they've done over the last couple of days, that's astounding. Stock is up as 7.5% at the day's highest levels. Mahima joins us with all the details.
What's happened in the last 4 days is that they've constantly and repetitively announced their store additions. In the past 4 days, they've opened 23 stores. On 31st of March, they announced opening of 12 stores. On 30th, around 7 stores were opened. On 29th, around 3 stores, and on 28th, around 1 store. And this is been continuously the case in the past 1 month as well. For Q4 entirely, 58 new stores were opened, and FY26, if we take a look, they've opened around 86 stores, which is much more than the average of store opening that they do in every year, which is around 40 to 50 stores. Now, overall, brokerages have different views on this. Elara has said that strong store addition is completely a beat versus what they were estimating in FY26. And because of this, revenue growth potentially will move towards 18 to 20% in FY27 versus that of 16 to 17% earlier. So, significant uptick in terms of revenue growth also coming in from these store additions. As per Morgan Stanley, strong pace of store opening augurs good revenue growth in FY27. CLSA has also said that because of strong store opening as well as accelerating like for like, the sales momentum should pick up from here on. And not just that, they're also doing geographical expansion in cities where they're not present, and tier 2 and tier 3 cities is where they're focusing on, and this should accelerate their overall performance. So this is the overall view. Plus in the last 4 days, if you take a look at the stock as well, it's been resilient, up 7%, and today also seeing growth of around 5%. So almost up 12% in the past 5 days.
Okay, strong moves there. In fact, from the consumption pack of Jubilant Foodworks also, which is in focus because they've renewed their franchise agreement with Domino's Pizza for the next 15 years, and then they have an option of another 10 years as well. That stock seeing gains of nearly 2%. A view, Gaurang, when it comes to DMart, because you have a trend also which is taking some cues from DMart today, seeing some smart moves, and you have news coming in on a Jubilant Foodworks.
Hi, Hiral. Good afternoon to you as well. So, as Mahima was elaborating the number of stores that DMart Avenue Supermart has opened up, I think that fits perfectly well with the blueprint that they had actually laid out last financial year and the year before that. And as we all remember, Hiral, that there were some misses or disappointments in terms of numbers the street expected and what Avenue Supermart delivered. We remained confident and we remained optimistic about the business commentary and the outlook of future growth. And that's what is exactly translating now, from focusing into tier metros and tier 2 cities, they are going into tier 3, tier 4 cities, getting a larger base in terms of market share and a larger audience in terms of footfall. We do have a positive coverage on Avenue Supermart. That's the disclosure. Second question, I believe, was on Jubilant Foodworks. I think they have done away with Dunkin' Donuts, which was actually sitting as a SOAR or a weightage on the balance sheet. Renewal of the franchise for 15 years augurs extremely well. And if I'm not mistaken, Jubilant Foodworks also has a franchisee in our neighboring countries. For example, Sri Lanka, Nepal, etc. If I recollect right. Third was on Trent. Yes, Trent was a star performer, but the last year, a year and a half, it has been a disappointment in terms of performance, financials. Guidance was also very, very conservative. Market took it negatively and the stock price was down and out.
Right, Gaurang.
We do have the whole recommendation on Trent.
Sure. Another stock is there, Zaggle Prepaid. They came out with its guidance and a consolidated revenue growth of 40% is expected in FY27, and important numbers also being shared by the management. Your quick views, Gaurang, on Zaggle Prepaid?
So Sharad, I vaguely recollect, we don't have coverage on Zaggle, so I won't give a buy, sell and hold. But I think there was an IPO note when the IPO had come out. And after this correction, a lot of companies which came out with IPO in the last year, year and a half are virtually at the IPO price or below that. I don't recollect how much was the floor price for Zaggle. But I think the mix of product and customer acquisition should augur well. I won't give any specifics, buy, sell and hold. But with this changing times, I think this company should also do well.
Okay, that's the view coming in for Gaurang. Gaurang, we are out of time right now. Thank you very much for taking your time and giving your views in trending stocks. That's all, folks, from me, Hiral, and the entire team that has put together trending stocks. Up next is Lunchtime Trades.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. On Saturday, how to...
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to Profit Insights. The battle for Jayaprakash Associates has now reached the apex court. Vedanta knocks on the door of Supreme Court after the lenders approved Adani Group's resolution plan over Vedanta's higher headline figure bid. While Vedanta offered a larger total value, Adani's proposal stood out with higher upfront cash and a faster payout timeline. To speak on this particular matter and what it really means for not just the resolution plan under the IBC code for JP Associates assets, but also in the context of IBC's resolution and the precedent being set with this particular battle, and several aspects to be discussed here. We have a whole host of experts joining in. Let me welcome on the show Sanjay Asher, who's a senior partner at Crawford Bailey, and Abhizar Divanji, who's the founder of Neostrat Advisors. Gentlemen, good to have you on NDTV Profit. My first question to you, Sanjay, with this matter really reaching the apex court, with the precedents already set, what is your right now perspective on the matter?
Oh, see, the principle is very, very well laid down, which is the wisdom, the commercial wisdom of COC will always prevail. It's a commercial decision of the COC as to where is the value maximized, and on the basis of the bids submitted, whose bid is maximizing the value as far as the creditors are concerned, as far as the COC is concerned. So COC, in their wisdom, in their commercial wisdom, after scrutinizing all the bids which they would have received, they considered that Adani's bid is the one which is most commercially acceptable and is it maximized the value for the creditors, and therefore they accepted Adani's bid. The
All
legal
right.
position is very clear on this.
All right. So, Sanjay, I'll come to you for more technical aspects on what you just stated. Abhisar Divanji, in a case of resolution where recovery is incidental incidental as the ethos that IBC really follows, how much of the headline figure of the amount being bid really matters in the decisions being made?
The headline figures don't necessarily matter, Nisha. And the reason for that is that what really matters financially is the net present value of what can be derived out of a bid. That's point number one. Point number two is because upfront everything is not paid in cash. If everything was paid in cash upfront, there's no question. You compare dollar to dollar, whichever is the higher dollar gets it, and that's the end of it. But where there is a plan of getting money over a period of time, then the concept of credit risk comes in which, as Sanjay also just said, the creditors are best suited to actually comment on it or opine on it. And they may believe that the probability of collecting of cash under party A is better than that of the party B, and hence they would choose, party A over party B. And that's really how they would work it. So they would look at the credit risk element or the probability of recovering of those headline numbers is of prime importance to any creditor. Third thing, as again Sanjay Ashar highlighted and is very important, that value maximization is a subset of resolution. Now, resolution here has a much larger meaning. Is the potential buyer able to provide employment to everybody, to make sure that all the other suppliers get paid on time, to make sure that the enterprise value that creates is going to be for the larger enrichment of all stakeholders? That commercial decision can only be taken by the creditors as per IBC.
That's right, Abhisar. The main highlight here, the principle that is followed is the resolution of the assets of the business, and therefore the recovery is incidental in this particular matter, and you very beautifully explained that particular bit. But let's take it to Deven Choksi, who's the MD of DR Choksi FinServ. Deven, this is a fight for the assets which are most valued for both the large groups, Vedanta as well as Adani. Adani at the moment, considering that the matter is sub judice, is the winning bidder. How do you see these assets really adding to the heft of the group?
Well, Nisha, thank you for having me in the show. I believe that it's a shot in arm for Adani's. I think you got, possibly the assets at peanut values. I think if you look at it from a perspective of how these assets would get built into further as far as the group is concerned. On one side, you have got a 6.5 million metric tons per annum capacity cement plant, which may further require infusion of capital largely for the purpose of efficiency. But that is one asset that they have. On the other side, I think they have got the thermal power generation assets, which they have with them. They have got 4,000 acres of land bank available with them, where the projects are going to be probably taking shape over a period of time. All aviation assets, like your hangar assets, as well as some private jets, they are also coming along with it. And some of the assets, which are basically requiring the kind of a port and the logistic management activity, which is in your fertilizer business, that is also coming along. So frankly, for Adani Group, all the assets are already operated by different companies, and they're getting at a fraction of price. Frankly speaking, of 14,500, 15,000 crore kind of money, the fraction of price for a company which is basically already following about 55,000 crore kind of a debt already. So from a perspective of, looking at this asset, it makes a lot of sense for Adani Group as a whole. In my viewpoint, the way in which they operationalize these assets over a period of time, in which I believe creditors committee must have seen it, I think they could possibly turn these assets into significantly high amount of valuable assets, which comparatively Vedanta would not have presence across all these assets which Adani is having. So the creditors must have seen merits in them. And that's where I see the higher value proposition, which is coming up for Adani Group as a whole, if I may say this.
That's right. It's a large group and there can be complementarity. But if I caught it right, Deven, are you saying that the complementarity as well as the resolutions of the debt-laden assets could be a better fitment for Adani versus Vedanta, because of which the decision may have been taken by the Committee of Creditors?
Yes, absolutely. I think creditors would definitely look at all the aspects, and they would also look at, I think, the further prospects for themselves, even though I think they have taken haircut with Adani coming into play and probably, I think, operationalizing these assets and creating further value out of it. There is a commercial angle attached to it for even creditors also for future lending. So in my viewpoint, I guess I think they are probably, I think, taken the judgmental call, which is far more appropriate in my viewpoint at this point of time.
All right, Deven, some important points made there, but Surendra Rajgang, who is the partner, deals and debt and special situations at Grant Thornton Bharat, also joins in. Surendra, what's your analysis of this particular matter with the COC taking a call, but there has been a debate on the headline number of the bid, which Vedanta claims is higher than Adani, but the upfront payment that is made is higher in case of Adani, and as Deven was mentioning, the complementarity is really higher with Adani Group. Putting all this into perspective, how a resolution plan really goes ahead and the purpose of the IBC code, what are your insights on this?
Sure. Hi. Thanks. Good afternoon, everyone. Nisha, I think we need to understand, first of all, that whenever the resolution plans are received, these are evaluated on the basis of not only, the financial bid value, which is, of course, is one of the prime factor. However, the evaluation metrics, which is decided by the COC, has got two components. The one component is on the basis of quantitative factors.
Yes, Surendra. All right. So we'll get back to Surendra. All right, Surendra, please go on.
Are you able to hear me?
Yes.
Yeah. Okay. So I was saying that the evaluation criteria which are decided by the lenders are on the basis of quantitative criteria and the qualitative criteria. And on the basis of combination of, the evaluation of the quantitative and qualitative criteria, finally lenders decides. The challenge mechanism is one step in terms of the price discovery. That's not the concluding factor. And that is why, whenever lenders decide with respect to which resolution plan is to be voted upon, that's the culmination of other qualitative factors as well, in addition to quantitative factors, such as, the experience of the group in terms of turnaround, the experience of the, or the payment capabilities. So all these various aspects are decided, and accordingly, the final view is taken by the COC.
All right, Surendra, you made some important points on qualitative as well as quantitative analysis. It's not just the headline number, but it's also the qualitative aspect of complementarity and also the group expertise that the market or the lenders really take a look at. When we talk about the legal aspect, Sanjay Asher, what has been the precedent when it comes to the court really deciding on a matter on which the creditor has already taken a decision? How much of the court's decisions are really there which have overturned the matter when a COC has already decided on a resolution plan?
There is nothing where the courts have overturned the decision of a COC, because COC is best judged in law, even in law as also in practice, as to what is good for the creditors community as a whole. And so therefore, the court never interferes in the wisdom of COC. Time and again, courts, including the Supreme Court, have stated that, look, it is the wisdom of COC which will prevail over everything else. Now, unless somebody shows there is some mala fide, which I don't think is there in this particular case. Otherwise, no court is going to ever overturn the decision of COC.
All right. Abizar, if I ask you that if the highest bidder is the prerequisite for the bidding party to really get the asset, then is there a requirement for a COC? And therefore, the question arises that there are other important considerations than the highest bid as well. Can you give us a little more understanding on also the comfort and the COC's decisions on the parameters that they are looking at when they really, look at one particular bid versus the other and evaluate the options?
I think as most other people have said, it's the quality of the promoter, the expertise, the turnaround ability of that person, is whether the credit risk itself, COCs are basically bankers, right? Financial lenders. Financial lenders have an ability to assess credit. And if they're giving any form of deferred payment, then one of the things that they have to look at is whether that is a creditable proposition or no. And I think that for that you require the expertise. Even the IBC enshrines a lot of powers into the COC because one, the COCs are the most affected party because they are supposed to recover their dues. And secondly, they have the expertise of assessing whether a resolution plan deserves credit or no. If it was an all cash plan, frankly, there was no issue. You would simply have done a bid comparison. You didn't even need a COC, and frankly, the numbers were stacking at you. The other thing that I want to point out here sometimes is that if a COC stresses so much on the fact that the plan has to be viable in the ultimate sense, then why does a COC in its evaluation matrix not itself take some portion of it as an equity upside? That baffles me and has always baffled me. Ideally, the COC should have the conviction to say that if a resolution plan is more likely to succeed, then the resolution applicant is more likely to make equity value. And as Devan Bhai just said, if it is come cheaper, then let that upside, some part of the upside flow to the creditors through equity value. That would have made a lot more sense.
You made such an interesting point because, private equity players have been playing this game of, getting an equity upside once the resolution is done quite beautifully, and the returns have also been hefty. In fact, Surendra can talk more about that, Surendra.
Yeah, sure. In fact, we have seen in some of the plans which got, approved earlier in 2018-19, in some of the plans, there were provisions under which the equity upside was being offered to creditors, to the financial creditors. And absolutely, I think, as Abhi said, that, it has to be, lenders also need to have some comfort on the resolution plan. And if they think that the feasibility and viability is evaluated fully, right? And that is why the CIRP regulations mandatorily requires COC to record its deliberations with respect to feasibility and viability of each resolution plan. And all the resolution plans are put to vote. So this is not only these two resolution plans would have been looked at. COC would have looked at all the 4-5 resolution plans which were being compliant from the perspective of the feasibility and viability of each and every resolution plan. And considering that, all the plans were different, would have different propositions with respect to value which was being offered, the timelines in which the payments were to be done, the background of the RA and the qualitative criteria which each particular applicant would be having. It is a task for the COC to, it is a tough task for the COC also. And I'm sure they would have done the full evaluation in terms of which plan in the commercial wisdom of the COC is best suited, right?
Right. Surendra, you made an important point on the commercial wisdom, which we are talking about, where the COC, which has been holding on to that asset and looking at the recovery as well as the resolution, that could be the best suited. And that we have seen in many cases where the courts have really depended on the COC's commercial wisdom as well. Deven Choksi, in your view, several IBC cases have been done over the past many years since the inception of IBC. And it came as a breath of fresh air for the companies which were debt laden but could be economically viable in better hands. In your assessment, How have the assets really performed, where COCs have taken the call on the bidding party, the winning party, and how have these particular resolutions and recovery, both for the banking sector as well as the winning company, done in the interest of the economy to save those assets into really fruitful assets for the future?
Yes, a very pertinent question. And I believe that I think most of the transactions which one has undergone, maybe I may not be immediately recollect all the transactions, but the fact is that I think given the kind of seriousness of money invested by the acquirer or the bidder and the subsequent, I think, turnaround of those assets have actually, I think, worked in favor of all. The overall, I think the acquirer also benefits. The assets on its own merits also, I think, performs. So it's a win-win. And at the same time, the lenders, the creditors, I think they may find another avenue of doing business with those assets. So in a way, I think without going specific into any particular group or a company who has done this, I believe that I think the most of the transactions have probably yielded significantly large amount of value. And probably, I think in this case too, given the kind of history of Adani Group that we have seen, they may probably be very successful in integrating most of these assets, I think, which are coming from JP into different companies' case. And I think most of the companies probably may have started their internal integration process also in this kind of a situation. So yes, I think the success ratio is probably, I think, already understood and given. And maybe I think they remain, I think, on a very high note, as I understand, from most of the transactions.
All right, so Deven, there you go. You have been really mentioning about how the IBC processes and the way it has been conducted by the bankers, the lenders, and also the companies who take over these assets. That has been a success so far. Of course, it has been time consuming and we are a litigating country. So that has really put a lot of hurdles as well. But in the end, a lot of success has also been gained. We are joined by two more experts, Naresh Malhotra, ex-SBI, as well as Swapnil Kothari, who's a senior lawyer at Supreme Court. Swapnil, what do you make of the technicalities of one bidder with the headline figure higher going to the apex court asking for a relook at the COC's decision? What is the precedent and the technicality here the Supreme Court will be looking at?
Well, first of all, I think if a decision has been made in favor of a particular lender, looking at all the circumstances and all the aspects of the case, and where Adani has emerged the winner, or if I say the person who's going to take over Jayaprakash Associates, then I think the Supreme Court is not very likely to interfere unless there's some sort of a fraud or an error apparent on the face of the record. So the person who's challenging it, that is Vedanta, will have to talk about much more than just the fact that its figures are higher. Because I think a speedier resolution to this process is more important than how much money is being pumped into a company. If you're going to take a long period of time to pump that kind of money into the company, which is according to your bid, as opposed to a lower bid, which is going to work out faster, and the company's resolution process is going to work out faster, then I think the court is not very likely to interfere, because that is the commercial wisdom of the people who've chosen to go with Adani. So very little technicality in that sense will apply to the Supreme Court, because NCLT, NCLAT have both taken a decision in a particular manner. Now, even if NCLT had taken a different decision, assuming, saying that, oh, no, not Adani, and then NCLAT would have approved Adani, still the Supreme Court would have said that, according to us, certain technicalities have been looked into, and I don't think we see the need to interfere absent some sort of fraud or some sort of an absolute gross oversight or a violation of the IBC code. And now, given that the amendments are in process at the moment, and they're about to come in a more effective manner, where you are trying to ward off any delays. Now, one of the biggest delays is a litigation delay. Now, again, if the Supreme Court were to dwell over it, have more round of arguments on this, say maybe 2 weeks, 3 weeks, 4 weeks, assuming that dates are given where each party gets a chance to complete his or her arguments, then I think, the very purpose of the amendments is absolutely defeated and neutralized in that sense. I mean, it's just one company, right? And you have two big players in the market, that is Vedanta and Adani.
Yes.
So that's the reason why this is catching the media attention.
Yes.
And nothing wrong with the media attention, but I think the point has to be looked at that, okay, this is a debt-ridden company.
Yes.
The IBC came with a certain goal, and it is a beneficial legislation, an enabling legislation, a noble legislation, and not a punitive legislation. So I think
Swapnil, you made
get over and done with.
You made a very, very important point, that is about the time value of money in this particular case, whether the upfront amount and the faster resolution of the asset takes place. And the second part is that the bane of IBC processes has been the delay because of the litigation. And there again, the time value of money comes in, because the more number of years or days that are really spent in any resolution, the asset gets eroded and depleted of its value as well. I want to put that point across. Naresh Malhotra, ex-SBI, please jump in on this particular conversation. From the lender's point of view, what all aspects are really assessed to really assess a bidder for the resolution of assets? And my second question is, does the comfort of lenders with a particular group and their credit culture also come into the mix while taking a decision? Because the banks have a relationship of lending with almost all the big houses, and here these two are in relation to all the banks and lenders because of the capital intensive nature of the businesses.
Well, thanks for having me on the panel. The issue out here is the two issues which you have raised is about the concerns of the lenders.
Yes.
Now, lenders, while evaluating any bet, has two concerns in mind: whether what is the net present value, and the second is whether the bidder is in a position to carry the bid out. Okay, so because by and large the repayments are spread over a period of time. So if the bidder is unable to, is not in a position or doesn't have the reputation to carry out what he is saying, so that also weighs heavy on the lenders. Now here in this particular case, the lender, both the bidders are well reputed people, but when you weigh their bets in the perspective of net present value, I think Adani scores much better. So without going into it, into the evaluation of both the bets, what I say is the COCs, when they evaluate the bet, they go strictly. They are sticklers for rules. They go strictly by what the IB says, what IBC says, what the rules say, and according to that only they come up with the final bidder.
Sure.
Okay.
So several aspects are looked into it, Naresh Malhotra. You made your point, but one aspect that I would like to reiterate is that if only the headline figure were to go with, then the COC's voting would not be required to really look at the winning bidder. Final question, Abhizar Divanji, what does this really reflect on the trajectory of IBC processes? 30 seconds.
I think people should stop litigating and accept defeat when it has happened. Ideally, leave it to the right decision makers to make their choice. IBC will work well. Today, we have most components of IBC exceeding their own brief, whether it is the creditors, whether it is the courts, whether it is the insolvency professional, or whether it is a resolution applicant. Ideally, if we were to respect the territorial authority of each person and respect their decision making, IBC would be a much smoother process.
Right, Abhizar Divanji, you've spent a lot of years and has expertise on IBC, and this is the word coming in. We should stop litigating. Thank you so much, gentlemen, for joining in with all your expertise. Swapnil, Abhizar, Devin, Surendra, Naresh for joining in. So that's like the house is united on one particular aspect, that IBC doesn't need much litigation, and the commercial wisdom of the COC needs to be taken cognizance of, but the matter is sub judice, and the battle for JP Associates assets is on. All eyes would be on the IBC processes and what it means as a precedent for this particular process. Thank you so much for joining us on this special show on Profit Insights.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power जैसा spice और पुणे वाली energy gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. What's on the show firstly today? Let's see on that. Well, we are getting the management of Tempo Global, given the fact that they have entered the defense manufacturing segment. What is the outlook when it comes to this segment is something that we'll discuss with the management today on the show. Apart from that, we have Zaggle Prepaid. That stock has been buzzing in trade after the management came out with a strong FY27 growth numbers. Standalone growth seen around 30%, while the consolidated growth is seen around 40% for the current financial year now, that is FY27. Now, when it comes to Enviro Infra, that stock has also been buzzing strong volumes. Recently, they have announced order wins worth nearly 405 crore rupees. And when it comes to Ganesha Ecosphere, that stock has been buzzing in trade for a few days, and today the government has notified that 40% of recycled content will be mandatory in food packaging, and the company is involved in this business line. And lastly, when it comes to NPST, that stock has been buzzing on the back of good volume numbers. Volumes are nearly 1 times its 20-day average. What could be the potential reason behind this up move is something that we'll discuss on the show today. So stay tuned in and keep watching. Now, if you look at the markets, the Nifty, it has been strongly above the 400 marks. It has come off from the day's highest point by around 150 to 200 points. The highest point was close to around 22,940 to 22,950 levels, and now we are trading around the 22,760. When you look at the sectoral indices, It's the Nifty Pharma Index which has been trading in red along with the Nifty Healthcare, while defense and PSU banks are the top sectoral gainers, up anywhere between 4 to 6% in trade. Now, even the small cap, that is also up around 3.5% in trade. But which are the key stocks that have been buzzing here, Mahima?
So, Somit, as you rightly mentioned, clearly the broader end of spectrum is outperforming the benchmarks right now, with small cap index up over 3.5%, the mid cap 150 also up over 2.5%. Some specific names: Bombay Seed is something that's locked in upper circuit, followed by Genesis International, which is also locked in upper circuit. Ganesha Ecosphere, as Somit was mentioning earlier as well, on the back of new government update coming in, is up 20% as well. Something like Supreme Holdings is also locked in upper circuit. You have counters like Macetia, which is also up and locked in upper circuit. So a lot of these names seeing gains of that 20% mark. Big Block Construction up 18%. Orient or Timex also up 17% as well. Counters like NPST also up 16%. Jyoti Sectors, Zaggle Prepaid, after a really long time, seeing gains about 15%. On the flip side, you have some counters which are still under pressure. Something like an Asian Hotel, which is down 4%. Dhampur Bio also down by about 3% percent. Sage Glass also down by about 2%. So that's with regards to, of course, where all of these names go. In the broader end of spectrum and small cap index as well. But with that, let's take forward our first conversation of the day. Tembo Global is what we are going to talk about. And to take this conversation ahead, we are joined by Sanjay J. Patel, who is the Managing Director of Tembo Global, joining us now. Sanjay, thank you so much for taking out the time. My first question is with regards to the recent MOU with the government of Maharashtra that is going to help you set up defense manufacturing unit. Just want to, get a sense as to, how is this agreement going to work like? What is, the kind of capex that you're going to plan going forward for this one? And how are you going to fund the capex for this one?
So good afternoon, everybody. Our agreement with Maharashtra government is for allotting land and help us create all the infrastructure for the factory. This is also given along with some subsidy that is around 125% of the project cost, which we are going to incur. Our first leg of capex is around 550 crores. Second leg would be around 300 crores. And third will be 200. So total 1,000 crores of capex is planned for next 5 years to come along with here. And government is being supportive in every way which they can do and get us things moving fast.
Okay. Mr. Patel, you've also partnered with a European company to set up an arms and ammunition manufacturing plant in India. Give us a perspective on how does this agreement work? What is the percentage of your holdings when it comes to this? And again, here also, what is the kind of capex plan and how are you going to fund it?
So this project which we are talking right now is being set up in Amravati near Nagpur. The European partner is giving us total technology, and along with that will come full machinery and everything. They will also help us in creating an European loan for around 50% of the capex. That is only for the machinery. And whatever products which will be manufacturing, that is small arms, 1911 is the model, and ammunitions of different category. This all will be bought back by them for 3 to 5 years. They are also helping us with new customers on a regular basis. And this will be a tri-party agreement between the technology transfer person and the companies who are going to buy these products. We are already getting good inquiries from Europe, South Africa, America, Vietnam, and Thailand. These are countries which have already approached by their customers, and it is going on very smoothly.
Okay. I believe you mentioned you have planned capex of around 1,050 odd crore rupees over 3 different phases. Can you just take us through the funding plan for this? Will there be any equity funding, or will this be funded completely via internal accruals?
So equity funding we have planned from our parent company. We had a fundraise around 4 months back. Rest of the equity will be financed by us and Government is also helping with a term loan, and that will be around 200 crores of funding from banks. 3 banks have already given us a comfort letter. Bank of India, Union Bank and State Bank of India. These 3 banks have already given a comfort letter. And 200 crores, around $22 million is the loan which the foreign partners are arranging for us. Everything is in motion, and we understand that this should be locked down by 31st of May. All the local loans and foreign loans, everything will be locked out and the project will be in full swing. We estimate this project to go in streamline between October and December of the current year, and commercial production should start by first week of January. This is our target as of date.
So based on these targets, could you just give us some guidance of what is the kind of revenue or net profit growth an investor should expect for FY27? And also if you could touch upon where your current order book lies at?
The order book for this is 100% buyback. So whatever we are manufacturing is being bought by immediately by the technology transfer. So there is nothing that we should manufacture and keep in stock. This is number one. Number two, the price and everything also is been settled at what price they'll be buying and everything. And can I get your question again? Other than profits are, you can say 50% is gross profit, 35 will be PAT. Now 27 last quarter, you can say we can expect sales of around 200 crores in this current year, and next year there will be around 350 to 400. This is our target for 27-28.
Okay, Mr. Patel, just trying to understand, FY26, if I'm not wrong, you had told that you will do a top line of around 1100 odd crores. Last 3 quarters combined, you've done around 745 odd crores. That leaves you to around 355 odd more crores that you're supposed to do in Q4. Do you think that's achievable? One thing. And secondly, you've also said that 35 to 40% growth is what you're looking at FY27. Does that mean that you will be able to do 1500 odd crores in FY27?
Yes, we are on target, and whatever numbers we are reaching, they are online.
Lastly, sir, just wanted to understand any impact on your export order book?
Nothing as of now, but yes, Gulf deliveries have gone a little bit slow. The prices for containers and all have been drastically gone ahead, but we understand it will smoothen in next couple of days. Other than that, Europe, America, our exports are going smoothly. There is no disruption in those orders. Okay. Only Gulf, you can say, Dubai, Oman, Bahrain and Kuwait. These 3 are the ports which have been affected. Saudi Arabia, we are also expecting Jeddah is going smoothly. There is no problem.
Okay, sir. Thank you, sir. Thank you for joining us and giving us the way forward for the company. Let's also welcome in the fundamental guest, Mahesh Oja, VP Research Business Development, KC Securities. Mahesh, you heard the management. The growth guidance continues to remain quite strong. The MOU will help them grow their businesses and get more orders going forward. How are you looking at the counter at the current valuations?
Good afternoon, Sumit. Thank you for having me in the show. It's always a pleasure to talk with you on small cap stocks. If you're looking from a small Tembo Global, that P is quite reasonable compared to peer group. So I think stock is reasonably valued on these level. And as per guidance given by management and as per the data available, I think stock has a potential up to 600, 640 level, at least in a medium term horizon. And if you're looking from a longer term horizon, then stock can do very well. Stock has a much more potential to do upside in longer term horizon. But yes, currently we are facing some liquidity issues, so we are getting a low price. But I think if anyone looking from a longer term horizon, they can go for the upside. I think 640, 650, that level could be achievable.
Okay, although year to date the stock has been under pressure, down around 19%. But moving on and taking a look at the F&O space, and we have Sharad joining by as always to give us a perspective on what the cues are shaping up like. Sharad, over to you.
Well, thanks a lot for that. The cues are definitely, we had a good gap up opening, but will it sustain or not? That's the big question coming in. Right now, also, sea of green is there, but a slight cool off coming in for benchmark indices, both BankX and Sensex as well. Net, Sun Pharma, NTPC, Power Grid, and Ultratech in the red. But what's holding it is, of course, the Adani group of stocks, the defense stocks, which are doing well. BankX is also doing really well. But will it sustain or not in the next 90 minutes or so? That's the big question to be asked. Of course, the VIX has come down, so some kind of a positional setup is coming, but there is a fall coming in the markets. But nevertheless, let's just pull out the stocks where the long build-up is strong here. And over here, of course, Avenue Supermarts on the back of store addition, and BSC, capital market team stocks also doing really well. And the average daily turnover numbers were also strong for the month of March. Let's look at the short covering. We have another defense play and also another defense play, Bharat Dynamics and Mazgaon Dock. All of these stocks are showing good value buying. Short build-up coming in for Blue Star, interestingly, and Dr. Reddy Labs as well. So these are the important stocks which should be in your radar in the FNO space, but it is turning volatile as well as we are speaking. Well, thank you, Sharad. Thank you for that FNO snapshot. Moving on to Zaggle, that stock continues to remain in the greener side, given the fact that the company has given a strong FY27 guidance. They're expecting 30% growth when it comes to standalone business and nearly 40% growth on the consolidated side. Let's get in Jasmeet with more details.
Well, Sumit, thank you for that. As rightly said, the stock is buzzing on the back of that strong guidance coming from the management. Let's quickly understand what the company does. Well, company provides expense management portal to the employees while they are B2B, B2C customer altogether. Now, what they do is they provide their portal and their cards for employee expense management and other management services as well. Now, company is also heavily involving AI in the everyday system and wants to make a lot of work in AI portal-wise, given that it will improve the efficiency of the management going ahead. If we look at the key stock performance of the company, the stock has shown a weak performance over last 1 year and 6 months as well. About a month, the stock is on 2.5%. Over last 6 months, the stock is on 36%. And over a year, the stock is on 39%. But if you look at the overall performance of the stock over the 52-week high figures, it's roughly down 54% from its peak level. But today, it's buzzing in trade on the back of that strong guidance given by the management. While management for FY27 do expect that the overall standalone revenue to grow at 25 to 30%. If we look at the console figure, they expect it to grow at 40%. If we look at the key history of the management of how it has grown in the previous years, between FY24 to 25, the top line grew by 68%, while a year prior to that, between 23 to 24, the top line grew at 40%. So maintaining same trajectory, and they expect a 40% growth again in the coming year as well. If we look at the key focus area for this particular year coming by, the management wants to focus more on the working capital cycle management. They want to also focus on the overall new customer mix and acquire more customer in the space of expense management. Lastly, they also want to focus on margins by leveraging AI into the efficiency. Now, in terms of the key deal wins, the company announced quite few new deal wins in the previous month as well. What they say is they have entered into a contract of overall employee management with Funac India for 5 years, while they also announced a deal signing with CNH Industrials in India, again for the expense management as well. Now, in terms of the Q3 figures, what exactly happened in Q3 was it was a record quarter for the company, where for the first time they crossed roughly 500 crore in terms of revenue, and even they recorded this EBITDA figure where they crossed 50 crore for the first time ever in the history. In terms of what worked well for the company, is the overall mix that helped the company grow better and have better management. Lastly, in terms of profit terms, the profit is growing faster than the revenue on the back of the leverage, something to watch out for.
Okay. Mahesh, any view on Zaggle?
Currently, the stocks company is doing very good. I think a stock has much more potential for upside. That could be a 325 to 340 level at least in a year horizon. Company is doing very good. I think investor could keep in watch list for the stocks.
Okay, all right. So that's the view with regards to where Zaggle goes. But the other counter that's in focus is Enviro Infra. It's zooming in trade today. Let's try to pull up the charts. Up 14% as we speak, and it's held that kind of gains throughout the day. Now we have Parth joining by to give us a perspective on what's adding to the rally. Parth, over to you.
Thanks a lot, Mahima. So Enviro is an EPC company that builds water and wastewater treatment plants, and they handle everything from the design and engineering to the final construction part as well. The main trigger is that the company has now expanded into high growth sectors like renewable energy and energy storage sectors as well. Their order book as of December last year stood at 3,092 crores, and the main reason why the stock is in focus is because they have won some really big orders last month. The first one was a 664 crore NTPC contract for battery energy storage systems. Then they also won another 405 crore contract from NTPC for the same battery energy storage, and they also bagged an 411 crore order for a sewage network project in Bihar as well. As you rightly mentioned, the stock has gained in trade. And
all right, Mar, thank you so much for getting us those details. I think there's some audio issue with regards to Parth's mic. But Mahesh, I'll come to you on this particular counter. You know, it's zooming in trade today. Your view on the counter as well as the sector as a whole?
Yeah, I think Enviro is a very good company. I think fundamentals of stocks are very good. Much more potential. Even 250, 260 level could be achievable in medium term also. So investors who are looking from a longer term horizon, stock can be held in their portfolio. I think a stock has a good potential for upside.
Right, the next counter that continues to remain in focus is NPST. In fact, let's get in Varsha to understand what exactly this company does and why is the stock buzzing here. Varsha?
Well, you know, the stock is buzzing, of course, on the back of volumes and, of course, the current market conditions. But let's see what this company does and what are the key growth triggers going ahead. Talking about the business model of this company, they are into UPI payments and digital banking. And talking about the levers of growth, of course, they're targeting high growth areas like payments, payment devices, then your digital lending and RegTech. And they aspire to grow twice of market rate by 2030 across all segments. Talking about the outlook and guidance, Q4 is expected to be the highest quarter for this company. They're expecting almost 15 to 20% of growth over Q3, and multiple Q4 announcements with respect to orders are expected to come. Now, talking about the payments opportunity, UPI is expected to hit 57 billion transactions by 2030 at almost 793, valuing at almost 793 trillion. Now, overall, this company will be benefited from the increasing use of UPI transactions, and UPI remains almost 90% if you see of digital payment growth. And RegTech, which is one of the product, the RegTech market is expected to grow 4x by 2030. So, which all products they are into is expected to grow, in double-digit CAGR over the next 4 to 5 years. And Q4 for this company will be the highest quarter, which will have a good growth in overall FY26 over FY25, and for FY27 also they're expecting good growth considering the products that they are into.
Mahesh, have you looked into this counter NPST? The stock is up 17%. Varsha says that fourth quarter would be quite strong for the counter.
Definitely, the stock is doing very good. I think if any cool down nearby 1050, 1075, that could be ideally a good adding area. But if you're looking from a longer term horizon, I think a stock has good potential for upside. We don't have any coverage on it, but yes, from the data perspective, I think stock has a good potential for upside.
Okay, all right. So that's the view coming in on NPST. The other pack of stocks, and in fact, one stock that certainly stands out is Ganesha Ecosphere. The stock, of course, is locked in upper circuit today, and this is on the back of government notifying that 40% recycled content is now mandatory in food packaging, and this company stands to benefit from it. The mandate, of course, is expected to accelerate the adoption of recycled PET. This will be adopted across the food and beverage sector, and this will create robust demand for high quality recycled materials, and this will also strengthen the domestic recycling ecosystem. Now, like I said, Ganesha Ecosphere is one of the counters that benefits from this. You have Garware High-Tech Films, which also sort of benefits from this, and you have Ester Industries, which is also up 16% today, benefits from this. Garware High-Tech also up 7.9%. But with regards to where Ganesha Ecosphere goes, FY26 was a tough overall year for them, but the management has come out and said that FY27 is going to be the year where rPET adoption should finally align with the regulation, and management expects FY27 performance to reflect what was originally expected in FY26. So FY27 is going to be better than what was expected in FY26, and Q4 is also expected to be stronger considering the subsidy realization as well. So that's with regards to where Ganesha Ecosphere goes. Mahesh, I'll come to you on this one. Stock is locked, of course, in upper circuit today, but if one wants to probably take a fresh entry into this, would that make sense?
The stock has recently hiked too much, so I think one should wait and watch. If any cool down nearby 900, 940 zone, then that could be ideally good buying area. From longer term perspective, if anyone have, they can hold further because the government notification is positive for the stocks. I think stock can do very well in upcoming time.
Counter is RPSG Ventures. In fact, if you look at the last 1 week chart, the stock has moved up swiftly 65%, and this is despite the weak market conditions that we are looking at. Today also the counter is up around 16% in trade, and in the last 1 week the stock has moved up 65%. But the main reason behind which actually led to this up move when it comes to RPSG Ventures is the couple of deals that have happened on the IPL side. Where first one was Rajasthan Royals, and the second one was the Royal Challengers Bangalore RCB, where United Spirits sold its stake. Now, as per both of these calculations, in fact, Mahima has worked out this detail. As per her, I believe the valuation of Lucknow Super Giants comes to around 18,380 crore. And RPSG has 51% stake, which means that their stake is valued at close to 9,000 crore rupees. And RPSG Ventures market capitalization is just 3,000. So even after applying a holding company discount of 40%, there's still a lot of valuation upside that we could see that could come in. But again, this will only be realized only if the group goes ahead and does a stake sale in RPSG in Lucknow Super Giants. Mahesh, any view on RPSG Ventures? Should retail investors enter at this point of time, given the fact that the stock has already moved up 65% in the last 1 week, though there is upside left, at least as per the deals that have happened recently?
I think the stock has a much more potential for upside. You have already given the details of this. I think momentum is strong, and upcoming time, I think 1,150, 1,200 level also could be achievable. So stock has a much more potential for upside, and currently deals have given momentum for the same.
All right, so that's the view with regards to where RPSG Ventures go. But Mahesh, with that, thank you so much for taking on the time and helping us with insights on all the small cap buzzers that we discussed on the show today. But viewers, like I said, completely out of time on this edition of Small Cap Buzzers. But if you have any stock related queries, then do stay tuned, because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy, gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts.
Welcome. You're watching Ask Profit, a show that gets all your stock-related queries answered. I'm Mahima Vashajani, and with me is Puneet Zaveri. Puneet, I think in the last half an hour or so, we've seen markets tank a bit, and the Nifty 50 is now down by about 240 odd points from its day's high point. Let's try to pull up the charts. In fact, up 1.7% still, but completely off from its day's high point. Let's try to pull up the heat map to see as to what are the counters that have now kind of turned into the red and causing that pain. Dr. Reddy's is something that's down 2.7%. HDFC Life has further, taken a knock, down 2.6%. Cipla, NTPC, Sun Pharma, Apollo Hospitals. Pharma as a pack, pharma and healthcare as a pack is not doing very well. In fact, even in the sectoral indices, these are the only two sectors probably in the red right now. The bank Nifty also, let's try to pull that up, because even that has seen a knock of around 490 odd points from its day's high point, still gaining about 2.5 odd percent if I'm not wrong. Yes, there you go, 2.5 odd percent. The pain in Nifty Bank is slightly lower as compared to the Nifty 50. Let's quickly pull up the sectoral heat map and see as to what the sectors are doing at this moment. And you have your pharma, your healthcare, which is in the red right now. Apart from that, all of them in the green. Defense has held that 5% gain throughout the day, followed by media, PSU Bank, as well as you have your metals, which are gaining 2.7 odd percent as well. quickly the advanced decline ratio, because there has been some pressure in terms of where the broader end of spectrum also goes, but that's lesser as compared to where the benchmarks are concerned. So that number of 99 declines has now moved up to 141 since we last spoke on Ask Profit morning edition. But still, I think the graph indicates that there is at least stability where the broader end of spectrum stands.
And the breadth actually is much larger in the broader spectrum. So you've seen actually that sustain across the board throughout the day, despite some spaces like metal, auto, which has been very volatile over the last couple of weeks. So that's hearty to see at this point of time. The mid cap index and the small cap one, let's pull up those as well, because small cap was up almost 3% in the morning. Mid cap up still 2.51%. So very, very close to the day's high as well. And the small cap actually is done much better. It's now up 3.3%. So that's positive in that sense. And the BSE 500 also very quickly, if you can pull those as well, because the gainers in the morning of almost 10% and above were almost 6 to 7 names. That has increased now. So Tata Tele, Godrej Industries, Coach and Shipyard are actually built onto the gains, now up between 12 to 15% on those names. So has Mazagon Dock, Uflex continuing its upmove momentum, Hindustan Copper, Jindal and Tanla Platforms. Those are the 3 names which have now come into double-digit gains for the day. And in the losers, you've seen Westlife, it was down 5.7%, seeing some buying there, but largely just been 2 to 4% kind of move. So a very, very positive day in that sense after a really long time. But we solve all the stock-related queries today. So if you haven't already, do start sending them on the numbers that are flashing on the top of your screen. And to take all those queries, let me welcome in on the fundamentals, CA Tapan Doshi, research analyst at CA-Tapan.in, as well as Akshay Bhagwat. He's the senior VP at JM Financial. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first straight query, and that's coming on DMart. The viewer Muralidharan is actually asking Tapan if it's a good time to buy. Now, we've seen, and Mahima spoke about it in the morning, the store addition for DMart has been very, very strong in this year, especially in the month of March. How do you view this counter now? Is there enough evidence for you to suggest a buy call?
No, see, fundamentally, again, no, they are facing a very tough competition from e-commerce, quick e-commerce, and no, their margins still, I feel, no, they will be in a pressure in the coming future also. Of course, the stock has gone up, but I think my take is that no, for the long term, I think in this space, I think a lot of competition is there. Again, overall, no, the sales volume will not be so great in future also. So my take is that better to avoid this stock. I think on rise, I think one can get out from this stock and move to other sector like defense, banking, where more opportunities are there.
Okay, all right. So that's the view coming in on Avenue Supermarts. In fact, this year they've done 86 new additions versus that of 40 to 50 generally, which is their average additions. And brokerages are now kind of turning positive on the counter as well. Moving on to the next question, Lalita from Bengaluru is asking about Sharda Cropchem. She's got 28 odd shares at an average price of 1193. She says she's sitting on a loss of around 8,000 odd rupees and wants to know as to what should she do at this juncture. Akshay, a very good afternoon to you. Your view on the charts for Sharda Cropchem?
Good afternoon. So it's been more of a one-way fall for Sharda Cropchem, and somewhere technically the support stands around 800 to 825 zone. So the pain is not over, still more to go, but from an investment perspective, you can consider holding it still. Can expect some bit of a recovery from the levels of 800 to 850 zone.
Got your view, Akshay, and welcome to the show. The next caller actually dialing in from Visakhapatnam, and Kundal has a stock query for us. Kundal, very good afternoon. Thanks so much for joining in. What's the query?
Yeah, I have Tamil Nadu Petro Products around 1,000 shares at the rate of 106.
Okay.
Now at the rate of 80 to 83 it is going on. Whether I should exit or I should average it.
Okay, exit or average. And would this be a long-term view that you would want on the stock, or a very short-term one?
Yeah, I want to. I can hold for another 1 to 2 years.
Okay. Tapan, actually, this is a very small counter, just 749 crores in terms of market cap. Do you track this by any chance, Tamil Nadu Petro Products?
Honestly, if you see the financials of this company, I know it's not so great over the time. And again, the stock has come down a lot. Of course, today has gone up. But if you see, still the guidance is not so strong. And I feel that in future, because of the petroleum prices volatility, this company will face an issue here also. So my take is I think it's a sell from my side. I think if he wants to go, I think ONGC or Reliance is a better option in this segment.
Okay, all right. So that's the view coming in on Tamil Nadu Petro. But moving on to the next one, which is coming in from, do we have the name of this viewer? Okay, we don't. But our viewer is asking about SH Kelkar. He or she has bought it at an average price of 196 and 962 stocks is what they're holding. Should I hold or sell? What's the short-term target for this one is the question. Akshay, your view on the charts for this one?
Yeah, so see, technically still the trend is weak, but somewhere there is a support around 100 to 110 zone. So that won't be hit immediately. Maybe you have to give this some more time. Minimum 3 to 6 months of holding is what you need. I can expect a rebound from the levels of 100 to 110. That's the support. And in case it does, then the possible upside you can look forward to is around 140 to 150, where you should look to book out or exit your discounter.
Got that view, Akshay. But another caller now from Mysore, and Vishwas has a stock query for us. Vishwas, go ahead with the question.
KPI Green Energy stock name. Average total quantity 1,131. Average price 456, sir. Correct level in profit loss in 84,000, sir. Seller what, sir? Please technical analysis, sir.
Okay, so you want a technical view. Got it, Vishwas. Akshay, KPI Green, it's been a sore pain point for investors, right, over the last few months, and has been expensive on the valuations as well, but on the charts, any chance for it to come back to Vishwas's price of 456?
Absolutely. So on the technical charts, the prices currently are placed at a very crucial support juncture from where on the monthly charts, time and again, we have seen evidences of recovery from the levels of 340 to 350 all the way till 540. So we expect a similar trend can unfold, for which you need to continue to hold. Give it some 3 to 6 months of time holding. I think if it recovers from the current support zone, the volumes are good. Again, you can be set for possible targets till 500 to 520. For worst case scenarios, you need to maintain a stop loss below 320.
Hey, Piyusha Kanodia is asking the next question. She's asking about Varun Beverages. She's bought this at the levels of 400. Wants to know if she can add more at the current level or continue to hold the quantity that she has. She's holding 150 odd shares. Tapan, I'll come to you on this one. Your view on Varun Beverages?
If you see Varun Beverages in the last few quarters, the volume has gone down. Now they are facing a lot of competition from Campa Cola. Again, overall the segment is also weak. But from here, I think their volume will be in a pressure in future also. And but they are doing expansion in you can say the overseas. But so I feel at this level the valuation is okay. You can hold on the stock, but don't average it at this level. Wait for 1 or 2 quarters more.
Got it. The next question, that's coming in, it's right now on ITC Hotels. Now, a viewer, Shankar from Bengaluru, who is the regular viewer, is holding shares at 159. His question largely being, he's holding 400 shares, Tapan. Can he add almost 100 more shares actually, pardon me, at this price? Would you recommend that?
Yeah, you can add the stock. No, the stock is good, and if you see their operations are also good. They are working on quite a good expansion is going to be there. Again, you see the hotel segment is doing good. So yes, I'm quite positive in the stock, seeing the guidance and all the management outlook also. So you can add this level also. It's been down a lot from the top.
Okay, the next one is coming in on Man Infra. Jambai from Pune is asking this question. Wants to know if you can hold or sell or maybe average. He's got 30,000 shares at the levels of 158. Akshay, I'll come to you on this one. He's sitting on a significant amount of loss right now, 22 lakhs if I'm reading that correctly. What would you recommend him to do right now? Because, I mean, he's sitting on a significant amount of loss.
See, there's been a significant steep fall in this stock, I think right from the last 7 to 8 months. And somewhere if you were to hunt for supports, the zone is around the levels of 70. So from 70 is the point where in case you are holding for long term, you can consider averaging it out. As of now, still the trend is weak and 70 can be tested in the coming months. That's when you average. Keep a stop loss at 60 for worst case scenarios. And in case the pullback matures from the support zone or from the current levels, then the possible target expectation can be around 120.
Got that view, Akshay. But taking on the next question, and it's coming in on Zaggle today. Stocks up and flying in trade. Let's pull up the counter now. We discussed that in 130, and our show small cap buzzers. So stocks up almost 14.9% now as we speak. Now, one of our viewers actually had sent across his query, Giridhar that is. where he's holding 75 shares at 300. Now, his question largely being, Tapan, is it a good time to average this counter now after today's bull run at 215, because that evidence wasn't available a couple of weeks ago when we answered his question? Would you suggest him to do so?
Slowly he can add the stock now. The financials are good. Overall, the company is doing well. Of course, today all the stocks are up as such. We cannot determine on one day rise. But yes, I think the stock has fallen a lot, and at this valuation, I think he can add slowly and gradually and in a SIP manner. I think in future operations will be much better. And again, the overall the segment where corporate SME and startups, they may be doing well from here also. So yes, he can add, but slowly.
Okay. All right. We've got our next caller. Rajesh from Noida is calling us. Rajesh, a very good afternoon to you. What's your query about?
I have 70 shares of Anupam Rasayan
Okay.
at the rate of 800
Okay.
from the last 1 year. So my query is that I should hold or sell.
Okay. And what is the time period that you're looking at, Rajesh?
I already hold for 1 year.
Okay.
So I like to sell if there is not very good potential.
Okay, got
If
it.
there is good potential, I can hold.
Sure. I'll take this up with Akshay. Then Akshay is already sitting on profits of around 33,000 rupees. Do you
Right.
think there's more steam left?
Yes, absolutely. The technical charts are very healthy. And I believe there can be another new high in the making. So immediately, I think 1400 is the immediate target if you're looking for. But I'm optimistic that these levels too will be broken, and you can be setting up for possible targets till 1475 to 1500 zone. 1150 is the support. So worst case scenarios, in case the stock goes below 1150, you can exit it below those levels. But as of now, it is hold for targets of 1475.
Prashant has actually sent across his query to us on WhatsApp, and Tapan, he's posed two questions: if it's a good time to enter Westlife or WeWork. Now, both from very separate industries, but just taking the query on WeWork for now, because we can take one at a time. But Tapan, how do you view the stock now? Because comparatively from its IPO price, it's also slipped past that 500 rupee mark. And there has been, of course, a growth on profitability which is expected in the next 6 to 8 quarters. But what would be your view on WeWork?
WeWork, I think he can hold the stock for a little bit more. The reason is, if you see the space is little bit doing well, and if you overall, I think what the management commentary was earlier, that in coming quarters they are working on the expansions also and the margin also. So my take, as the stock has come down little bit, I think he can hold the stock for a little bit more. And if he does not have a stock, he want to add, he can add little bit also.
You're coming in on WeWork India. Moving on to the next question. Kundala Rao is writing us from Vizag asking about NCCs. Bought this at the levels of 225. Wants to know if you can book a loss or average it at the current levels. Akshay, your view on the charts?
See, on the price charts, the technical view is still negative. The only positive thing is that it's highly oversold, so the chances of a trading pullback look higher from the current levels. So at this point, we're looking for better exits or to cut down our losses. For the meantime, you can keep a trailing stop loss of 125 for worst case scenarios, and I think there will be a pullback rally till 160 to 170 for short term. That is the point where you can consider an exit in the stock.
So consider an exit at those levels that Akshay has mentioned, so keep that in mind. But Indira from Visakhapatnam actually is asking us the next question. It is on NHPC, bought roughly 3,200 shares at 90 rupees per share. Now, Tapan stock's trading at 75. Would you recommend her to average down or continue holding her existing shares?
Don't average, just hold the stock currently because I feel when the market come up, then he can look at it. And if he wants to switch, he can switch to other stock also. The company is a little bit struggling on the volume part also, even on the margin part. And if you see the last 3 years, the profit is not so great. So my take is will be on the hold for now. Then once it goes up, we can switch to other stock.
Okay, all right. So that's the view on NHPC. The next one is on Protein EGOV. Navneet Rathi from Surat is holding 35 shares at an average price of 777 and wants to know if he can average out at the current levels. So your view on this, Akshay?
Yeah, so for the protein EGOV, I think the technical trend is negative, and it's really on oversold technical parameters that you're getting a pullback on intraday front. I would not recommend this to average in week of the week trend in the stock. We should be looking, in fact, for exit opportunities. And technically, I think around 550, if you get those levels, I would look for exits.
Well, time now for the rapid fire round in this edition of Fast Profit. Tapan as well as Akshay, you know the drill. The first question coming in is on GVTND, and Mr. Rao from Hyderabad is asking if he can enter the stock now. Would that be your recommendation, Tapan?
Yeah, you can.
Okay, the next one is coming on AWL Agribusiness. What should I do with my holding is what Kalpesh is asking. Tapan, your view?
Hold it.
Lavanya from Iluru actually is holding shares of Quality Power at 916. Should she average down, Tapan?
Yeah, we can.
Nalco bought at the levels of 405. Akshay, your view on the charts on this one?
Positive view, hold for possible targets still 440 to 475.
Happiest Minds, Akshay, bought at 445 by a viewer on Dr. Bharat. What should we do with this counter now?
Right now, keep a stop loss of 345 and possibly look to exit near cost.
Okay, I have 500 shares of HDFC Bank and ICICI Bank. Thomas wants to know which one of this can he go ahead and sell. Tapan, your view?
Sell, it will be HDFC.
Tata Tech bought at 835 by Sudarshan. Tapan, quarter 3 commentary was relatively strong. Should he average down now?
No, don't average. Sell on rise.
Akshay, our viewer wants to know if he can go ahead and buy Suzlon Energy at the current levels. Would you recommend that on the charts?
I would say avoid.
The next one coming in, it's on Blue Star, and our viewers asking is it a good time now before the summer purchase. Tapan?
Yeah, he can.
Okay, the next one is on NTPC. Whether this is the right time to make an entry or not. Akshay, your view on the charts?
NTPC, I think you need to wait for dips. The right level to enter on charts would be in the range of 350 to 355.
Our viewer Kameswar has actually got Central Mining in the IPO. Tapan bought at 172. He's sitting on a loss. Should he wait for some more time?
Yeah, wait for one more quarter.
Okay, the next one is on KPIT Tech. Our viewer is holding 15 shares at the levels of 1165, sitting on a 40% loss. Buy the dip or exit? Akshay, your view on the charts?
Exit.
Dheeraj has bought into Ashok Leyland at 157. What would be your view, Akshay, on this counter now?
I think you can buy on dips. The appropriate level is around 140 to 145 zone.
Okay, Geo Financial, is this the right time, best time to buy this counter for the next 12 months? Akshay, your view on the charts from a slightly long-term perspective?
Not the right price. I think 200 is the right price to buy if you are looking from long-term perspective.
Would you recommend Tapan buying into HDFC Life now for the long term?
Yeah, he can.
Okay, the next one is on ICICI Bank. Bosco wants to know if this is the right time to take a sell call on this one. Akshay, any view on this one?
Yes, short term, the technical trend is weak. 1180, 1170 can be the downside target.
Okay.
Thirumala Chemical bought at 242 by Mahesh. What should he do with this, Akshay, now? Should he hold on or exit?
Trading bounce back around 200, 210 is an exit point.
Okay, Pondy Oxide. Sunita is holding this counter at the levels of 1180. Wants to know if she can average or book losses. Tapan, any view?
Hold it.
Vidol bought by a viewer Saurabh at 1569, Akshay. He's currently sitting on a good profit. Should he book out?
Can you name the stock? Vidol.
Vidol, V-E-E-D-O-L.
Yeah. Vidol, keep a stop loss of 1184 and book out around 1400.
Okay, Siemens, 200 shares. Arun wants to know whether he can hold or sell. He's not given us the buying price, but Tapan, your view?
Yeah, hold it.
Rajalakshmi from Chennai is actually asking if she can sell her 350 shares in Bajaj Housing now or wait for a pullback. Akshay.
Wait for a pullback around 85.
Around 85, got it. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Akshay as well as Tapan, thanks so much for joining in and giving us your perspective on all those stock queries that we've solved in the last half an hour. But viewers, before we wrap up, a very quick word in that sense about what we've achieved here at NDTV Profit. it has emerged as one of the #1 channels in terms of our YouTube engagement. So thanks so much for all of you who have stayed through with us at this point of time through our channel as well as through us with us on YouTube. We've doubled our viewers essentially in the last month or so. But thanks so much for tuning in and subscribing to our YouTube channel as well as to tuning in to Ask Profit as well. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil?
Hello and welcome to India Market Close on NDTV Profit. I'm Hiral Dadia and with me is Somit Sarkar. Somit, clearly, Sharad put it really well today where it is April Fool's Day for the markets and the participants because what's happening with Nifty 50 is very interesting. In pre-open trade, we hit that 23,000 mark, and from there, if you just pull up the intraday chart, that will tell you the story. A 400-point surge, not that bad, but from the day's highest levels, we've kind of given up some amount of gains already. We hit a high of 22,941 in terms of opening, a low of 22,331. So you can see that kind of range that has been playing out from the day's lows to the day's highest levels, Somit.
Well, yes, this 22,331 was largely pre-open, but from 22,940, at one point of time, we were down nearly 300 points. It is quite a volatile trade, in fact. So I would not still jump into the fact that Bulls has done an April Fool for bears, given the fact that sell on rise strategy continues.
Sell on rise strategy is continuing. Let's quickly pull up Bank Nifty as well, and then we look at the sectoral heat map. In terms of Bank Nifty as well, it's a very similar chart. Gains have continued, and this is on Monday after seeing that profit booking that came in terms of Bank Nifty, that's the private banking space and the PSU banking space. They have somewhere gained some amount of control in today's session. Let's just look at the contributors on Nifty 50, because that will tell you what's actually supporting the markets and what's not supporting the markets. There you go. In terms of the support coming in, HDFC, SBI, RIL, L&T, all your heavyweights are the ones which are giving you that kind of support. Pharma coincidentally has been slightly under pressure today, and that has been one of the sectors where everyone has been bullish on right now. NTPC, HDFC Life, a few of the other ones which are seeing some profit booking. In terms of broader markets, and then we look at the breadth as well on the advanced decline ratio, a similar chart if you see in terms of mid cap 150 and the small cap index as well, where we are seeing gains, but it's the small cap space which is still holding on much better as compared to other
value
indices.
buying seems to be happening when it comes to the small and mid cap, at least. They are outperforming the benchmark clearly.
So that's clearly what's happening here. Let's look at the advanced decline ratio, and then Somat will take us through the factors. There you go. Exactly, it's remained parallel flat where we started off. That's exactly where we are. So no major changes in terms of where the breadth of the market goes. But I think key is going to be from here on, as Somat is saying, sell on rise strategy that continues, and the factors you should be watching out for.
Well, if you look at the day's trade today, the Nifty has changed direction nearly 8 times on intraday basis, and this is about 100 points intraday move that we are talking about on both the side, that is up and down. And this clearly shows the kind of volatile movement that we are seeing. And in the last 1 hour, we have seen a sharp drop coming in of nearly 300 points. So sell on rise strategy continues at the higher level. War-related news continue to drive the flows and direction in the market clearly. And apart from that, if you look at Nifty has snapped its 2-day losing streak. But again, as I was mentioning, it's down over 200 points from the day's highest point. If you look at the support level, 22,650 has clearly acted as an intraday support coming in, while resistance continues to be at around 22,950. Now, analysts have continuously said that we need to decisively move above the 23,000 level for the sell on rise strategy to move out of the books for the traders. Apart from that, defense names gain, while AC stocks, and this is largely because of the AMD news that has come in, which says that there could be some rainfall in April. We are seeing some pressure coming in here, and pharma continues to remain weak. Seems like some money moving out of defensives to other sector at this moment. Broader market has clearly outperformed. Value buying continues in small and mid cap stocks. PSU Bank among the top sectoral gainer. All components trade in green. While on the flip side, Nifty Pharma, as Hiral was mentioning, along with that IT, other two indices which have fallen sharply from the day's highest point. In fact, Nifty IT was also down around 2% from the day's high point at one point of time.
Interesting factors we are watching out for. Thank you, Somit, for that. Let's also get in Nilesh Jain, as well as who's joining us on the show. Along with Nilesh Jain, we have Chakri Lokpriya as well. Welcome to the show, gentlemen. Always a pleasure to speak to you. Nilesh, with the gyrations that we are seeing in terms of where the markets are concerned, Somit was just indicating that it's more of a sell on rise kind of a strategy that the markets have been watching out for right now. Basis what's happening in terms of Nifty 50, what should that strategy be, and your topics?
Very good afternoon to you. Good afternoon, everyone. Well, absolutely rightly pointed out, the overall broader structure continues to remain sell on rise, given the kind of profit taking that we are witnessing once again from today's high. Looks like overall the markets are likely to remain under pressure, and whatever pullback we are likely to get is likely to get sold into. So overall, 23,000, 23,500, that's the broader resistance zone for the Nifty. And we expect Nifty to, as of now, oscillate in the range of 22,500 to 23,000. So overall, the market is likely to go down towards 22,500, 22,000 going forward. So broader structure continues to remain bearish. We have seen some bit of cool off in the IVs, close to 10% kind of correction we have seen, but still it is trading at elevated level of 25. It needs to cool off below 20 for bulls to regain the control. But as of now, given this kind of IVs, I think one has to remain cautious in the market. So as far as trading bets are concerned, I have one sell recommendation that is on the short side. That's HDFC Life. So overall, the broader structure for HDFC Life looks weak. We have seen continuation of a lower top and lower bottom formation, and also we have witnessed short build-up of position in today's trading session with an addition of OI close to 9%. So given this kind of a setup, I think HDFC Life is heading towards 560, 550 on the lower side, and one can keep a stop loss at 585, and HDFC Life is a short.
Okay, so that's with regards to where your top picks go at this hour as well. Chakri, with the setup that we are seeing right now, before I take a question with you, I just want to go across to a analysis that S. Narain from ICICI Prudential AMC has spoken about. What he's saying right now is that based on our valuation and sentiment indicators, they are turning more favorable as of now, and we believe this is an appropriate time for investors to gradually increase their allocation to equities while continuing to focus on asset allocation strategies. However, unlike 2020, the return expectations should be more moderate given the global uncertainties that we are seeing. And in such an environment, investors may actually consider starting SIPs or STPs in diversified and unconstrained equity categories such as the Flexi Cap Fund, value or business cycle funds, while continuing to use asset allocation funds to navigate volatility. And as always, disciplined investing and avoiding extreme positions remains the key. That's what everyone has been talking about as well, Chakri. So would you say this would be a right time to start nibbling in terms of where markets are concerned? Because valuations and sentiment indicators probably are turning slightly positive.
Valuations are probably at about 17.5, 18 times, which is slightly higher than where they were at the bottom of the Russia-Ukraine beginning of the war in 2022. So if we go to that bottom, then which means the market can trend another 4-5% lower from current levels. So that's largely predicated on the fact that, so therefore a staggered buying, because since it's difficult to predict when oil prices will go down, when war will end. And knowing that the downside is about 5%, a staggered buying might be the way to go, given that many stocks across large and mid are at value buys because their valuations are very reasonable now.
Okay, DMart continues to remain in focus given the fact that the company has managed to outperform the store expansion plan by a big margin. Mahima, I believe earlier they used to open around 40-50 stores, and this time it's around 80 stores that they've opened this financially. So big outperformance coming in here.
Absolutely, 86 is what they've done in FY26, and the average store additions that Avenue Supermarts has done in a financial year is generally 40 to 50 odd stores. As Soumit rightly mentioned, I mean in just last 4 odd days they've announced a couple of store additions. On 31st March it was around 12 new stores that they added. Before that, on 30th March they announced around 7 new stores getting added. On 29th they announced around 3 new stores, and on 28th 1 store was announced. Q4 itself, they've added around 58 odd stores. And 23 new stores in just last 4 days is what we've seen. With regards to where FY26 goes, as mentioned earlier as well, around 86 odd stores is what they've done, and opened the highest number of stores so far. With regards to where overall picture is concerned, with regards to where brokerages go, they have maintained their position positive stance. Elara has said that strong store addition beat versus consensus may kind of drive earning upgrades going forward. With regards to the strong pace of opening in FY26, this augurs well with for FY27 revenue as well. Morgan Stanley has also said in fact, CLS has also said that strong store expansion and accelerating like-for-like growth is something that will drive sales momentum going forward. And lastly, they've also kind of made sure that the geographical expansion is also a part of this entire expansion plan, because they are expanding more towards tier 2 and tier 3 cities, and that is something that will diversify growth for them as well. So this is the overall view, and in fact, if you take a look at the stock performance as well, 1 month the stock is up 12%. In just past 5 days, it's up 9%. So despite of the kind of volatility that we've seen in markets, the stock has gained around 12% in the last 1 month. So this is the overall view with regards to where Avenue Supermarts go.
Okay, so that's with regards to Avenue Supermarts. Thank you so much for that, Mahima. But along with the Avenue Supermart, you're seeing some good momentum when it comes to Trent as well. Let's put up that counter on the screens and you'll see the kind of momentum that's picking up on a Trent. that stock also seeing gains of 5.5%. Nilesh, DMart as well as Trent, if you have both these counters on the charts, what would it tell you?
Well, as far as DMart is concerned, the broader structure have turned slightly positive. DMart has turned slightly positive today. In fact, in last couple of trading sessions, if you see, it has formed a very good base formation in the zone of 3,700, 3,800. So overall, the broader structure has turned positive for upside momentum to continue towards 4,400 to 4,600, and one can keep a trailing stop loss at 4,100 for the existing long position. Fresh entry can be initiated on declines only, and the setup looks positive. Whereas on the contrary, if you see, trend structure is looking negative. Although today we have seen a spurt of 5%, the broader structure still appears on a negative side. So pullbacks are likely to get sold into unless and until it takes out 3,800 mark on the upside. So comparatively, if I have to pick any one pick on the long side, that would be DMart.
So that's a technical view coming in there. Chakri, between a DMart and a Trent, if you have to look at the valuations, if you've seen the way the stocks have performed in 2025 and now if you have to look at 2026, would you be a buyer, at current levels as well? Or do you think valuations are extremely on the higher side as compared to what you would be comfortable with?
DMart has corrected significantly over the last 12 odd months on the growth fears of the company's same store as well as its margin improvement, which had lagged behind. Recently, the company is beginning to show some amount of business momentum, and therefore the growth expectations are likely to be revised up. And given they have corrected fairly significantly, it's a high growth sector. I think valuations aside, I think the stock looks okay to accumulate from current levels.
Okay, so that's Avenue Supermarts. Any view on Trent?
Trent, has consistently missed on a couple of fashion cycles in the last 1 year. And also, it seems to sales has kind of flagged off. I think those errors kind of have to be, or rather business processes need to be further improved before we can take a fundamental upgrade on Trent.
RPSG counter, a small cap stock, but quite interesting move. In the last 1 week, the stock has moved up nearly 65%. And this is largely on the back of a couple of news that has come in on the IPL business. Rajasthan Royals getting sold and then United Spirits selling RCB. And at what valuations these two cricket teams were sold implies that Lucknow Super Giants could be valued at close to 18,380 crore. Now, RPSG owns 51% stake, which means that the value of their stake in Lucknow Super Giants comes to around 9,000 crore, but company continues to trade at a market capitalization of just 3,000 crore. So even if we remove the holding company discount, there could be some value in it. But again, this will completely depend on whether RPSG Ventures goes ahead and sells its stake or divests its part of its stake in Lucknow Super Giants or not. But Chakri, any view on RPSG Ventures given the fact that they're still trading at a deep discount compared to the intrinsic value?
This is a typical holding company discount, and as you rightly pointed out, there is nothing on indication on the horizon that the company will actually sell any stake, and also given that it represents a very significant portion of the overall value, it's that kind of discount is while be excessive, but these come and go in spurts, and therefore it's difficult to take a call on that.
Right. Let's go across to Puneet to understand how's the FNO setup looking like after in the new series.
Thank you for that. We're definitely seeing a positive start to this particular series. Continue to see that bullish momentum. So when you look at the Sensex, almost all of those counters were buzzing in trade today. Indigo, Trent, Adani Ports, BL continue to be the top 4 gainers. While over the last couple of hours, we've seen some counters trade in the red, but very minuscule at that time, barring Sun Pharma. So the momentum seems to be continuing. But when you look at these individual stocks, in terms of long build-up, you're seeing Avenue Supermarts. The new store openings is having a bullish impact on the stock today, up 7.5% now. BSE is also up 7% with those deferral of norms by the RBI and continues to be a positive trigger for this counter in terms of short coverings. Masgo on Dock is seeing a massive covering of shorts, now up 11.5%. So is Bharat Dynamics up 9.5% as well. But in terms of longs being unwinded, so in terms of shorts being built up, you're seeing Blue Star as well as Dr. Reddy's in terms of stocks which are seeing build-up of short stocks down 5 to 3%. And in terms of long unwindings, there's not too many that are seeing longs being unwinded. So these are some of the stocks to keep in focus. A lot of them buzzing on the back of news flows and some in terms of what we see in the market performance today.
Okay, thank you so much for that in terms of getting us what the F&O snapshot looks like as we speak right now. But moving on, if you have to look at few of the other names which we're talking about, your entire defense pack has been buzzing in trade, and that's pretty much evident in terms of the F&O activity as well. Let's just pull up the India Defense Index. Smart gains, Garden Reach, Cochin Shipyard, Mascon. Your top three gainers are coming in from the shipbuilding space. BDL, BEL also are two other names which are seeing some smart moves in today's session. If you have to look at what's happening there, let's just pull up the reason why you're seeing this. Now, these three stocks are the top gainers on the India Defense Index. Garden Reach has recorded the highest ever annual turnover at 6,400 odd crores in FY16, and they've commissioned 5 vessels as well during the year. They've also delivered 8 vessels to the Navy. Cochin Shipyard, it is inclusion in the F&O from today, and that's the reason why probably that's buzzing. Mascon, as we know, is already a part of F&O. So these three stocks which have been buzzing in trade from the shipbuilding space. And BEL is another one where their FY26 revenues have seen a growth of around 16%. The total order book now stands at 74,000 odd crores, which is up around, as we mentioned, 16%. Order book includes almost $495 million worth of exports. And their overall exports have increased almost 33% if you have to look at the full year. They've bagged orders worth 30,000 odd crores in FY26 itself, and this would include export orders worth $346 million. Chakri, when you're talking about the defense pack as well, the kind of gains that are coming in and up moves that we've seen in the last couple of trading sessions, your view on this shipbuilding pack and your other defense companies?
Two things. One is shipbuilding. Indian government has very big plans of the amount of spent over the next several years. So which means the revenue certainty for these companies is very high. But these are long dated orders. So definitely these are companies which are worth buying on a staggered basis. At any given point, they can be very highly volatile. And the other defense pack, given what's happening in the world, order books are still very, very strong, and therefore provides the revenue for, and companies like Bharat Electronics valuations only trading at about 30-35 times are actually still reasonable despite the rise.
Okay, so that's with regards to defense majors. Nilesh, anything on the charts that you like when you're talking about defense companies? HAL also is another one which is seeming to be pretty interesting.
Today looks like merely a pullback trade, but we have seen a very good spurt in the stocks like GRSC, which is up close to 19%. So comparatively, GRSC looks better placed, but not advisable to buy at current level because the risk and reward is not favorable. Now coming to HAL as well, we have seen a very strong rebound after fall of almost 7 to 8 consecutive sessions. So quite possible that we may see a follow-up on the upside to continue towards 3,800 to 3,850. So keeping a stop loss below 35.50, HAL, if somebody is holding, can stay put, and fresh entry can be done if at all you see any dip towards 3,600 to 35.50.
Well, moving on, 22,000. When it comes to the benchmark specifically, 22,650 seems to be a strong support level, is at least what dealing rooms are indicating in trade. And yes, even after the, and again, we have seen one more direction change in the market in the last 15 minutes. From 22,750 we have come down to 22,650 yet again. But a few stock specific actions that dealers have highlighted in trade. Firstly is on HCL Tech. The stock might be gaining in trade, but dealers indicate that there are sell flows on the HNI desk because they indicate that FY27 guidance could be on the weaker side compared to what the street is estimating, and hence this sell flows coming in. For Nykaa and Titan, there are buy flows on the large HNI desk. Dealers indicate that the Q4 updates could be on the stronger side for both the counters, so keep an eye out for both the names. Axis Bank, there are strong buy flows on institutional desk. Both foreign and domestic institutions have been accumulating in trade, and delivery volumes could be also on the higher side. And lastly, when it comes to eMudra, there was some selling pressure that we were seeing on this counter on the DI desk for the last few sessions, but what dealers are now indicating is that this is largely over and the stock could bounce from the current levels going forward. So keep an eye out for eMudra as well. Chakri, coming to you on HCL Tech, we have already seen a lot of a massive fall when it comes to all the IT names. Post that, do you do you think that the valuations are currently factoring in that a weaker guidance is largely factored in that, or there could be some more downside for IT names if the FY27 guidance comes out to be a bit weaker?
The valuations have corrected, and the expectations before the war was that, the AI, because of AI, these companies would lose about 2 to 3% of their annual revenue, but that would get replaced towards the second half of 2026, gradually as AI services done by IT companies start generating revenue. But because of the war, what has happened is, the new contracts that they were supposed to get are getting delayed, and therefore that revenue guidance is what is likely to cause the weakness. So it's more a short-term thing rather than any secular trend in the companies.
Okay, so that's with regards to where HCL Tech goes. The stock is trading at the day's lowest levels as we speak, in spite of CLSA actually upgrading HCL Tech. So it's interesting to see how this stock is moving. In fact, let's also get in Neeraj Shah, who's joining us remotely. Neeraj, good afternoon. From where we've started off in terms of the day-to-day, our conversation was whether it's going to be a sell-on-rise rally, whether the bears will continue to hold control or not. We have given up gains, but still it seems to be a little bit steady today.
Yeah, actually in line with what we spoke in the morning on India Market Open, isn't it? I'm actually pretty happy that this has happened, because had it not, then it would have enticed maybe a few people to buy into the strength on close. This is actually the market behavior that you would expect when we've had so many days of a corrective move, that if there is a gap up, then you want to go into the evening a little light, or bring off some of the positions, because you don't know what will happen in the next 12 hours before the next time our markets open. So not surprised at all, but yes, definitely some of the defense names showing a very good rally. But I want to take it to our guests, Hiral and Somit, and a question to Chakri, talking to him after a while. But Chakri, I know that you look at financials so closely amongst all the other things that you do. I wonder if, despite the fact that the markets have come off a little bit, are financials a good port of call for somebody who's wanting to make allocation at the current juncture without bothering about what will happen in the next 1 month?
Indeed, you actually nailed the question in terms of the answer is self-evident, because, the financials have actually corrected 16-17% just in the last month or so because of the war. And because it's directly linked with economic activity, slower expectations of slower economic activity have brought down the valuations. And of course, a couple of announcements like the RBI, that 100 million limit of dollars, those added an additional noise to the things. But overall, all the banking, whether it's banks or NBFCs, the balance sheets are extremely strong than they were in any previous economic downturn. And their capital ratios are the strongest. And with reasonable valuations, and so I think as this war activity subsides, or rather oil prices start falling down, because very important for inflation in India, direct and indirect, the immediate beneficiaries, the first beneficiaries rather, are financial services. And the valuations right now are actually very attractive.
Okay, so financial services, that's where Chakri is finding value right now. Yesterday IMD came out with a comment saying in terms of what could be expected in terms of April and then May and June. And what is interesting is that probably April is what you will have to enjoy, because it's going to be slightly mild. So enjoy it till it lasts, but the real summer heat, the heat wave, is running late, and it is expected to come in May and June. It is going to be longer, it is going to be tougher, and there will be heat waves across much part of India as we speak. Now, to decode this further, we are joined by GP Sharma, President, Meteorology and Climate Change at SkyMet. Mr. Sharma, welcome to the show. Yesterday IMD has forecasted, and what they've said is that April is not going to be as hot as it was anticipated earlier. The heat wave is expected to come in May and June, but will last longer. How is SkyMet looking at it?
Yes, you see, the month of March itself, it's a little different this season. Okay, the way it started, hot days, dry days, the first half was like that only, and it gave some anxious moments for some time that the heat is going to build up a little earlier than normal. But then the second half was contrasting to the first one, and we saw a lot of rains coming up. The temperatures are dropping. Overall, if you take, since the first half was very hot in the month of March total put together is a slightly above the normal. Okay, but that's a courtesy, a second half of the month, which saw a lot of rains in almost all parts of the country, particularly the mountains also. Okay, now the transition month of March, which we say you transit from winters to the spring. Okay, month of March is supposed to be typical pre-monsoon month when the heat starts building up, but it's not like so this season. But see, the last about 10 days or so, there's a lot of weather activity. Okay, different parts of it. Seen weather activity, unprecedented weather activity. Hailstorm at some places where it is never seen. Gujarat, Rajkot had hailstorm. Pune had hailstorm at fag end of March. So these were unusual weather phenomena which were there, and courtesy those phenomena, it has cooled down a bit. Nowhere in the country the temperature is above 40 degrees. One odd place only touching 40. Otherwise, generally it is in the just about mid 30s or high 30s. Okay, particularly the northwestern part.
So Mr. Sharma, quick question on this. One, your heat wave expected to start in May, June. Is it going to be hotter than what is on the cards, what is expected? And two, in terms of the El Nino effect as well that everyone is looking at, a quick view on that front.
Yes. You see, basically the heat which we are looking at, the forecast prediction of excess heat this season, that was on account of the building up of El Nino conditions. It is there. El Nino is building up, but just remember, we are still in La Nina. It is fading all right. But after La Nina, we go into the ENSO neutral condition, which will last for at least few weeks, if not more. And then thereafter, we go into El Nino conditions, which means possibly it may come not before, in any case, in the month of June. To me, it appears it may show its appearance starting in the month of July, but peaks only after the month of, say, August or September. In any case, El Nino, when it starts around this time, in the month of June also, it peaks only at the fall time of the winters. And effect will be seen. The hot conditions which we see, as we say, April, I am not going for any heat wave conditions over most parts of the country. Rather, the first half of April, we'll see a lot of rains, a lot of showers, cooling down. Most parts of the country, including the central and the northern parts. Yes. So second half of the season, monsoon season, I'm definitely more, you can say, worried also in terms of El Nino conditions. They will be building up and they will show its effect. So I expect more of heat wave conditions coming up and not before May and June. Yeah.
Got it. Got it, Mr. Sharma. So one is the summer prediction. Two, as things stand with what you said, does it promise to be a below average rainfall season as things stand? Or is it difficult to predict that right now?
No, you see, going by the historic records, no El Nino, whether it starts early in the season or comes halfway through, has been kind to the monsoon season. Only few exceptions. The rainfall, generally seasonal rainfall goes, if not drought, below normal. 75% of the cases, it is a drought or below normal, out of which 60% cases, it is a drought. So it goes without saying that this time also, the El Nino conditions, which possibly will build up largely after the month of, say, June or so, it is going to impact our monsoon season. I will still go with the premise that the rainfall, seasonal rainfall, second half of the season, that is month of August and September, that is going to be more erratic, and possibly the monsoon will get corrupted mostly during the second half. The first half could be a shade better. It could start a little on the better note, but then gradually it will pick up, and the second half will be, I will say, the seasonal rainfall will get corrupted. And overall, I will not go for better rainfall. At the best, possibly it could be below normal. Yeah.
Thank you, Mr. Sharma, for those insights. Helps because, when you talk about IMD, SkyMet, and the views match to some extent, you know what could be expected from here on as well. But thank you so much for joining in. Always a pleasure to speak to you. Chakri, quick view when it comes to your, air conditioner companies, your durables, because they are the ones which come into focus, especially when you're talking of a heat wave right now. From your Voltas to your Whirlpools, Blue Star, for them also, they are 100% not sure whether this summer is going to be as good as they were expecting after that downtake that happened last year. There is not that kind of confidence prevailing yet. Your views?
Two or three things have happened for this consumer, the discretionary ACs type of sector. One is last summer wasn't really that hot, lower demand. Second, fast forward this year, rupee has fallen, import costs have gone up, shipping costs have gone up, and pricing power is not there for these companies. Therefore, margins are going down. Against that, as a general backdrop, you have in addition a slightly weaker than expected summer. If that turns out to be the correct forecast, then lower sales are likely to take down the valuations even further. So, this is a sector which is, while the valuations have corrected a lot, the margins are still going to correct. So I'll still wait by the sidelines.
That's with regards to consumer durable companies as we speak. But thank you so much, gentlemen, for joining us on the show. Always a pleasure to speak to both of you, Nilesh and Chakri. Before we slip into a short break, a quick word of thank you to all of you watching us on YouTube. NDTV Profit has emerged as the #1 business YouTube channel in March in terms of the total views. What makes this even more special is that we've broken our own record, doubling last month's 29 million views to set a new high in March, and this milestone belongs to our viewers. Thank you for your trust, time and support. We'll keep bringing you sharp, credible and insightful business news every single day.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the tulips and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics.
Will India market close and an okay market, and okay only from a perspective of the fact that 1.5% is great, just that we had seen 2.25% or 2.5%, and therefore just that off. The last 5 minutes though, again a bit of a spurt higher. The market is telling you it doesn't necessarily want to correct, but yes, some bit of selling pressure being seen for sure. Okay, our guests are with us, and Sudeep Bandyopadhyay Johnson, to talk about the fundamentals, and great to have him. It's been a while. Of course, Shivani Sarda Johnson to talk about the derivatives and the technicals as well. Thanks so much, both of you, for joining in. Shivani, I'll start with you. Are you seeing some bit of long unwinding towards the close of trade? Is there any sign for what can people do in the last half an hour for a trade tomorrow?
So definitely, we did head in for a good start in today's session, but we haven't been able to hold the higher levels. Of course, India VIX has cooled off slightly from the highs, which is kind of supported the bulls in the first hour, but then again it is above 18 to 20 zones, which still signifies that there is some bit of discomfort to the bulls. So unless this cools off, we couldn't maybe rely on the recovery or the attempts of recovery that has been made. So we will look out for Nifty for a consolidative view. For the last half an hour, there would be some bit of pressure which will, persist over here. So sell on bounce for the intraday perspective, we are looking at 22,750 as the hurdle and 22,500 as the support level for Nifty.
Asia, by the way, had a very strong close. Nikkei was up 5%. European markets are doing okay for themselves. So the world is in a bit of green. Futures are not looking too bad either at the US. So we might actually have a decent handover today as well, unless some comments change. Keep that in mind. Sudeep Bandyopadhyay with us as well. Sudeep, you've seen various such cycles, though it does seem different this time, but then when does it not? The question is, though, we've had a bit of a bounce today, some bit of reconciliatory statements as well. Is this a good time to bottom fish, or would you wait for a trend to build up?
Well, Neeraj, I think from my experience, I think it's definitely time to bottom fish, but in a very, very calculated and calibrated way. At some stage, I think the US has realized that they can't win the war the way they were envisaging. So they will, and I'm sure they'll figure out a way to conclude this engagement sooner than later. And if that happens, I think things will start looking up on the equity markets front world over, including India. And initial signs of that are visible. Contradictory statements are still coming out from Iran as far as the negotiations are concerned. But I think it's up to the US president to decide when to walk out of this engagement. And as and when he walks out of this engagement, I don't know about the geopolitical condition, but at least the market will cheer it and market will like to move on from there. So under the circumstances, I think it will be intelligent to start biting into the good quality stocks if you have liquidity available, but slowly in a very calibrated manner. If you have $100 to invest, maybe 10 or $20 you invest today and wait for things to unfold, you will never be able to catch the bottom, neither will you ever catch the top. So it's always better to do it in a slow, calibrated and deliberate manner.
Right, shifting focus to Indigo, that stock definitely remains in focus because of the move that we have seen in the counter today. Now, if you look at the timeline of how things have moved for Indigo, firstly, In the morning, IOCL came up with this release where they had shown an increase of around 115% when it comes to the aviation turbine fuel prices. This changed when the market was about to open at 9:09. There were reports which said that hike applies only to chartered flights, and Indigo opened at a higher rate of around 2.3%. As time moved further, at 9:17, airlines, there were reports which were quoting airlines, and that said that there was no ATF hike on domestic routes. And then at that point of time, Indigo moved much higher at around 4,098 rupees. Further down the line, at 9:38, IOCL came up with a clarification and updated the rates on the website, and the new rates indicated a hike of ATF prices of just 8.5% as against 115 that was shown earlier. The share prices moved much higher at around 4,123 rupees. Post that, Government of India also came out with this notification where they just said that only 25% of the increase in ATF fuel was passed on to the airlines, and the remaining was not passed on, and Indigo share prices moved much higher at around 4,191, and at the day's highest point it was close or above 4,300 level. So clearly a lot of new informations coming in, plus a short build-up that we had seen in Indigo, led to this sharp up move in the share prices of the counter. Now, what happens with of this announcement that has come in? What will be the impact? Firstly, the negative impact will be on the oil marketing companies, because on petrol and diesel they were already incurring huge losses on the marketing side, and with now they'll also incur huge losses on the ATF side, given the fact that they're not passing on the entire impact to the airline companies. IOCL is the largest player in this segment, that is the ATF segment. They have a market share of around 54%, while BPCL and HPCL have a market share of anywhere between 13 to 24%, while the remaining is with private players like Reliance Industries. Now, India's ATF demand, now that stands at around 8,000 TMT per month, and 70 to 75% of this is on the domestic flights. So a big loss that could come in for the oil marketing companies. Now, when it comes to Indigo, a positive impact definitely, given the fact the street was expecting that the ATF prices would double, but it's a hike of just 8.5% on the domestic route. 25% is the unit cost that has been passed on domestic routes, while on international routes, 100% of the increase is passed on. So on blended basis, if you look at, Indigo's fuel cost could move up by around 44%, and that would require a price hike of just 13% on the ticketing side. Now, Indigo has already taken a price hike of around 7 to 8%, and they will just require a further price hike of around 5 to 6%, which would be could be manageable for the airline company. So not a negative impact, in fact a positive impact coming in for the airline.
Okay, this is going to be very interesting in terms of the development since what happened and the way Indigo and SpiceJet stock prices have moved. Sudeep, any view when it comes to aviation companies, both of these seeing some smart moves in today's day of trade?
Well, today's development is definitely positive as far as domestic aviation sector is concerned, because the expectation was for a much bigger hike, but the hike currently passed on is much less and very manageable, as was being explained. As far as Indigo is concerned, I didn't understand the logic of the recruitment for the new CEO. I'm sure he has his own expertise, but the expertise, at least the proven expertise, is on a different side of the business, not on the this value carriers or a budget carrier segment, and definitely with no India experience, no budget carrier experience. I think it will be an interesting thing to watch how he performs and how he handles Indigo. But I think as things stand today, the aviation sector, I will recommend investors to stay away. There are too many moving parts, and things are not yet settled. Yes, a part of the ATF cost has not been passed on for the time being, but there is no guarantee that it won't be passed on in the future once the elections are over in 4 states. So it's a fluid situation. It's better to stay away from aviation stocks.
So that's the view coming in when it comes to aviation as a segment. But moving on, Adani Ports has crossed a major cargo milestone of 500 million tons and set sight on doubling this by 2030. Puneet joins us with all the details. Puneet, stock at the day's highest levels. What are you picking up?
Well, thank you for that. It's definitely a big milestone. 500 million tons in terms of cargo movement is a target that Adani Ports has crossed now. It also comes with the company's network of almost 19 ports as well as terminals, and reinforces Adani's long-term ambition of crossing roughly around a million tons for cargo by 2030. So they are essentially looking to double the capacity in this time for cargo handling just in the next 5 years versus what they've done in achieving this milestone over the last 20 to 25 years. What's also important is that the management has retained this 1 billion ton target of cargo. Almost 850 million tons will come from within the country. So this will be domestic, as well as 150 million tons coming in from the international ports, which are 4 of them at this point of time. When you look at the detailed integrated network, the company operates almost 15 ports in the country with 11,000 kilometers across the coastline, both on east and west in terms of the kilometers covered. They also have roughly around 4 international ports on strategic east-west as well as global corridor. So that helps in the international volumes as well. Apart from that also, the logistics vector is something that's showing very strong growth as well. It continues to have connectivity covering 95% of India's hinterland, and also that with its 12 multi-modal logistic parks, also with around the capacity to transport this from 132 trains and 20,000 trucks is a key growth vector. Apart from that, also a newer vertical, marine, is also starting to take shape now. They are connecting international waters with the global ports as well, and almost with 180 near-shore tugboats, that demand is also getting boosted as well. So overall, growth targets of course, achieving 500 million tons in cargo today, but also doubling that in just the next 5 years is the key story for Adani Ports today.
Thanks for that, Puneet. And Sudeep, one to come in here. Sometimes asset owners, businesses which can't be replaced, and if they are showing growth, need a market correction to give an opportunity. Is Adani Ports one such, or right now you might not be interested?
Adani Port has always been such a stock, Neeraj. In fact, I have been recommending Adani Ports for many years now. Even when there were a lot of these, Hindenburg reports and things like that, I always believed that, as you rightly say, they own the assets. So, there can be anything talked about the companies, but the ground reality is different. The assets are there, and they are extremely critical assets from Indian economy point of view. Exports and import both depend on ports, and they have this, kind of string of pearls kind of a strategy, which is they have ports on the eastern coast as well as the western coast over the last few years. They have created that. And with the logistics infrastructure, which they have now built around the ports, I think they're in a unique position to serve India's export and import businesses. So yes, from a long-term investor's portfolio point of view, Adani Port is definitely a good buy. This correction, which we have seen in the recent past, has been an opportunity, definitely.
Got it. Okay, thanks for that, Sudeep. And viewers, remember, standard disclaimer, you are watching NDTV, which is also an Adani Group subsidiary, if you will. So keep that in mind. Okay, Shivangi, some of these large cap infrastructure dominated names, Adani Ports, Larsen and Toubro, I'll throw in a BHVL out there in that mix as well, not as large, but still. When the revival, if it were to happen, these would be beneficiaries because all of them have been beaten down. Are any of them showing a trend or a build-up strong enough for you to consider a trade there?
So out of all the stocks that you just mentioned right now, L&T has been one of the most resilient names, even though it has kind of witnessed a correction in the last month. But we've seen a smart pullback from the lower levels in the last, say, about 6 trading sessions. We've also seen that, volumes have been fairly low at the moment, but a good amount of buying can be seen, and it is kind of emerging. Now, of course, this stock has been witnessing some amount of shorts, but the rollovers have been around about 87.4%. And a good short covering trigger would lead a fresh rally over here. So this would be definitely on radar, but the momentum will start building once this stock crosses and holds above 3,800 levels.
So that's with regards to Adani Ports as we speak. In fact, Adani Green Energy is also in focus on the back of delivering over 5 gigawatts of capacity in FY26, which sets a global greenfield expansion record outside China. Its operational performance also is standing pretty strong. Overall, their capacity has risen to 19.3 gigawatts, and the execution has been led by Khavda Mega Renewable Park, where 9.4 gigawatt has been installed at Khavda out of the planned 30 gigawatts by 2029 is what they're looking at. A quick view in terms of Adani Green as well. Sudeep?
Well, I think overall we do like the power segment, and we do like alternate energy. There is the importance of that is definitely getting more and more highlighted with what's happening with oil and gas during this West Asia war. Yes, the green energy is definitely the way to go. Adani Green specifically, I think a lot of vectors are there which definitely can propel the growth going forward. So yes, one needs to keep this in the radar. At this stage, we are not in a position to recommend buy in this counter because of multiple reasons, but we are definitely watching the developments.
APL Apollo remains in focus. The company reported its updates for the fourth quarter. And if you look at the sales volume, it has moved up by just 9% on a YY basis. Again, it's below what the street was estimating. The estimates were close to 950 tons to 1 million tons per annum. And the company has reported a number of 925 kilotons for the fourth quarter. Now, analysts believe that this will lead to a healthy EBITDA per ton. But again, there could be some earnings cut that could come in because of the fact that they have missed their volume guidance. So that is one thing that has come in negative for APL Apollo. Do you track this counter, Sudeep, APL Apollo? Any view at the current valuations, or should one just stay away given the fact that steel prices are on an uptrend?
Track. In fact, it's a little unfortunate. The company was doing very well. And a lot of these government schemes, including Jal Jeevan Mission and things like that, was expected to give a boost. But unfortunately, the March has been an unmitigated disaster. The company uses a lot of gas, and the gas supply cut has definitely affected production as far as APL Apollo is concerned. They have also facilities in Dubai, in UAE, and the West Asia turbulence has resulted in production suffering there as well. So I think combination of these two has affected the business volume in this quarter as well as in March. And this has impacted the overall business volume as well. From a long-term perspective, we are positive on APL Apollo. We'll have to wait and watch for this entire West Asia turbulence to subside, gas supply to resume to normal, Dubai operations to get back to normal rhythm. And I think things should start moving up. Yes, steel prices have moved up, but there is a way for them to pass on the cost going forward. So I'm not too perturbed with that.
Okay, so that's with regards to APL Apollo. But moving on, Acutaas Chemicals, it's a very interesting one to watch out for, because as the way the stock opened up in trade today, we saw some smart moves coming in there. And then you've seen that profit booking that has happened, which is now down 9.5%. It has given interesting returns to investors as well, if you have to look at a longer term or if you even look at a one-year chart. Let me head across to my colleague Varsha, who's standing by to tell us more. Varsha, it's very interesting to see your Acutaas Chemicals because clearly the kind of returns it's given investors, and now is when it has started to see profit booking.
Yes, absolutely. So we are seeing profit booking today, but this is one of the stocks or companies which is different from Neogen Chemicals or the set of chemical companies that we have seen, and we'll know why. Now I would just say when ideation turns into execution, even bear market rewards. So this stock Acutaas, if you see in the last 1 month, has given 8% returns, in last 6 months have given 70% returns, and year to date returns have been 34%. In the market where all the chemical companies, if you see, either have given negative returns or have given very bad returns to the investors. Let's see why investors have rewarded the stock. Of course, because of the first mover advantage in the battery solvents, then strong pricing conditions due to China supply disruptions is also one of the reasons why investors have rewarded the stock. We have seen a sharp, consistent increase in the margins. That's where the highlight is, and of course high visibility of CDMO growth pipeline that the company has, and even the strategic move into new age energy storage chemical is also one of the growth lever. and clear upgrade in guidance and profit trajectory are some of the reasons why investors have rewarded the stock. Let me start with the company which has entered into lithium ion battery solvents. So they are going beyond advanced pharmaceutical intermediate, pouring into solvents and additives for battery electrolytes. And if you see, these solvents are blood for the battery, which are very critical and high value components, and Acutaas will become India's first company to enter this space. Moving on, if I were to talk about why this is a game changer, because if you see, the large solvent capacities in China are being wiped out. So no new expansions in China, and Japan and Korea are reducing their dependence on China. So that means more growth for Acutaas. And there are no domestic suppliers in India today, and Chinese anti-involution policy have raised global solvent prices. And hence, these are some of the reasons why this is a game changer, and 2027 will be a very strong demand year for Acutaas. Talking about the strategic advantage, if you see, the electrolyte space has been dominated by Gujarat Fluoro and Neogen Chemicals. What does this mean? The Chinese competitors are fully backward integrated into these areas, but Acutaas is actually into solvent space, which is a high margin niche, and hence they are also diversifying into battery chemicals and new contract research organizations. So they are different from what you called as Neogen or Gujarat, and hence a premium valuation to Acutaas. Their EBITDA margin have surged to 38% from 16%. That's huge increase in the margins. Even we are seeing operating leverage and entry into high margin battery solvents and CDMO as well. Revenue growth the guidance have been raised from 25% to 30%, and EBITDA margin have also upgraded. So overall, a lot of things are actually working for this company, but even they are going into CDMO and battery chemicals. But lastly, valuation is one thing which investors should keep into mind, and hence because of high valuation, we are seeing profit booking into this stock.
Okay, profit booking on the back of high valuations coming in when you talk about Acutaas chemicals as we speak. I will take a question on Acutaas, but along with that, Lloyd's Metals is another one where the Q4 business update has been extremely strong, where the iron output has seen a growth of 120% on a year-on-year basis, the stock at the day's highest levels, and the iron ore production target is at 26 million tons in FY27. Along with this, you have Hudco and IRDA as well. Hudco has reported significant growth as well in terms of their Q4 business update, and IRDA also has reported a strong growth in terms of where Q4 goes, and both these counters are trading in the positive. Shivangi, on the charts, if you have to look at Hudco, IRDA, Lloyd's Metals and Acutaas, which one would you pick?
So out of all of these stocks, actually, I would look at Acutaas, which has seen a good amount of move. Of course, we've seen some bit of correction today, but overall, this stock has been overall, quite a resilient and a strong name. We've seen month-on-month basis, it has respected its 20 exponential moving average as well. Now, immediate basis, there might be some bit of consolidation and pain point, but overall, this stock is, showing some sort of resilience over here. Now, apart from Acutaas, my second preferred pick would be from the metal space, but definitely not out of the stocks that you mentioned, but one could look at Nalco for that matter.
Right. Capital market stocks also remain in focus. Be it Angel One, BSE, all have been trading higher in trade. Now, this is also because of the RBI deferment of implementation of the capital market exposure. It has been deferred by 3 months, and this is expected to benefit BSE the most as per analysts. Sudeep, anything that looks attractive in the capital market play at the current evaluation? Would you prefer broking firms, wealth management, or exchanges?
Well, out of the, of course, the benefit for this postponement goes to BSE maximum. So BSE definitely should be looked at. Also, remember, NSE listing is on the cards, and the benefit of that directly goes to BSE because NSE will get listed in BSE. So BSE will have one stock which will be exclusively listed there. and it will have obviously huge amount of traction amongst investors, both in the futures and options segment as well as in the cash segment. So BSE, I think from a long-term perspective, definitely looks good. It's not a cheap stock, so somebody buying it should buy for long term. But we like some of the broking company stocks, particularly the Grow. I think that company has got multiple growth vectors. It has got the largest number of customers. It's their broking business with usual ups and downs is growing. But beyond that, I think the wealth management foray, the mutual fund distribution, the insurance, the loan against shares, and margin funding, all these vectors are getting added, which are revenue accretive, and I'm sure will take them to a different level going forward. So this company can definitely be looked at.
Right. Some auto updates that have come in for M&M, if you look at, it's a 25% increase that we are seeing on a YY basis for the March data. Hyundai 2.5% increase, and that could be one of the reason why the counter is down, because all its peers, that is M&M and Maruti Suzuki, both have reported a growth of 17% and 25%, while Hyundai has reported a lower growth of just 2.5%. In fact, Tata Motors has reported a growth of 29%. So that could be one of the reason. On the CV side, Tata Motors CV 17% growth, Eicher VCV 10% growth, and Ashok Leyland has reported the lowest growth of 5%. And again, Ashok Leyland is also down in trade. And when it comes to the tractor segment, M&M has reported a 29% growth and Escorts a 7% growth. So stellar growth on all fronts coming in for M&M, be it passenger vehicle or tractors. On charts, Shivangi, how's M&M looking at this moment, given the fact that we have seen a sharp correction in all the auto names, but on charts, M&M?
On charts, if we look at M&M, we've seen, of course, Autopack has been a little lackluster and moving quite steadily, but it has kind of respected its key retracement level on the monthly basis chart. So definitely positionally, M&M looks quite good for a good a buy from these levels at a good risk reward. But on an immediate basis, maybe for the trading day POV, we would recommend that one could wait and watch, as this stock could go into some bit of consolidation.
So that's with regards to where auto companies go. So the quick view when it comes to, auto companies with the numbers that have come in so far?
Well, I think very interestingly, Ola's numbers look quite impressive. It was a written off stock with about 3,000 vehicles which they sold last month. That has gone up to 10,000 plus vehicles. So this is definitely a positive development. I'm not recommending a buy in the stock, but from an Ola perspective, it's a positive development. We do like M&M and we have been liking it for quite some time. We continue to like it. The numbers speaks for themselves.
Absolutely, and Ola, it's evident that the street is probably happy with the kind of gains that are coming in. But thank you, Sudeep. Thank you, for joining us on the show as well, and always a pleasure to speak to both of you as we speak. But very quickly, in terms of where markets are concerned right now, in terms of closing, if you look at Nifty 50, from the day's highest levels as well, we're almost ending towards kind of lows. We've actually opened up with gains. 22,679 is what you're tracking, 1.5% up move. So we've given up those opening gains on Nifty 50. In terms of Bank Nifty as well, a similar trend is what you're seeing, 2.4% higher is what you're seeing in terms of closing. Your advance decline ratio, the breadth, seeming to be pretty strong towards the advances, and that's because of that value bank that's happening in the small cap space as well. Exactly where we started off is where we are ending on the advanced decline ratio. Let's look at the mid cap and the small cap index right now in terms of closing rates, and then we look at the Nifty heat map. A 2.2% up move there. So overall, yes, it's not as bad as it seemed like in between during the day when we started to see that profit booking. It has tried to sustain itself above those levels. And if you see in terms of Nifty 50, heat map as well, that will tell you the story in terms of what is in the green. We started off the day with all the components trading in the green, but you have names like Dr. Reddy's, Cipla, Apollo Hospitals, Sun Pharma. It's Pharma as a pack which has seen profit booking in today's session. Ultratech Cement has taken a downer. Power Grid, NTPC, some of the power names have also been on the sidelines today, but clearly trend started off where it is. Strong gains there. Indigo has continued the up move. Adani Ports on the business update. BEL, Adani Enterprises, SBI, your, eternal, as well as if we talk about the auto numbers as well that have done pretty well in trade in today's session. Very lastly, just look at the NSE 500 components and see what's happened on that end, and just to look at a couple of names there. From a Mazgon, your entire defense pack has been pretty strong in today's session. Tata Tele, Delta Corp, Relaxo, a few of the other names. Again, it's Pharma here, Ipca, DRL, which have been weak, Torrent Pharma, which has been weak, Westlife Fluid, Blue Star has seen some bit of profit booking as well. But very interestingly, the way we are closing off in trade today, we've started off on a positive note. Sell on rise was the kind of strategy that we were anticipating this morning as well. That's exactly where it's played out. And we've ended with good hopes in terms of where markets are concerned. Tomorrow is going to be the last day in terms of the week. So it's going to be interesting to see how tomorrow pans out, because if we see some bit of positions that are rolled over because of a truncated week, you might see some bit of an uptick that could be coming in there as well. But completely out of time. With that, it's a wrap on this edition of India Market Close. Lots more lined up on the other side. Please stay tuned to NDTV Profit. A thank you from the team that put the show together.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy, gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and to the stock that is buzzing in trade today. First up, we have Garden Reach Shipbuilders, which has closed FY26 on a strong note. Also reporting its highest ever annual turnover of 6,400 crores, which is up 26% year on year. And the performance was driven by robust execution, with the company commissioning 5 vessels during the year and also delivering 8 ships to the Indian Navy, including frontline platforms. Garden Reach also made a significant progress on the construction of 12 export vessels for a German client, underlining its growing international footprint. So the FY26 update highlights the improved delivery capabilities and also execution momentum, strengthening the company's position in India's defense shipbuilding landscape. And here's next counter in focus is Avenue Supermarts. Now, this stays in focus as store expansion sharply accelerates. For the company, it has announced over 20 new store openings in just 4 days, and this is taking its total store count to 500. So this sharp pickup pushes the annual additions well above its historical pace and also signals an aggressive growth push. So brokerages say that the faster rollout improves revenue visibility and also sets up stronger momentum into the next financial year. Next counter in focus is Jubilant FoodWorks. That was in focus after renewing its long-term franchise agreement with Domino's Pizza. So the company extends its master franchise rights for international markets for the next 15 years with an option to extend it further. Now, this renewal ensures continued presence for Domino's in key neighboring markets and also strengthens Jubilant's overseas growth visibility. So this move adds long-term certainty to the company's international business strategy. Next counter in focus is Zaggle Prepaid, after laying out a strong growth roadmap for the coming years. Now, this company, guides for sharp revenue expansion, and this has been led by faster client additions and also deeper wallet share across existing customers. So management is saying that the focus remains on tightening the working capital, also improving the margins through operating leverage, and also using AI to drive its efficiency. Next counter that was buzzing away in trade was Sammaan Capital, after Abu Dhabi-based IHC steps in as a strategic investor. So this deal involves a preferential allotment of shares and also warrants, making IHC a promoter with a sizable stake through its investment arm, Avenir. Now, the company has already received a large part of the funding, with the remaining amount to come in over the next few quarters. Management says that the partnership anchors IHC's India ambitions under the Judan financial platform and also strengthens Sammaan Capital's long-term growth runway. Next counter in focus is Adani Green Energy. That has hit a key milestone with record capacity additions this year. So the company delivers around 5 gigawatts of new renewable capacity, and this is marking one of the fastest greenfield expansions globally outside China. Operational capacity now moves closer to 20 gigawatts, and this has been led by rapid execution at the Khavda Mega Renewable Park. And viewers, Adani ports have also hit a major milestone after crossing over 500 million tons of cumulative cargo handled. So the company operates a wide network of close to 20 ports and terminals, and this is spanning India and also key overseas routes. So management reiterates its ambition to scale cargo volume sharply by the end of decade, and also this has been backed by an integrated ports, logistics and also marine services platform. And viewers, next counter in focus is Carborundum Universal, that has decided to voluntarily wind up its German subsidiary Avuco under applicable local laws, and they have cited sustained underperformance and also mounting losses. So the company has said that it has repeated the turnaround efforts. They failed amid intense price competition and global overcapacity, also high inventories and also elevated input costs driven by macro headwinds. So Avuco's annual sales have steadily declined since its acquisition, in 2022, even as the cumulative losses mounted sharply. While the decision to exit a loss-making business is seen as a strategically positive for the company, the one-time financial impact of 110 to 130 crore underscores the high cost of winding down, also exceeding the original acquisition price of the assets. And here's next counter in focus is Coforge. It has crossed a key milestone in its global expansion journey. They've secured the Reserve Bank of India's approval for an overseas direct investment exceeding $1 billion. So the clearance paves the way for finalizing its $2.35 billion of acquisition of AI-led services firm Encora, also removing one of the most critical regulatory hurdles. So this deal is central to Coforge's ambition to sharply scale its digital cloud and also the AI capabilities, while also expanding its global footprint. So once completed, the combined entity is also expected to put Coforge firmly on track to achieve $2 billion in annual revenue by March 2027, also marking a transformative leap in scale and strategy. Next counter in focus is Aquitas Chemicals, and this stands out even in a weak market as execution begins to translate into returns. So the stock is up around 30+% this year, and this is after a sharp rally over the past 6 months. Investors reward the company's early move into lithium non-battery solvents, also helped by tight global supply and also strong pricing conditions. So the shift beyond pharma intermediates into energy storage chemicals improves the margin visibility and also strengthens the long-term growth pipeline for the company. Next counter that was buzzing away in trade was Lupin. It has crossed another important regulatory milestone in the US market. It has secured a tentative approval from the US FDA for its Sugamadex injection. And this is basically a drug, a generic version of Merck's Bridion, which is used to reverse the neuromuscular blockade during surgery and also has been cleared as bioequivalent across 2 dosage strengths. So this approval covers use in both adult and also pediatric patients aged 2 years and also above. So while final approval will depend on regulatory exclusivity timelines, the clearance strengthens Lupin's presence in complex injectables and also reinforces its push to expand its specialty portfolio in the world's largest pharmaceutical market. And viewers, the government has tightened sustainability norms for the food and beverage industry, mandating 40% recycled content in packaging from April 1st of 2026. That is today, with the requirement set to rise to 60% by 2028-29. So this move is aimed at accelerating India's circular economy transition, reducing the dependence of virgin plastics amid the easing supply chain vulnerabilities. And also, while FMCG players will need to adapt quickly, the policy is a clear positive for recycled packaging manufacturers, and companies such as Ganesha Ecosphere and also Uflex stand to benefit as demand for food-grade recycled packaging scales up in the years ahead. And viewers, next counter in focus is APL Apollo Tubes, which has reported a softer than expected close to FY26 results, missing its own Q4 volume guidance. So the company has clocked Q4 sales volumes of 9.25 lakh tons, which is up 9% year on year, but well below the 20% growth it had earlier guided for in its Q3 con call. So while FY26 volumes rose 11% to 35 lakh tons, the Q4 miss, raises the questions over near-term momentum. And with the company also targeting 20% of volume growth in FY27, the focus now shifts to the execution part and also demand recovery in the coming quarters. And viewers, Blinkit has launched a new service at Mumbai's Chhatrapati Shivaji Maharaj International Airport Terminal 2, allowing passengers to get deliveries directly at their boarding gates and lounges. So customers can now order essentials, snacks, beverages and other items through the Blinkit app and receive them inside the secure area of the terminal. So the service is currently operational at Terminal 2 and also aims to improve the convenience for travelers. Blinkit has partnered with airport authorities to ensure smooth last-mile delivery within airside areas, and also this marks one of the first such initiatives by a quick commerce platform at a major Indian airport. And viewers, new GST collections for the financial year 2025-26 rose 7% year-on-year to 19.34 lakh crores, and gross collections have increased 8.3% to 22.27 lakh crores. And in March 2026 alone, if we look at net GST collections stood at 1.78 lakh crores, which is up 8.2% from the same month last year, while also gross collections have reached 2 lakh crores, and this is up nearly 9%. So domestic revenue has grown by 5.9%, which is nearly 6%, while revenue from the imports have jumped 17.8%, which is nearly 18%, and refunds have issued in March rose to 13.8% to 22,074 crores. So the steady growth in the GST mop-up reflects healthy economic activity despite global headwinds. And viewers, the Maharashtra government has decided to freeze ready reckoner rates for the financial year 2026-27 across the state. Now, this means that stamp duty and registration charges will be calculated on the same rates as the previous year. And this decision comes as a major relief to the real estate sector, especially in Mumbai and also other major cities where property prices have been rising rapidly. So this freeze is expected to reduce the overall cost of the property transactions and also support the home buyers as well as developers. And industry bodies had been demanding this move to boost demand amid high interest rates and also global uncertainties. And viewers, jet fuel prices in India have hit a record high, crossing 2 lakh per kiloliter mark for the first time, and this is effective April 1. ATF prices in major cities have more than doubled due to surging global crude oil rates, and this is triggered by the US-Iran war and also supply disruptions in the Strait of Hormuz. Now in Delhi, the prices jumped to 2,07,341 per kiloliter from 96,638 last month. So Chennai has recorded the highest at 2,14,598 per kiloliter. The sharp rise is putting significant pressure on the airlines as ATF constitutes a major part of their operating cost. The government is in discussion with the states to reduce the VAT on jet fuel and also with airport operators to rationalize the charges in order to cushion the impact on airfares. And US commercial LPG prices have been hiked by 195.5 rupees per 19 kg cylinder across the country effective April 1. Now, this is the sharpest increase in recent times and also is directly linked to the surge in global LPG prices amid the ongoing US-Iran war and also disruptions in the Strait of Hormuz. Now, domestic commercial cylinder prices now range between 1,800 to 1,950 depending on the city. So, domestic household LPG prices, however, remain unchanged for now, and the hike is expected to put significant pressure on hotels, restaurants and also other commercial users who rely heavily on the LPG for cooking. And oil marketing companies have also cited higher international benchmark prices and also rupee depreciation as the main reason for the revision. And the government has announced temporary customs duty relief on goods supplied from special economic zones to the domestic tariff area. So the Finance Ministry has reduced the basic customs duty on such supplies to 5% for a period of 3 months. And this move aims to support the SEZ, units facing challenges due to the global uncertainties and also the ongoing Middle East conflict. And the relief will help SEZ units, clear their inventory and also improve liquidity. So the concession applies to most goods supplied from SEZs to the domestic market, except for a few sensitive items. And the notification comes as a one-time measure to ease the pressure on the sector. And a US sanctioned tanker carrying Iranian crude oil has signaled its destination as India's Vadinar port on the west coast. So the Aframax vessel Pink Shun, loaded with Iranian crude from Karg Island, is early March, is also expected to arrive later this week. And this marks potential resumption of Indian imports from Iran after a 7-year gap, with the last purchase recorded in May 2019. And the development comes after the US has issued temporary waivers on sanctions for already loaded Iranian crude to ease the market disruptions caused by the ongoing conflict. And the tanker had earlier indicated China as its destination. And here's Novo Nordisk has significantly lowered the prices of its blockbuster drugs Ozempic and Wegovy in India effective today. The starting dose of Ozempic has been reduced by 36%, while Wegovy has seen a steeper 48% cut. Both the drugs will now be available at an effective daily price of 202 rupees or 1415 rupees per week, inclusive of taxes. And the company also implemented an average price reduction of around 24 to 27% across all doses. So this move comes shortly after the patent, on semaglutide expired in India. This is triggering the launch of much cheaper generic versions by local manufacturers. And Oracle is cutting jobs in India, with around 12,000 employees being laid off as part of a major restructuring. Reports suggest another round of layoffs could follow, adding to uncertainty for the workforce. And the move comes amid the ongoing cost rationalization across the global tech sector, with companies tightening the operations. And Apple is celebrating its 50th anniversary today, April 1st, 2026. The company was founded on April 1st of 1976 by Steve Jobs, Steve Wozniak, and also Ronald Wayne in a garage with just $1,300 raised by selling a Volkswagen bus and also a calculator. So what began as assembling, computers for friends has grown into a global empire with a market capitalization of nearly $3.77 trillion and also over 2.5 billion active devices worldwide. So key milestones include the Apple, one in 1976, which is the revolutionary Apple, 2 in 1977, and the 1980 IPO that created hundreds of millionaires and also game-changing products like the Macintosh, iPod, and also iPhone. Let's look at some national news now, viewers. The Indian Navy will commission its latest, stealth frigate, INS Taragiri, this week at the Naval Dockyard in Mumbai. So Taragiri is the 7th ship of the Nilgiri class Project 17A stealth frigates, and also has been built by Mascot Dock Shipbuilders Limited. And the warship is equipped with the advanced stealth features, state-of-the-art sensors, and also a mix of indigenous and imported weapons. And key capabilities include longer range surface-to-air and also surface-to-surface missiles, anti-submarine warfare systems, and also a modern combat management system. So the induction of the Taragiri will significantly boost the Navy's combat capability in the Indian Ocean region. And the Central Bureau of Investigation has registered a fresh FIR against Anil Ambani and Reliance Communications in an alleged bank fraud case. The case was filed on a complaint by the State Bank of India, which has classified the accounts as fraud. And the allegations involve misappropriation of funds through transactions that violated the loan terms, leading to a loss of 2,929 crores to the bank. And CBI has conducted searches at the RCOM offices and also, Anil Ambani's residence following the FIR. Now, this is the latest in a series of probes against the Reliance Group, with the Enforcement Directorate also investigating related fraud and also corruption charges involving loan worth over 40,000 crores from multiple banks between 2010 and 2012. let's look at some global news now. US President Donald Trump has said that the ongoing war with Iran could be over within 2 to 3 weeks. Speaking today, Trump stated that the US wants to complete the job of eliminating Iran's nuclear capability and also added that it might happen even sooner if a deal is reached. And he has noted that Iran appears more willing to negotiate than before. And the conflict, which began 5 weeks ago with joint US-Israel operations, has already claimed over 3,000 lives. Trump also indicated that the US may leave the region soon and also called on other nations to help secure the Strait of Hormuz. Now, Iranian president has expressed willingness to end the war, but with certain conditions. And as the Middle East conflict continues for its 5th week, at least 10 people have been killed and over 20 injured after Israeli missiles struck Beirut overnight. Now, the strikes have targeted parked cars and also a joint IRGC Hezbollah convoy carrying a senior Hezbollah commander. Now, the Israeli Defense Forces have said that raids were aimed at eliminating the high-ranking Hezbollah terrorist leaders, and the attacks are part of the wider regional conflict that began when Hezbollah, backed by Iran, launched strikes on Israel. Now, Lebanon's health ministry has reported multiple strikes across Beirut and also southern areas. And the Houthis in Yemen have claimed that they've launched a missile barrage targeting southern Israel. Houthi military spokesman Brigadier General Yahya Sari described it as the third military operation in what they call the Battle of the Sacred Jihad. The group has said that the attack was carried out in coordination with allied fighters in Iran and also Hezbollah in Lebanon. So the Houthis have claimed that the operation successfully hit the sensitive Israeli objectives. And the United Arab Emirates is pushing for international military action, including direct involvement to reopen the Strait of Hormuz amid the ongoing US-Iran war. The UAE is seeking a UN Security Council resolution authorizing force and also is reviewing options such as clearing mines and also providing logistical support. It has also suggested that the US take control of the Iranian-held islands like Abu Musa, which the UAE claims as its territory. And the UAE Foreign Ministry stated that there is broad global consensus that freedom of navigation in the strait must be preserved, and the move marks a shift from the UAE's earlier mediation efforts to a more assertive stance as Iranian attacks have disrupted the oil shipments and also hit the Gulf states, including nearly 50 missiles and also drones targeting the UAE in recent days. And viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates. This is Himakshi Bhaguna.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy. Gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's Saturday.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Markets rebound after sharp 300-point fall from the day's high. Nifty 50 ends in the green, snaps 2 days losing streak. Broader markets outperform the benchmarks. GST collections hit a record 22.27 lakh crore rupees in FY26. GST collection crosses 2 lakh crore rupees in March 2026, showing a strong year-end push. Crude prices seesaw around $100 per barrel in volatile trading after Trump's war exit remarks. Brent trades at $104 per barrel, WTI trading below $100 per barrel. Government caps the monthly increase in domestic aviation turbine fuel prices at 25%. Civil Aviation Ministry asked the airlines not to pass on any additional surcharges on fuel to the consumers. Government rules out LPG crop shortage amid Mid-East war. Fuel prices unchanged. However, oil marketing companies are expected to face under-recoveries due to global pressures. Sources are telling NDTV Profit that HDFC Bank board is likely to recommend incumbent CEO Shashidhar Jagdishan for another term as the CEO. US-based IT firm Oracle lays off around 12,000 employees in India, with another round of layoffs expected within a month. 30,000 jobs slashed globally. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through the top headline that we are tracking today. The Nifty ended 1.5% higher after recovering from a sharp 300-point fall from the day's highs. Now, the Nifty settled near 22,600 while the Sensex wrapped it near 73,300. While most of the sectors really rallied on signs of a potential de-escalation of the Iran-US war, well, Nifty Pharma had a rather bad day today. Let's get you the full market action from my colleague Jasmeet, who's standing by. Jasmeet, tell us.
Well, thank you for that. Nifty 50 ends in green, up about 1.5% today in trade, while Nifty 50 snaps its 2-day of losing streak and ends above the 22,650 mark today in trade, showing a positive up move. Now, the stocks that performed really well in Nifty 50 were something like a Trend and Indigo. Both of the top gainers had gained over 5.5% today in trade while closing. While in terms of the broader market, they have outperformed the benchmark, while Nifty Small Cap 250 is up over 3% and it snaps the 2-day of losing streak. Now, the stocks that gained the most in Small Cap 250, we have something like Garden Reach, United Shipbuilders as well as the Ola Electric, the top gainers of Nifty Small Cap 250. While Garden Digits Shipbuilders Engineering is about 19%, followed by the Ola Electric about 14% in today's trade. If we look at the mid-cap space, when mid-cap ends in green up about 2% and snaps the 2-day of losing streak. In terms of top gainer, we have Cochin Shipyard and Godrej Industries both gaining over almost 10% in today's trade. If we look at the broader market and all the sectors out there performed well, all sectors end in green barring Nifty Pharma. While Nifty Pharma is the only sector in trade losing and down about 1%. Nifty PSU Bank, Nifty Media are the best performing sectors which has gained the most in today's trade, about 3.5%. If you look at the top gainers, Nifty PSU Bank, we have something like Punjab Sind Bank as well as Bank of Maharashtra, the top gainers Nifty PSU Bank side. While in terms of Nifty Media, we have Network 18 and Hathway Cable, the top gainers of Nifty Media. Now in terms of the Nifty Pharma, the worst performing sector down about 1%, and the stocks that lost the most in Nifty Pharma, we have something like IPCA Labs and Dr. Reddy, which were the top lowers of Nifty Pharma, down about 3.5%. While lastly, if you look at the overall streak, most of the sectors which have ended in green, they have snapped the 2 days of losing streak.
All right, a lot of sectors there recovering. Jasmeet, thanks so much for the full roundup of the markets. And now let's also get you an expert voice on the Indian markets. Well, Rahul Veera of Nippon India AIF told us that the Middle East crisis will further percolate into the micro caps of the equity world. In fact, he is penciling in 1 to 1.5 lakh crore rupees of impact on the manufacturing profits. Listen in.
India cannot replace the LPG that easily. This crisis, more or less, is going to further percolate into micro, as we mentioned. Now, the moment we try to dissect the micro, just for example, NSE final companies, the profitability is 15 lakh crores cumulative for all companies together, for NSE final companies. Your banking itself is 6 lakh crores. Then IT close to 2 lakh crores, and rest of the other small caps and mid caps composite the other 7 lakh crores. Here, the major impact, if we dissect it further, 1.5 lakh crore of manufacturing profits, specifically on the higher capex businesses like metals, chemicals, is going to continue.
All right, an important view on the economy and various sectors and companies being impacted because of the fuel shortage. Now, another macro indicator, we are talking about the GST collections. They have reached a new record high in this particular financial year of 2025-26, which just got over. Now, gross GST collections, they hit 22.27 lakh crore rupees, while the net revenues, they stood at 19.34 lakh crore rupees after the refunds. Now, this shows a steady tax buoyancy in the economy. In fact, in March alone, gross collections crossed 2 lakh crore rupees. Let's get in my colleague Shrimi Chaudhary for all the key data points and what it means for the economy. Shrimi.
Well, clearly GST collection has hit a record high of over 22 lakh crore on a gross basis in absolute term, and net is coming to over 19 lakh crore. After refunds on a monthly basis also, if you see, the GST collection crosses 2 trillion mark on a gross basis and 1.78 lakh crore on a net basis. So if you see and have a closer look on these numbers, what it's actually indicating that, of course, you have a strong number in place. However, the growth has been moderated to 7 to 8%, but still it holds a strong number, showing the resilience being a high frequency indicator. But at the same time, the number which you see on a monthly basis is mainly driven by import of goods and services, the collection coming from the import-linked GST collection, which means that India is importing a lot of goods and services, and the collection is coming from that, and that will also reflect in the custom numbers as well. But do note the fact that these numbers are actually given the sense of your February transaction, and we need to see the March transaction as well, which will reflect in the April number, because then you will see actually the full impact of the ongoing West Asia conflict, because February has only had some sort of strain coming in these numbers. But so far, FY26 number between April and February looks strong, looks robust, but we need to wait and watch for the end, which is the March number, to see the full impact.
All right. Thank you so much, Srimi, for getting us all those important details on the record levels of GST collections. Now on to crude. Crude oil prices are really trading with caution and in a range-bound manner after a sharp cool-off that was seen earlier today. Now this, while Brent crude now is trading around $103 per barrel mark, WTI crude has also eased to around $100 per barrel. Now, even in India, the MCX crude oil April futures, they have dropped by almost 2%. Now, remember that this particular fall happened because of the easing tensions between the US and Iran. As a result, remember that the traders booked profits and the risk premium in oil prices cooled down. The Strait of Hormuz remains a concern, but prices have now pulled back after staying above the $100 per barrel level through March. So it's coming in as a bit of a relief for the Indian market as well. Now, the government has also stepped in with a smart move on aviation turbine fuel or ATF pricing amid soaring global oil prices and also uncertainty due to the West Asia crisis. Remember, the public sector oil companies have allowed only a partial as well as staggered increase of about 25%, roughly 15 rupees per litre for the domestic airlines. By allowing only a partial increase, well, the move seeks to cushion the airlines from sudden cost shocks, protect the passengers from sharp fare hikes, and also ensure operational stability. In fact, the primary domestic airlines like Akasa, Indigo, SpiceJet, and Air India have all welcomed this particular move. My colleague Danish joins in with all the details of this development and how it eases pressure on the frequent flyers. Tell us, Danish.
Well, that's correct. For the month of April, the ATF prices have been revised by 9%. So there's a hike of 9%. And as we speak, the price of ATF in metro city airports is hovering around 96 lakh rupees, 96,000 rupees per kiloliter till 1.9 lakh per kiloliter. So this is where the prices stand as of now. But over the past few days, we saw that once the war started at that point in time, the airlines started to introduce fuel charge. And just moments ago, the Joint Secretary of Ministry of Civil Aviation has cleared in the interministerial press conference that the move by government today has been taken so that the prices are not forwarded on to the passengers, because we are seeing over 4 lakh daily passenger departures, and if the ticket prices sharply jump, then we might see a major impact on the overall daily domestic departures. So hence the government has clearly stated that the OMCs have been directed to pass on the hike of crude oil prices by just rupees 15 per kiloliter just to ease the entire situation for the airlines. Sources in Indigo are telling us that very soon the airline is expected to come out with a revised fuel surcharge, but then we'll have to wait and watch for the other airlines as well, whether they're able to do that or not. Because if we look at Air India has massive international operations and they are also facing a challenge because of the Pakistan airspace closure and also the Middle East airspace closure. So the relief by airlines will depend on the route that a particular person is flying in and the particular airspace that is used. But all in all, if we see, the government has tried to cushion the prices. They are absorbing this hike in the crude oil prices, especially the Saudi crack is also very widened if we compare it with what happened 2 weeks ago. So the government really wants to protect the passengers, and hence this has been given, the 15 rupees buffer has been given by the government. So now we'll have to wait and watch till how long the airlines will keep on charging fuel surcharge, as the Joint Secretary has made it very clear that we have tried to ease the situation for the airlines so that the entire burden of ATF is not passed on to the consumers.
All right. Thanks so much, Danish, for that. And meanwhile, the government says that this ATF measure prevents the potential industry-wide crisis as well. Civil Aviation Ministry's intervention ensures that the airlines do not charge any additional surcharge on the fuel to the frequent flyers, that is the consumers. Listen in to those remarks coming in from the briefing.
Airlines are, it's a deregulated market, so airlines have their own strategies how to calculate their economics and how to calculate the financials. So we leave to that, but we leave it to the airlines to calculate that. And this is true even for pricing of the fares. which is again linked to the surcharge part. So now airlines, they will, like I said, they will recalibrate, and of course, but we also have a very robust mechanism to monitor the fares. So if there's any abnormal surges in fares, then that is where the Civil Aviation Ministry also intervenes. So, but considering the fact that this intervention, because like I said, if it hadn't been for this, the pricing of ATF would have gone up probably 100%.
All right, so that's coming in from the briefing, and let's now get my colleague Rishabh to give us more clarity on the ATF math that was being shared by the government and also the rollback on the fuel charges. Of course, Rishabh, the government is very concerned that the airfares will rise substantially and making all the effort to really keep it at lower levels.
Absolutely. You have a very important clarification that has come in from both the Civil Aviation Ministry as well as the Oil and Petroleum and Natural Gas Ministry. Let's take a look at what exactly has happened here. So in the morning, you had this staggered hike notification that had come in. What it means essentially is that this is a limited hike at this point in time. There's a 25% hike that has been passed on, and that is particularly for scheduled domestic carriers. And for the rest, that means your international carriers and others, a full hike has been passed on. So that comes out to, for the domestic carriers, that comes out to about 21.58 rupees per litre. That is the additional hike that has come in. And for others, it is up to 110 rupees per litre. So a much steeper hike if you see there. What staggered also means in this case is that the government might continue to hike these ATF prices as and when the situation requires. So that's an important one to remember. And what the government has also made very clear is that they will intervene if these surcharge benefits that the government has passed on today are not trickled down to the end consumer. So they've made it very clear that this should lead to some sort of a cool down in airfare prices. So that's a very important clarification that has come in, though that is some of the ATF maths that has come in, some clarity after today's briefing.
All right. Thanks so much, Rishabh, for getting us all that clarity. And this will be one of the very big talking points which impacts the daily working life of people. But despite the preventive moves, remember, from the government, airfares are clearly heading north as rising jet fuel prices really begin to bite, because Ease My Trip tells NDTV Profit that even domestic routes are seeing a base fare impact of nearly 1,500 rupees one way, driven by the fuel costs and also the strong demand. But the real spike is on the international route, especially in Europe, where returns fares have really surged by as much as 30,000 to 40,000 rupees on an average. International travel is now costlier on an average by about 15,000 rupees. So that's the word really coming in from Make My Trip. Also remember that rising fuel costs are putting pressure on Mumbai's restaurant industry, with the commercial LPG prices up 195 rupees and now above 2,000 rupees per cylinder. Now, this second hike in a month forcing the eateries to really either cut their portion size or even raise the prices. For more on the ground impact, here's a report coming in from my colleague Sujata Dwivedi.
As you enter any kitchen of any hotel or restaurant here in Mumbai, you don't just feel the heat of the stoves within the premises, but it is also the mounting financial burden which is affecting the owner of the hotel. The 19 kg LPG cylinder has now faced a straight 195 rupee hike for these hotels to operate, because of which the menus are now forced to be trimmed again. At present, we are here in Bandra East at this Pareva restaurant, and like you see, this is again under scrutiny of for the workers here. We are seeing a workspace where every burner is being calculated. The slow simmering tandoors and the signature gravies that define the menus of these restaurants are becoming increasingly expensive to maintain the local rates, is what the restaurant owners are saying.
खाना बनाने में दिक्कत हुई हमें, अभी सिलेंडर भी आ रहा है तो महंगा आ रहा है, कैसे कैसे हम लोग करके कोयले पे बना रहे हैं, कोयले पे भी चल रहा है, वो भी कोयला भी महंगा हो गया,
कोयले पे भी महंगा
हाँ, कोयले भी महंगा हो गया, प्लस में गैस अभी महंगाई आ रहा है ज़्यादा। हम लोग को बनाने में बहुत दिक्कत हो रही है। इसके वजह से हम लोग बंद भी नहीं कर सकता है। आदमी लोग का पगार भी देने का कैसे निकालेगा, दुकान भाड़ा कैसे देगा।
All right, tough time there for commercial LPG cylinder users. Now we are in the fifth week of the Iran-Israel war, and US President Donald Trump said that Washington could really end its military campaign against Iran as early as the next 2 to 3 weeks, hinting at a possible end to the month-long war that has really disrupted the global energy markets. But attacks continue. Iran has struck a tanker off the coast of Qatar and a fuel facility at Kuwait International Airport, triggering a major fire. At the same time, remember, Israel has widened its offensive, carrying out strikes in Beirut that have killed at least 5 people. Let's listen in to Trump's remarks.
When we leave, probably that's all cleared up. Today, I heard tremendous numbers of ships were sailing through. We're negotiating with them right now. They've been, again, we have had regime change. Now, regime change was not one of the things I had as a goal. I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that, because we'll hit bridges, and we've hit some. We'll hit some bridges. We've got a couple of nice bridges in mind.
All right, back home on a corporate development that everybody is eyeing, well, sources tell NDTV Profit that HDFC Bank board is likely to recommend incumbent CEO Shashidhar Jagdishan for another term as CEO, and bank's board is satisfied with Jagdishan's performance, leadership decisions. For more on this, I'm joined by my colleague Piyush Shukla.
HDFC, we are hearing from our sources that HDFC Bank's board is likely to recommend the incumbent CEO, Mr. Shashidhar Jagdishan, for a third term in their next meeting on April 18, the next board meeting. The board is satisfied with Mr. Jagdishan's performance and also his leadership decisions taken during the course of our last 5 to 6 years. Jagdishan meets RBI's fit and proper criteria and other regulatory criteria as well for being a CEO of a bank. The current tenure of Mr. Jagdishan ends in October this year. With regard to the bank's ex-chairman's Mr. Atanu Chakraborty's resignation last month, people aware of the development say that the bank had taken action against the 3 senior employees who were engaged in mis-selling of Credit Suisse 81 bonds during Mr. Chakraborty's tenure itself. Bank also ensured timely listing of HDB Financial to ensure that they meet the RBI's upper layer NBFC regulatory requirements of getting listed by September 2025. Sources say that a few words that were used by Mr. Chakraborty in his resignation letter were not warranted. The bank has appointed an external legal firm to assess his resignation letter, and the agency is expected to come up with a final report and submit it to the bank very soon.
All right. Thanks so much, Piyush, for getting us that corporate exclusive coming in. Now, Maruti Suzuki, in its media con call, says that it is managing the impact of Middle East tensions, with exports remaining diversified and exposure to the region at about 12.5%. Let's listen in to Rahul Bharti on this.
We are highly diversified in our exports. We export to more than 100 countries. This year, the exposure to Middle East was about 12.5% to our total exports. And you're also aware that our EV exports to Europe are on a growth path. So we will do everything to minimize the impact of the war. But of course, to some extent, you cannot go totally unaffected. You are also right that costs of shipping, etc., because the routes are longer, there will be some such cost, which we'll have to take in our stride. And on components, so we mentioned, so far, as far as production and supplies and their continuities are concerned, we are doing totally as per plan.
All right, let's take it straight across to my colleague Danish, joining in with the key takeaways coming in from a large manufacturer as well as exporter, Maruti. Danish, what does this really sound for entire also corporate India as well as Maruti's impact of the present, war tension? And also, what is it that Maruti is grappling with when it comes to either its exports or sourcing its raw materials?
Well, first of all, if we look at financial year 26 for Maruti, it has been a robust year for the company, not only in terms of exports, but also in terms of dispatches. But coming on to the current scenario, Maruti has said that as of now, they're not facing any challenges as far as sourcing of key components is concerned. Their supply chain team is in talks with them every day, and they've assured to Maruti that you keep on producing cars and we will keep on supplying the key components to you, because as of now, they are not facing any challenges. And just in case if they believe that the certain component could face certain shortage, for that they're already talking to other suppliers so that they can get those components in time. But as of now, there's no need to worry about anything. On the exports front, Maruti had a robust FY26, and they believe that even this financial year will be really great as far as exports is concerned. As far as the exposure to Middle East for Maruti is concerned, it is at 12.5% of the overall exports in FY26, and they feel that the situation is very dynamic right now and it is very evolving. So their exposure to Middle East, depending that how in the future will they keep on selling the cars the way they were earlier to Middle East, that call will be taken on later. But as of now, everything is super fine. But since the war has elongated for more than a month, this is causing a lot of impact on the freight rates, and Maruti is actually absorbing this kind of high freight rate as of now, and they will be able to absorb such high pressures till one point in time, and the board is soon supposed to take a call when will they do a price hike, because if you look at their rivals, many companies have already announced car price hikes by say 1 to 2%, but Maruti is still selling cars at the reduced GST price, and this was applicable since last year. But as of now, they don't feel there are any kind of headwinds as far as the war is concerned, but they're really concerned because of the war, and they believe that it should end soon, because no one really wins at the end. Whenever war ends, there is no real victor, and that is what they said. So this year was good for Maruti, and they believe that next year will also be good.
So Danish, the biggest takeaway coming in from that particular con call and update given by Maruti is that the freight rates, higher freight rates, are really impacting the company, and whether they pass it on to the consumer or not, that needs to be seen, but it will eat into their margins, at least for now. Thank you so much for joining in. Now, quick commerce is taking off quite literally, because Blinkit has really launched an in-terminal dark store at Chhatrapati Shivaji Maharaj International Airport in partnership with Adani Airport Holdings. Now, services are live at Terminal 2 domestic departures. Passengers can now order essentials directly on the app and get them delivered anywhere inside the terminal, from boarding gates to lounges and even the food court. All orders are being fulfilled through this dedicated in-airport dark store, and marking a new expansion, remember, of quick commerce into high footfall transit hubs. So that's like a very, very innovative idea coming up. With that, completely out of time on this edition of Profit 360. Goodbye.
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power जैसा spice और पुणे वाली energy, gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is one of the hottest shows on KYC where we get you interesting trending companies which should be on your radar and maybe make money as well. But before that, I'd like to give you some hints about it. This company is Asia's largest dialysis service provider. Dialysis, kidney ka treatment hota hai if you have diabetes or hypertension because of that. The second important hint is the stock was recently listed December 17, 2025. It's just been 3 months. And also, the company is backed by Fidelity Investments. Good name in the IPO anchor list, but the stock has remained resilient. It's up 15% from the IPO price as well. Guess the company what it is. It's NephroCare Health. That's the company I'm talking about. Kidney dialysis ka treatment ki company hai. But it's not only in India, it's in the emerging markets as well. This is the company I'm talking about, which should be in your focus. But the question remains is, why are we calling this company? Of course, recently there was a broking upgrade also, but there is much more to that rather than just the upgrade. The opportunities in the dialysis market segment, especially in the emerging countries, this also includes India and other Asian nations, especially the expansion part. That is what we are excited about, especially the Philippines. There is Uzbekistan, there is Saudi Arabia angle to it, which I'll give you all of that in some time. Where is the stickiness and the scalability looking like for this industry? If you are a customer, it becomes very recurring because the dialysis treatment is not one-off, it keeps on happening. That means the stickiness is there in this business model. And of course, the profitability, where is the high margin moving towards? Is it the Indian business? Is it the global business? And where the contribution is coming? That's something we'll ask the management. And of course, the trends on the hospital partnerships and the government contracts. Whenever the government contract comes, payments at times become lumpiness also. But will that happen to this company or not? Or is there any asset light model at play? All these questions will be answered. And of course, is the revenue per treatment, is it plateauing? We saw good growth coming, especially to the run up to the IPO. But will the operational parameters plateau here or will they keep growing? That's the big question. And price hikes. Generally, the new financial year, some price hikes are also announced across the core offerings. And generally, these offerings are passed on very nicely with the consumers. So we'll ask that. And Rohit Singh, the Group CEO of Nephro Plus, that's the brand which I'm talking about, which the company has rebranded of their core products. He will be joining us and Rohit will give us the entire picture, the 360 degree of this industry, what it is all about. and why this stock is commanding a premium valuation. All these details will be there on the show in KYC. But let's give you some more details about NephroCare, Nephro Plus, what this company is all about. Company karti kya hai? We have mentioned is Asia's largest dialysis service provider. Also recently it was listed on December 17, 2025. But let's get into more details about it. The Q3 numbers were aided by a strong growth, especially in the international markets. That's where the revenue contribution also went up, and I will explain you the revenue contribution also. The company has acquired 9 clinics in 9 month FY26. So of course this is just not organic expansion, there is a lot of inorganic expansion at play, and that is how you become a market leader in this kind of industry, because it's a lot of dialysis centers are in the unorganized space. They have expanded into Philippines and Uzbekistan. That is where the alpha might be there. Also, Saudi Arabia is in focus. They have entered this market with JV with Al Faisala Group. Now, what this JV means, what are the numbers looking like, projections, this is all we'll ask Rohit. And also, the 52% of clinics are under the revenue sharing model. Now, when I speak about revenue sharing model, this is largely the asset light angle as an investor, which you should note down for this company. A lot of positives are there regarding this. Also, operational numbers, 521 clinics globally. This includes Asian markets as of now, 290 Indian cities, but the story is not in India. The story is in Bharat. 78% clinics is just there in tier 2 and tier 3 cities. This is where the magic happens, and that's where the growth is something which the street is giving a good premium to. Indian markets, roughly 59% of the revenue. The remaining 41% comes in for the global markets, and just 1 quarter ahead this number was just 29%. So see the growth which has happened, in 41% of revenue contribution coming in. This is important because the return ratios are better, the margins are better, and that's why the financial numbers, that's where the up move happens. But let me explain you kidney dialysis ka industry kya hai, kyun itna bada hai, why I have called this company, to make you understand that dialysis industry is at a very, very nascent stage when it comes to India. But look at the numbers. Indian market size is roughly $8 billion. Growth rate, compare that with IVF and other players, that's around 20 to 22%. That's a significant growth rate I'm talking about. लेकिन इसमें अगर आप पैसा डालें तो payback कितना दिन में आएगा? That's very less, 1.5 to 2 years. Other diagnostic players, if you talk about it, other businesses also, this ranges between 2 to 8 years. Capex heavy ज़्यादा नहीं होता है. EBITDA margin is also significantly higher. That's roughly 70 to 20%. So all the sides, there is a green ticks happening when it comes to the kidney dialysis industry, and the company is very, very bullish on this. But why? That's the first question. Stock's resilience has been seen despite a weaker markets in the 4th quarter of FY26. We are seeing that good momentum happening. It's a single specialty healthcare service provider by definition, and a recurring revenue potential. That is something which is very much important. एक बार dialysis लग जाता है तो आपको बार-बार जाना पड़ता है dialysis treatment के लिए. This is important. Strong growth opportunities, especially for the organized players in the emerging markets. Largely this area is having German, European and US players, and this is the only proper Asian player coming in the market. And remember, the base is very small compared to the global numbers. Also, Nomura is expecting the EBITDA CAGR of 18% over the next 2 years, driven by mid to high teen revenue growth. As per Nomura, mid to high teen means around 15 to 18 to 19%. That is where Nephro Healthcare is a bullish bet when it comes to the brokers, analysts, and even through my analysis. But analysis in KYC is very interesting because we get you 8 rating parameters, and of course for this company, especially the cash flow segment I have removed, I have got in the operational parameters. That's what you should be looking at, and also the return ratios. That is where we'll be focusing on the adjusted ROC numbers as well. Also the shareholding street cred, remember their trading history is very less. It's just been 3 months, but nevertheless this is very much important. अगर ये पैसा बनाया है कि नहीं, that's in street cred. And shareholding, of course, we'll look at the key shareholders, FIs, DIs included. Valuations, there are 4 or 5 multi-specialty hospitals where we'll do the comparison of it. It's likely to be apple to oranges because the company is focusing totally on dialysis. Others are players are also there, but there are some minor kind of up moves, or you could say contribution from this segment. And outlook is very much important for the industry especially, and also company's growth prospects as well. So 8 rating parameters where we'll judge the company. But let's go on to the first trading parameter, and that is the income statement. And let's see what the growth has all been. The EBITDA number is something which has caught my eye. That's 119% 3-year CAGR numbers. Of course, these numbers are before the IPO numbers, but imagine the growth happening. Is it because of just the international expansion plans, or there is a change in product mix? That's what we'll ask the management. But look at the Q3 numbers as well. This is also very much important, and they have maintained that ratios around 24-26%. So is this the peak of that ratios or the margins to look at going ahead, or is there a further scope for growth from here? That's what the main question is. But net all across the numbers have been really strong. And look at the growth coming in, and this has sustained, and this is around the 23.5% operational margin as well. That shows strength in the overall income statement. So it's a strong thumbs up when it comes to NephroCare for income statement. Let's talk about the balance sheet also, and of course balance sheet, I'll keep a neutral rating on it. The borrowings, they have actually come down, and this is of course the IPO proceeds were taken in, so there's a lightness in the balance sheet. Company says it's capex light model, the way they are going up across, but the expansion plans, the acquisition plans, that is where I feel that a larger amount of deployment of sources can be there. Roughly 113 crore rupees of cash balance is left, so it's evenly balanced. But yes, company is under expansion mode. They have appointed 21 people in the development team just for acquisition. That's an interesting data which I got from the numbers. But net kharcha to company karega, so balance sheet is going to be neutral when it comes to the overall numbers. But also let's talk about an interesting number, and that's not going to be cash flow. This is generally, if there is no government contracts involved, it's a stable business, koi stress nahi aata payment ka. But operational performance kya raha hai? Number of guests or the number of folks who have entered and used the services, that is where they have shown a good growth coming in. The CAGR numbers are in the high teens for most of their operational parameters, and also in terms of treatments, that has also gone up. And remember, this is just the 9-month FY26 numbers. It's roughly 2.85. If you annualize it, this goes past this 3.3 mark comfortably. Also, let's talk about the expenses, or you could say the revenue per treatment. That's the important number to talk about. This is the return ratios. We'll understand, but this is from the perspective of the operational front. FY23, it was roughly 1900 rupees. Now that has jumped to 2600 rupees. We're expecting this to touch the 3000 mark in the next 3 months or 6 months. That's the big question to be asked. But why is there so much stickiness or scalable in the model that the company is able to have these price hikes as well? That's the big question to be asked. We'll answer that, but as of now, operational parameters is a strong thumbs up. Let's talk about the return ratios, and these are the adjusted ROC numbers. The calculated ones are in teens, but this is what the company has given, and this is a significant jump coming in. It's largely in track with the margin story which we have seen with the company. So the numbers are maxing. Is it maxing at the top, or is there more scope from here? That's the big question. But return ratios as of now, I'll give a strong thumbs up as well. So now let's talk about shareholding, and to be honest, it's just been 1 quarter of data coming in. Promoters are having a 64% stake, FIs, DIs 9 to 8%. It's evenly balanced. Let's give it more time to actually judge the company. It's a neutral rating for shareholding pattern, but company has done well when it comes to the street cred. Let's talk about the street cred, how important this is. Remember, the history is very small. It was listed in December 17, 2025, 3 महीना का data है, but nevertheless खराब market था. उसके बावजूद year to date basis stock is up 14%. Remember, January, February, March was a really big devastating show for the mid caps and the small caps. From IPO price, it's up 15%, and even from listing price, the stock is positive. That means post IPO also there is strength in the buying, and the stock has not fallen, and because of that, I'll give a very strong thumbs up when it comes to the street cred for NephroCare. Let's talk about valuations, and of course, if there is a good up move in the stock, valuations might be premium. At times, question is the IPO price a bit expensive? Maybe, and maybe the company is justifying that valuation, and it's expensive. 68 times the P numbers which we are talking about, or Dr. Agarwala's, that's on the higher side, 152 times. But the other players like Rainbow Children Care, Jupiter Life, they are ranging between 40s in terms of P, and we talk about the other companies as well in their category. The ratio is between 40 to 50. So there is a 15-20% premium which NephroCare is enjoying Is it good to enter now or need to wait out for a correction? That's what we'll wait out for. But importantly, the valuations are neutral as of now. It might or it is justifying that valuation against its peers. Outlook is strong. Dialysis services, this is sticky and scalable, and we made you understand why this is. The strategic acquisitions, especially in the Philippines front, how much benefit comes in, the growth comes in, that's all we'll be understanding about. But the management is bullish and they're expanding in the micro markets and clusters as well. And remember, there are a lot of catchment areas. A lot of our viewers from Gorakhpur or Siliguri will understand how important this is for these medical clusters to grow. And also the company is well positioned to prevail in the emerging markets. Largely the European and the US players have not penetrated that, and this is where the alpha comes in KYC. That's why I get these companies, so that you understand the pricing mix is still favorable than peers because of the product which they have. There's a concentration on that and the repeat customers are there. That's what makes this business model unique. So net outlook is also very strong. But let's see what are the KYC ratings for this company, how much we have given in our analysis, and largely this is a very strong flow show coming in. Income statement balances have been good, return ratios have been really strong. Instead of cash flow, this is the operational parameters I'm talking about. That's also strong. Thumbs up I have given. Looking at shareholding, let's give it more time, but street cred, that is where the company has been resilient despite what we have seen in the markets. Valuations, company is commanding a bit of premium, maybe a bit lofty as of now, but the outlook, that is where the alpha comes in, and this is something which we'll be watching out for. But to get in more details about that, we'll first give you the KYC rating. It's one of the highest KYC ratings I have given. Generally the highest is 7, but it's almost the second highest numbers, 6.5 out of it. The performance has been good, the future potential also looks good. This is for NephroCare Health. And joining us would be Rohit Singh. He's the Group CEO of Nephro Plus. And good afternoon, Rohit. It's always a pleasure to have you with us. And Nephro Health Services, the company itself, now there's a brand also which you have made out of that. Just make us first understand what this dialysis industry is all about, how big a player you are, how is this market looking like? If you just give us that explanation, because this is a very unique kind of a company in a unique kind of an industry.
Absolutely. First of all, thank you, Sharad, for having me here. And thanks for the viewers who are watching us right now. So before I go into the market, a brief about Nephro Plus. So our brand is Nephro Plus. Organization is called, the legal entity is called NephroCare Health Services Private Limited, but we are popularly known as Nephro Plus. We are a 16-year-old company started by a co-founder who's a dialysis patient himself. And that's where the company realized that there is a huge demand, huge need for a pure play dialysis organization to kind of cater to this unmet need and this growing up need. So we started 16 years ago with one standalone clinic in Hyderabad, slowly, gradually ramped it up. We did a large acquisition, first acquisition in 2018 of Davita, which is world's second largest organization. Davita India business we acquired in 2018. And then we also realized to make a scalable impact, we have to work with the governments, and did our first PPP project around the same time period. And then in 2020, we looked at creating a scalable impact and looked over to the overseas market as well. Our first entry was in the Philippines. Then we went to Uzbekistan, Nepal, and just a few years ago, we have done a joint venture in Saudi Arabia as well. So all in all, Nephro Plus today, fast forward 16 years, is operating 520 plus clinics in 5 geographies. In India, our home market, we continue to grow, and we've had a comfortable run till now. And there is a huge unmet need there. Talking about the market.
Right. Yeah, Rohit, I just wanted to get that perspective only, that how big this market is, you're talking about it, and you give me 2 perspectives. One is, of course, the Indian perspective as well as the Asian perspective where you are expanding.
Sure. So from an Indian perspective, I'll first give a size of the patients and unmet need there. So CKD, which is the chronic kidney disease space. So it's a stage of 1 to 5. 5 is when the kidneys have failed and dialysis is required. 1 is the transition that slowly when the kidneys are failing. So approximately 8.7% people have a CKD in India, which translates to close to 12.4 crore people. But India has low diagnostics, low percolation. Healthcare facilities have still not gone to the roots of India. So there is typically 7% or 7, 8, 10% people who get identified. And in that, if you were to look at the ratio at with the given present population, we should have somewhere close to 40 odd lakhs dialysis patients in India. Should have. However, as we speak, there are only 3 lakh active dialysis patients approximately. Again, there is these numbers that we have taken from our clinical research and our other papers. So approximately there are 3 lakh patients that are being serviced right now in India. So one can see that the percolation or the people who need dialysis, only close to 10% of them are getting it. So there is a huge unmet need in India. And with better facilities coming in, existing patients on dialysis will live longer. There is a huge unmet need. And then there is a burden because of the lifestyle disease that we all are seeing, diabetes and hypertension, which translates into renal failure later on. So all this put together, we can comfortably expect this segment to have a CAGR of anything between 20 to 24%.
Right. And the Asian aspect, especially, I want to talk about the expansion plans. Rohit, the thing is the growth outlook has been strong. The return profile for any international business in your segment is stronger. Interesting thing is your revenue contribution has gone up. It's almost 41%. Earlier it was 29%, if I'm not wrong. Now, global business expansion, will you look at more acquisitions or JVs or any organic growth you can expect? And if yes, any numbers if you can give it to the audience, especially in your global business front?
So great question, Sharad. I think, as I mentioned, that 6 years ago, we realized that we are poised with the best quality cost combination. And just to give a little perspective to it, India operates at close to $22 price point, which is probably the lowest in the world. Anywhere else we go, we operate in Philippines, it's $100 plus. We operate in Uzbekistan, that's $70 plus. Saudi Arabia is $250 plus. US is a $350 plus market. So you can understand the price per treatment in India is so low. So any organization that operates at scale and at that price point and is profitable obviously has a strong business moat and has a advantage to kind of go overseas and command in the higher priced markets. So India, as you mentioned in your presentation, is close to a $0.8 billion market, but largely dialysis market is considered to be around $79 to $80 billion dialysis services market. So that's the opportunity. We started with Southeast Asia. We are in CIS as well in Uzbekistan. And now we are also exploring GCC region, as I said, in Saudi Arabia. We are actively involved in developing business there, yet to start. So market is, the TAM, global TAM is $80 billion. And as I mentioned, there is a huge higher price point markets that are available. And with our quality cost leadership in India, I think NephroPlus is fairly well poised to grow in newer geographies as well.
Right, Rohan, let's talk about the margin profile also, and I'm talking about the blended margin profile. There was the domestic business as well as the international business. It seems that that 25 to 26% margin is like one of the highest margins you can get. Can we expect this margin outlook to touch 30% going ahead, like if you're pushing really hard on the international business, or can we say that we have come to that plateau region right now?
So, Shar, to look at it, this is obviously depending on the geography we enter, the price point there is, and the cost structure, because healthcare, as we go out, delivery business is fairly regulated. So cost structure also modulates as per the price point. So it's not exactly transposable, but obviously India advantage plays a huge role there. So how we look at it is that we are expecting anything between 15 to 20% CAGR in the 3 to 4 years range on the revenue front. And our margin profile would remain in the similar range, while it will improve few basis point on annual basis because of the efficiencies of scale that will come in. So I think, and our ROCE, as you have also mentioned, that we have significantly swung it in the last 3 years. My sense is in a steady state, we should be having a ROCE of a 20 to 22% in that range, and growth rate of 15 to 20% on revenue on a 3 to 4 year horizon.
Right. So revenue growth around 15 to 20% and the ROC numbers, a little bit more expansion we can see, but yes, we are near the top. But what kind of acquisition plans, we can expect, especially because we have seen 2-3 international names which you have taken, but there must be other geographies also which you are studying. There are a lot of underpenetrated markets. Even in Philippines, we are already having the presence. So I wanted to understand, you have 113 crores in cash balance as well. Are you looking at kind of any acquisitions, or you're going to wait it out because you have already done some recent new ones?
So, great question, Sharad. I think it's important to kind of take a step back and understand how the growth happens in this business, right? So, we have three primary growth levers. One is our in-center growth, or the existing clinics, which grow on volume and price marginally. So that's the one growth lever for the company. Second growth lever is a clinic roll-ups in our existing markets. Like, we are operating in India, we've been adding 30 to 40 clinics easily for the last few years, and we expect the momentum to continue. Similarly, in Philippines, we have scaled up. We entered with an acquisition of 6 clinics in 2020, and now we operate 43 clinics there. So you can see how we have scaled up in Philippines. So there's individual center roll-ups that happens, which is the second growth lever in the existing markets. And recently we have added 2 more clinics in Uzbekistan. We're operating 4, now we're operating 6. Smaller size, but there is footprint expansion that happened in that country. And the third, the largest and the most significant needle mover is new geography expansion, or a large M&A, or a large PPP project, state level or a country level. This is the third chunky needle mover on the growth, which is the most unpredictable. So the first model of organic and the price increase, we can fairly predict on a monthly to quarter basis. Second, center roll-ups, given our trajectory of the last 15 years, we can predict it on a annual basis comfortably, because there will be transitioning that would take time. But the third and the most important one, which is a M&A or a large PPP or a new geography, that is highly unpredictable, but we are confident that in a year to 2 year horizon, we'll be unlocking any of one of these.
So there is value unlocking here. We are short of time, Rohit. I just want one short answer from you, but it's very important. Are we expecting any price hikes? We are into the new financial year. I've seen your revenue per treatment numbers also going up. Little bit of plateauing definitely happening as we compare it to the last financial year. But Rohit, any price hikes we can expect from your key products going into this new fiscal?
So dialysis as a business, since it's chronic and life-saving, so it does not have a periodic price increase. But whenever the price increase happen, it's lumpy. So we just realized in November, I think, this last year, CGHS increased their price by 35%. But that increase came after several years. Similarly, in Philippines, we saw PhilHealth, which is a national insurance scheme, that increased their price in 2024 October. So in dialysis business, we have lumpy price increases, but the periodicity cannot be clearly defined. But we are seeing that trend, and this will continue on a mid to large term basis.
Okay, so that's the view coming in on a mid to long term basis as well. But commentary has been strong, and the global expansion is something which the street is looking for. Thank you very much, Rohan, for giving it your time and giving the entire picture for Nephro Brand Plus of what's the entire company looking like, and especially the dialysis industry. That is where we get you the discovery. So that's a pretty interesting take coming in for the KYC stocks. And that's all, folks. And thanks for tuning into NDTV Profit.
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power जैसा spice और पुणे वाली energy. Gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani. FY26 is now ended and we are stepping into FY27. FY26 overall from an investor perspective has been a volatile year. Now to understand as to what are the common mistakes that investors have done so that you reflect upon them and you don't make the same mistakes in FY27 and to understand all of these things, the market dynamics, the mistakes that you've made, how can you kind of learn from your mistakes, to help us understand that, we're now joined by Prableen Bajpayee, who's the founder and managing partner at Finfix Research and Analytics, joining us now. Prableen, thank you so much for taking out the time. Always a pleasure speaking with you. My first question to you is, what's your biggest takeaway? Because FY26, we saw war, we saw tariffs, all of this impacting markets as a whole. And despite that, when we take a look at India versus global markets, we have been resilient. Though FIs have been selling, there has been a part of DIs which has been compensating for it, right? So just want to understand, what is the biggest takeaway that you have had from an investor perspective with the kind of market performance that we've seen in FY26?
Hi, Mahima. Great to be on your show. Yes, I think it's a great time to, pause and reflect on the last 12 months, especially, and extending, in fact, to 18 months, Mahima, because I think the last 18 months have been rather challenging for Indian investors. And, we've seen, like you've mentioned, we saw some slowdown in growth. We saw a dip in the consumption. We saw the tariff issue. We saw the impact and the worries around AI, the rupee depreciation, and, the final month of the FY26, of course, the war, which has actually just put in so much more volatility, and Nifty in the last 18 months correcting by roughly 15%, and Mahima alone in the month of March, down by roughly 11%. Overall, I think the learnings from this time has been that as an investor and as somebody who manages money is that, there is always pain in the equity markets. That's something we understand, that equity investing is non-linear. It doesn't move up in a linear fashion. And these times when it is non-linear, there can be periods of stagnation, which can be very, very frustrating. And what you really need at that time, Mahima, is I think if your asset allocation is right, that is how you survive these markets. Because you have to have everything in order, in the sense that you cannot be banking upon equity for any of your short-term needs, because there can be pain in equity. So you have to have your allocations to your fixed income, gold allocation and commodities. That is something that I think has been another lesson that you have to. We've always said that there should be something in gold, but I think the performance of gold in this last 1 year has actually proved that there should be allocation to gold. At the same time, we don't start chasing returns. We don't start chasing asset classes which have already performed well. And, if we stand today as we enter 2027 financial year, I think it's really important to firstly applaud the resilience and I think the continued contribution by the investors, retail investors through their SIPs. I think we've absorbed a lot of volatility due to that. And I think the only way forward from here is probably increasing allocations to equity while maintaining your overall asset allocation because equities at this point definitely look good.
Got it. Praveen, let's take a quick look on FY26. Overall, which categories were relatively resilient than others and why?
Right. So 26, if you see, Mahima, in terms of sectors, let's see, all the diversified funds, which we'll talk about later, of course, sort of gave very meager returns. But in terms of specific sector funds and indices, which really performed well, we saw that metals did great. PSU banks did very well. We saw auto sector perform quite well. Healthcare and pharma was reasonably okay. And what didn't do well, of course, was the rate sensitive sectors. We saw media, we saw reality, we saw IT, of course, due to other reasons as well, of the tariffs and the uncertainty around the whole AI impact. Consumption was quite beaten down. And the whole thing got reflected because if you're looking at the top 5 performers for FY26, we see that, natural resources and new energy, which has a lot of metals and it has other oil companies, it gave us huge returns of around 23% in a year when Nifty has been down by 5%. This is the fund by DSP, then SBI Automotive Opportunities, Quant BFSI, which is again the banking sector oriented fund, and also the transportation and logistic funds. But at the same time, these have given us great performance in FY26. But just to give a perspective to investors that FY25 looked very different because during that year, the top performers were pharma and healthcare. So, we don't chase returns. That's what I think a very big learning is. And of course, you should take sectoral allocations. There's no harm if you have a high risk appetite. But these are just indicative of what has happened in the financial year. And, it should not constitute an investment advice for investors.
Got it. Fair enough. With regards to mutual funds and especially equity mutual funds, how have the major categories in equity mutual fund space performed? I mean, with your analysis, the top 3 or 5 mutual funds or bottom 3 or 5 mutual funds, and what is the average performance of these mutual funds been like?
Right. So within equities, Mahima, we look at these 6 top categories within equity because these are the categories that we always suggest that you should have a large cap fund, you should have a mid cap or a multi cap fund in the portfolio. And if you're looking at just large caps alone, we see that the category average was negative at 2.39%. The best large cap fund, the returns are 1.62%. And these are times, when a new investor who comes to the market starts saying that probably I was better off in a fixed income fund or a fixed deposit. And that is what we need to understand that, 1 year returns are is not a way that you should be judging any equity scheme. But of course, the worst returns in the large caps was alone 10%. Flexi caps was equally bad by EMA, category average negative 1.3%. Flexi cap, the best fund, has given us 2.6% returns. Mid caps is very interesting. Here I'll mention that the benchmark went up by just about 1.6%. The best performer gave us 12% returns and the worst at negative 12%. But Mahima, when we just, sort of stretch all of these returns and look at 7-year returns, especially rolling returns, these 2 worst and best performers in the mid caps, the positions are totally inverse when we are going and looking at 3-year over 7-year period rolling returns. So the short-term performance can be very, very different from how the fund will perform over a longer time period. So if somebody is looking to choose or create a portfolio from here on, fine, you can look at the past 1 year to give, to understand how the fund has performed. But overall, there are many other factors which they should see. And multi-caps, large and mid-cap and small caps were equally, sort of frustrating in terms of returns. They all gave us, a single-digit returns with the best performer barely touching 7 to 8% in all of these categories. So overall, my equity funds, of course, struggled during the whole financial year, and the best performers have also been sub 10% in all of these categories.
Got it. The other big talking point in FY26, Prableen, was gold and silver, right? Both of these metals have done fairly well. Of course, silver has corrected a lot in the last 1 month, but overall still has given, great returns to investors who have, kind of invested in these metals. But from a person who has kept on doing SIPs in these ETFs, what would, a netted return would have, kind of given them in FY26? And now, what would you recommend them to do, going forward in terms of their allocation to these ETFs? Probably see some rebalancing, book some profits. What's the recommendation?
Gold, absolutely glittering all the way, Mahima. It has been a spectacular year, 60% returns, financial year returns. And, silver is almost double of that, actually. But it's interesting, just to look at the SIP returns. If somebody had started in March of 2018, a simple SIP in gold, and it continued till 2023, the returns would have been roughly 13%. And that's fair. That's what gold has done. Even 10-year returns from 2013 to 2023 are roughly about 11 to 12%. But then if we include these last 2.5 years, the same SIP, which started in 2018 and continues till 2026, has given 24% returns. So I think point number one here is that, we have seen a spectacular phase, the rally in gold and silver, but that may not continue going forward. So the past returns, I would say, just omit these 2 recent years and then look at what has been the returns for gold in the past. And that will give you a modest and I think a more realistic estimate of what should be expected from gold. And gold, I think, still remains very relevant for any portfolio with a 5 to 15% allocation even now. And if somebody is looking to start, I think take a staggered approach, take an SIP route. It definitely should be part of your core portfolio. And I think silver should be part of your, sort of a thematic bet or your satellite portfolio. It shouldn't be part of your core. And I think don't chase the past returns in both of these as on date.
Got it. Fair enough, Prableen. Now, considering that, the West Asia war still continues, of course, there have been talks that, this might come to an end very soon, but still that's an overhang as we step into this new financial year. From an investor perspective, what's the best possible manner to position right now in terms of, their mutual fund position, stock position, etc.?
So I think, Mahima, if we look at the markets today, there has been so much volatility and which is very discomforting. But if you are looking to take a long-term position, I think these are also the times while we, remain grounded in reality that there is a lot of crisis and that can continue. I think still these definitely offer very good long-term opportunities such times. So if you're a long-term equity investor, you're looking for, probably your child's education 15 years away, your own retirement 10, 12 years away, I think definitely relook at your asset allocation. If you are underweight on equity, I think it's time to increase your equity exposure. Don't suddenly jump into mid caps and small caps, but if you're underweight in equity, definitely start looking at equity allocations via diversified mutual funds. Mahima, another lesson I think and a very important thing is, maintain a contingency fund, because I think the recent 1 month has also taught us that life is very uncertain. We don't know how global, so many of these factors can impact your own job and your life. So definitely that buffer and contingency fund is really important. And I think take exposure according to your goals and risk appetite. And at this time, if you do have some incremental funds for making a lump sum investment, I think it can be done in tranches. And if your horizon is probably a little closer, 3 to 5 years, then I would say stay more large cap oriented and towards the hybrids. That's how you should be positioning yourself. But long term, definitely a good time, Mahima, to start investing and increase allocation in these markets.
Absolutely, Prableen. Thank you so much for helping us with all those insights. In fact, the important highlight I think that Prableen mentioned was the contingency fund, the emergency fund that everybody talks about, and not a lot of people kind of implement it. 3 to 6 months of what you require for your living should be made as a part of emergency fund and should be kind of be available in liquid funds, so that whenever you need it, it's available for you in cash to just kind of use it. Thank you so much, Prableen, for taking out the time and helping us with all of those insights.
Pleasure. Thank you, Mahima.
All right, so we talked about how FY26 has gone by and what you should an investor do entering into FY27. But from 1st of April, entering the new financial year, one thing that's going to change is the Income Tax Act. Your Income Tax Act 2025 is now going to replace Income Tax Act 1961. To understand as to what are the major changes happening and what does this mean for you, we are now joined by Sandeep Junjunwala, who's a partner at Nangia Global Advisors, joining us now. Sandeep, thank you so much, first of all, for taking out the time. My first question, before I take these changes individually, according to you, what are the major changes that one must keep in mind before entering this FY27 in order to kind of keep in mind their taxes into consideration?
So, Mahima, it's important for the viewers to know that the Income Tax Act doesn't go off the shelf immediately and completely. So, in some sense, it is not a control, alt, delete kind of moment. Don't know, we were experts until yesterday, and then we are becoming an index hunter today because the entire act has been rewritten in a way that the section numbers, the rule numbers, those references have undergone a complete change. But I think we need to understand it by bucketing all the transactions into three categories. One is, say, for instance, the filings for FY 25-26. For instance, the TDS returns that needs to be filed for quarter 4 of 25-26, that will follow the Income Tax Act 1961. Any TDS return that is going to be filed for quarter 4 is going to follow the the formats of 1961 Act itself. And this also applies to the return of income. So anyone who's going to file the return of income, be it a corporate or a non-corporate, as it pertains to financial year 25-26, I think those all need to follow the formats largely of the 1961 Act. In fact, we had all the ITRs notified yesterday. Now, the second bucket is the transactions that pertains specifically to the financial year 26-27, which starts from today. Now, in that category, I think there are major changes. Say, for instance, in the case of a salaried employee, there are changes from HRA perspective, for instance, where the new metro cities of Ahmedabad, Pune, Bangalore, and Hyderabad have been included. There have been some rejig in allowances, say, for instance, the education allowance, hostel allowance, and perquisites also. So that probably will require a little bit of evaluation for the salaried folks to understand whether they need to maybe go back to the old regime, because until now, new regime was by default, chosen. So if old regime where all these allowances and perquisites are still given at a, much better rates, if that makes sense, then possibly it's a time for them to reevaluate and switch back to the old regime. Now, continuing the, category of transactions in FY 26-27, some of these forms requires Form 15 CA-CB, which is pertaining to foreign remittances. The thresholds for PAN and SFT, those have undergone changes. A classic example could be a person going and deposit money in a bank where, say, for instance, the cash deposit is more than 50,000 rupees.
Yeah.
It earlier required, them to code their PAN. Now that limit has been increased to 10 lakh a year. So technically, those are the changes, that comes into picture. And then we have the third category where we'll have to do the filings for financial year 26-27, which will come next year, in the next calendar year itself. I think largely we will see all the changes there, where because the forms related to tax audits, some of these details of accounting software, the IP servers, etc. I think those will be the significant changes that will probably kick in maybe next year when we see the filings for 26-27 coming in.
Okay. Sandeep, with regards to your ITR filing as well, there has been a slight change in timelines as well. Can you give us a perspective on that?
Yeah, so that definitely allows the taxpayers to file the revised return with an extended window of 12 months, which was earlier 9 months. And of course, there has also been a change in the timeline for filing of returns for tax audit versus non-tax audit cases, which will apply to all the returns that pertains to FY 25-26. And therefore, taxpayers can take the advantage of that extended window for the filings that they have to do in the current year.
Sandeep, they've also introduced something called tax year concept, because financial year, assessment year, etc. has been confusing for a layman, right? Give us a perspective on what has changed here.
Right. So we always used to follow the concept of financial year and assessment year, Mahima. So where, financial year is a year in which actually you undertake a transaction, and assessment year is the year which is 1 year ahead or preceding the financial year, where the income was assessed and first reported and then assessed. Now they have tried and unified that concept by saying that going forward we will continue to call it as a tax year. So no more concept of financial year and assessment year, because there used to be confusion, at least for the common man, to understand what is a financial year and what is the assessment year. Now going forward, everything is unified in terms of saying that it will be a tax year. So it will be called as tax year 26-27 going forward.
Okay, Sandeep, the other aspect, and this was there, this was also a part of the budget, buybacks being taxed as capital gains rather than deemed dividends, Give us a perspective from an investor point of view. How does this change taxation for them?
Okay, so I think when it comes to buyback, Mahima, I think this has just gone a full cycle. I think this is more of a classic example for a policy in motion.
Correct.
Now, what the budget, earlier this year tried to do was to try and plug the tax arbitrage which was available for the promoter group between a capital gains and a dividend. Now, I think largely it impacts the promoters, and promoters are defined to mean people who have more than 10% shareholding in a particular company. So what they have now done is they have introduced a concept of top-up tax. So which means that the tax rate which will be applicable for buyback and dividend would largely remain the same for the promoter group because of this introduction of top-up tax. And they've also now, recently, I think 2 days back, clarified that there is a flat 12% surcharge that's going to apply on the capital gains, which is in some sense good as well as bad. Good for people where the capital gains arising on buyback is more than 1 crore, where a higher surcharge of 15% was applicable. So technically they stand to gain by 3% reduction in the surcharge rate. Whereas if the capital gains was a smaller number, say for instance of 50 lakh or anything less than 1 crore, then where no surcharge was applicable, now there will be a flat 12% surcharge applicable. Having said all this, I think it's very clear that this will all apply to the promoter group. So for the non-promoter group, whatever surcharge is applicable to them as per their particular slab category will continue to apply.
The other interesting update, Sandeep, is with regards to your credit cards. I think, if I'm not wrong, the new act suggests that if your credit card bill goes over that 10 lakh rupees, the bank is now supposed to give that statement to ITR. Just want to understand that what are the implications of this rule coming in?
So I think they have done a lot of, threshold rejig when it comes to SFT reporting. So SFT reporting is something which is to be done by, financial institutions, banks and companies where, they deal with a larger set of consumers and, stakeholders. So for instance, in the example that you gave, where the credit card payment, specifically if it is done by way of cash, for example, and it exceeds 10 lakh rupees in a year, then the bank is going to report that to the income tax department. And obviously that gives them a more curated data to look at, to understand what is the income pattern, what kind of disclosures of income has been made by that particular taxpayer in the past, whether it is proportionate to the income that is being offered to tax, etc. And I think that's what is largely going to happen by way of all the rejigs that has happened in the threshold as far as it concerns the SFT.
Got it. With regards to sovereign gold bonds, Sandeep, I think the tax exemption on maturity now applies only to the original subscriber, not the person who has bought it in secondary market. What are the implications of this?
See, I think any which case, there are no new issuances of the gold bonds that are happening now, right? But yeah, as you rightly said, for the earlier tranches where people have already bought it, they have curtailed the benefit. It will not apply to people who have bought it from the secondary markets. And therefore, in some sense, it's also discouraging to people who have held it in the past. But as I said, I think that's not an instrument that's live today. So maybe if people are planning to invest in this category, they may have to probably wait for the next set of notification whenever the government comes up with.
Got it. Sandeep, what are the major TDS and TCS changes that one need to keep in mind?
See, TDS, I think, Mahima, the rates don't change, but obviously the section references change. So I think a lot of companies are relabeling and recoding the new sections and rules into their ERP systems, which is as good as rebuilding the map while the traffic is still moving. Because I said that for a certain part of the year, current year also, they need to probably give references to the old sections itself. Whereas after that, they need to probably give reference to the new TDS section, which is the relevant table in section 393. But as far as the rates are concerned, rates don't undergo a change. Yes, TCS rates have been aligned. I think largely it falls in the category of 2 to 20%. Say, for instance, there were multiple rates when it came to the TCS on LRS, for example. Now they've unified it and made it a uniform rate of 2%. So some reaching in the rates of TCS, but largely the TDS rates remain the same.
Got it. Sandeep, from a layman's point of view, what are the 3 or 5 major changes that you think are necessary for him or her to know right now in order to, maybe file their taxes or trying to understand their taxes?
See, largely, I think in substance, the act and the rules remain the same. As I was saying that obviously there has been a lot of changes that have been done in the forms, etc. But maybe those don't concern the common man. I think they are largely for the corporates. But maybe for common man, things like, planning around salary, they may be trying to evaluate whether the old regime still makes sense, because a lot of these allowances and perquisites have been increased in an upward way. So maybe for them to again relook at whether staying in the new regime makes sense, or maybe they should again go back to the old regime. Some of these things where PAN reporting comes into picture. Say, for instance, if a common man is buying a motor vehicle, the price of which exceeds 5 lakh rupees, then PAN reporting, becomes mandatory. And in some sense, there has to be an alignment between the kind of income they have reported in the past vis-a-vis, the category of vehicle that they are buying, because all of this in some sense gives more data, which could be, analyzed a little deeper to understand whether that particular taxpayer is falling in a category where he or she can buy a motor vehicle, in that particular category based on the past reported income.
Got it. Sandeep, one last question from my end. How would you rate this new income tax act? Good, bad, ugly? And whether these changes were welcoming or not?
No, these are definitely welcoming changes. They have done a lot of streamlining when it comes to, some of the redundant part of the law by, trying to converge them and make it more simpler for the taxpayer. So I wouldn't say it's bad or ugly. It's definitely good. But the whole point that I'm trying to emphasize here is that in substance, the law remains the same. Rates have not been tinkered into. The fundamental principles on which income is to be taxed, remains the same. So it's nothing to worry about. Maybe during the transition phase, people will have to get familiar with the kind of disclosures that goes into the new forms. But largely, in substance, the law remains the same.
Got it. Okay, Sandeep, thank you so much for taking out the time and helping us understand what this new Income Tax Act means. And thank you so much for taking out the time as well.
Thank you.
All right, viewers, so as Sandeep mentioned, I think there is nothing much of a change when it comes to the new income tax in substance. Just for viewers' perspective, the new tax rates do not change. The slab remains unchanged for FY 26-27. Zero tax limit up to 12 lakhs remains effectively, with the 60,000 rebate under 87A and standard deduction for salaried individuals at that 75,000 odd rupees. So this is the, overall view of what this new Income Tax Act means for you. But with that, completely out of time on this edition of Your Money Matters. Do stay tuned for more news and updates on the other side.
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power जैसा spice और पुणे वाली energy. Gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu?
The discussion is with regards to what's happening on the geopolitical side with the updates that have come in. We're talking about a new timeline. Now, whether the timeline holds water or not is anyone's guess, but clearly the aim is to narrow nuclear prevention. Let's get in Professor Dr. Kivraj Jangid, Professor and Director at Jindal Center for Israel Studies. Professor Kivraj, my question coming to you is, in fact, a very good morning, first of all. My question is, how are you looking at the developments from the last time that we spoke to now? And the latest being that we are ready to negotiate, we are ready to sit on the table if Iran comes to the table. And two, another 3 to 4 weeks is what Trump is watching out for.
Thank you, Hiral. The war stands at a very turning point. I think it shows us the limits of the military power, but also the success of the military power. Success of the military power, as you said, is to prevent nuclear Iran. Now, nuclearization is certainly a legit issue for many nation states. India got nuclear much against the American wishes and sanctions, but Iran got a much bigger fight against America. It's not only about regional sovereign autonomy. Iran also has declared America as its arch enemy. And it is an ideological war that Iran has been engaged with America. So America cannot, let's say, from their point of view, have Iran a nuclear power when Iran doesn't let go the ideological fight against the West, and particularly America and Israel. The second thing that I think is important is the restraint that Donald Trump has shown. Now, usually he's not a person who speaks the language of the restraint, but if we look at his actions in the last 10 days, from the deadline that he gave about opening of the Hormuz, he has now said, and this is interesting what he has said, that I actually can make a deal or walk out of this war without even assuring the opening of the Hormuz. He's being little more narrow in his imagination, meaning he doesn't think closing of the Hormuz will hurt American energy market as much as it is hurting the Asian economies. So he thinks, why should he actually insist in opening of the Hormuz when he doesn't even have the European powers joining him? Yesterday, France denied use of the airspace, and he's very pissed, and he has made another strategic move to let the rest of the world know that they will have to deal with Iran on their own. He might just end this war without making a deal. Now, without making a deal is also very important strategy for him. We understand that Iran has won this war politically in sustaining the regime, as well as showing no backing off. Now, he is in a catch-22 situation. He can continue and show Iran, hard, spot. But he's smart in the sense that he doesn't have to humiliate Iran further. And he can say, well, fair enough, you don't want to open the Hormuz, America will be saved, because America is very energy self-reliant.
Yeah.
And if you look at the last, month, it's the countries like India that has suffered, but not America.
Sure. Professor Kviraj, good morning, Neeraj here. So does that make US get out of it unscathed and sounding victorious, part one? Part two, what about a third actor in the act, which is Israel, because they've amped up the attacks on Lebanon and they have not even mentioned anything to the effect of reconciliation or ending the conflict. What happens there?
Well, on the America side, I think I understand Donald Trump, even if I don't appreciate what he all does. But it's interesting that he's making a victory out by saying, I don't really want to fight for the opening of the Hormuz. And that would be a very fascinating move for the rest of the world to deal with him, because the rest of the world doesn't want to join the war with him. And I think it's one of the smartest things that he could come up with in the last 10 days. When it comes to Israel, I think Israel is in a much bigger crisis. Militarily, it is a success for Israel to carry such a strike on Iran, to destroy its military capabilities by, let's say, some years. But the fact that Hezbollah has joined the war has made Israel's position very precarious. Because a year back, assassination of Hassan Nasrallah and a deal with Lebanon was that Hezbollah will not be left armed, and let alone that Hezbollah will pick up another fight with Israel. But Hezbollah has picked up this fight with Israel because Hezbollah has joined the Iranian resilience against this attack. So once Donald Trump declares this war is over, Israel is going to live much more, let's say, violently for coming months, because which way Benjamin Netanyahu will say the war is over for him, unless and until Hezbollah will stop shooting missiles at Israel. So I think that's why Netanyahu hasn't said anything much, because he's also in a way trying to understand the compulsions of Donald Trump, and he knows that Donald Trump will not carry this war further.
Okay. Professor Kviraj, unfortunately today is slightly packed, so we'll have to wrap it up here today. I would have loved to do at least 2 questions more, but we are running very short on time. So we'll have to call it a day here. But for these 2 pieces of insights, thank you so much for that. Let's see if it's indeed a smart thing done by Donald Trump and we see some bit of an end to this conflict. But really appreciate your time and those insights. We got an ACE fund manager, Rahul Veera, fund manager of equity investments at Nippon India AIF Johnson right now on the show. Rahul, great having you. Thanks so much for taking the time out. And, we were having a macro conversation just before we got you. I would love to understand, how are you thinking about the macro in terms of how will it have an impact on the micro? Is the macro now turning favorable enough at the margin for you to take a bottom-up call of deploying fresh capital to work?
Sure. Hi, good morning, Neeraj, and wish everyone a very happy fiscal year ahead, and your audience. See, taking our first top-down approach, if we see the major impact to India at this point of time is largely the energy crisis that we are going through. Almost of our 53 million metric ton of LPG imports, of which 20 million ton comes directly from the Qatar side of it. Qatar itself has a 80 million ton of capacity, of which almost 40% of that is going offline. It will take a year or two to come in. Now, the countries that are getting impacted are Kuwait, India, Bangladesh, Pakistan, all of these eastern ones. India cannot replace the LPG that easily. This crisis, more or less, is going to further percolate into micro, as we mentioned. Now, the moment we try to dissect the micro, just for example, NSE final companies, the profitability is 15 lakh crores cumulative for all companies together, for NSE final companies. Your banking itself is 6 lakh crores. Then IT close to 2 lakh crores, and rest of the other small caps and mid caps composite the other 7 lakh crores. Here, the major impact, if we dissect it further, 1.5 lakh crore of manufacturing profits, specifically on the higher capex businesses like metals, chemicals, is going to continue. So almost 50 to 70,000 crores of profit impact can be considered at this point of time. This is the way I've tried to connect the micro and the macros together. Now, 50 to 70,000 crores of PAT is approximately 5% of EPS cut for the NSE 500 companies, which the market has already reacted to in the month of March itself, right? So in terms of valuation correction, it's not happened, but in terms of market correction or time correction, market has already priced in the current till date impact of the war on Indian markets. So we believe from your bottom-up picking will help. Be selective between services and manufacturing, slightly tilt towards a little bit more of the services side.
Okay.
Again, sectors go on the manufacturing side, go with pharma or metals. They'll be slightly better.
Okay, and we'll come to the sectors in a bit, Rahul, but just trying to understand, history may not repeat, but it rhymes often, right? Is there a comparison of the valuation damage that has happened right now to any other cycle in the past? Let's say the previous decade had multiple black swans, if I can call them that, right? So there too, the valuation at various point of times would have gotten crunched. Is there a comparison that you guys have been able to do about what's happened now versus what may have happened then?
Sure. So very interesting question, Neeraj. This is exactly that we have been working on. What we dissected, we picked up the data from 2011 to 2019, like the literally pre-COVID cycle. It had a macro impact in 2013, where we considered India as one of the fragile fives, where a very sharp currency depreciation and current account deficit was there. Plus there was GST, plus there was a demon impact across the whole cycle. So 2011 to 2019 cycle has given up some very, very interesting data points. So out of the 800 companies by market cap in the past 16 years, we tried to see which are the companies which are following lower in terms of valuations on a forward basis, on a FY28 basis versus the previous cycle, 2011 to 2019. So there are 66 companies out of the 800 companies which are trading below their previous cycle. Now here, out of 66 companies, majority of them are coming from the banking side, the IT sector, and the FMCG sector. Now what we believe, IT, understandably the AI impact is there, hence the current valuations are trading below the previous cycle, even the growth cycle is not there. Again, on the FMCG cycle, we saw what had happened to larger names in the paints and the FMCG sector in that cycle, where margin expansion was there. But in this cycle, the valuations are much cheaper, but volume growth will not be there. Hence, banking turns out to be a very clear winner. In fact, in that cycle, we saw a major NPA cycle during those 10 years. As of now, the NPA cycle is not there, but the valuations are cheaper than that cycle. So we believe banking is a very clear-cut winner for the next couple of years.
Well, that's an interesting point that you make in terms of the analogy that you're picking up there. This is Hiral on this side. Good morning. So let's look at the approach that you have from here on. Now, what has happened in the month of March itself, if you look at the FIs, we've seen an outflow of close to little over 1 lakh crores already. Now, does that actually force you to move to a defensive shift when it comes to your portfolio then?
No, see, frankly speaking, these technical factors, whether SIPs will work on the DI side, where FI outflows happen, very difficult to answer those questions. For them, it's always going to be India as one of the asset allocation from a global standpoint of view, where they might have a view, they might not have a view. From our standpoint of view, it's clear that we need to have a bottom-up approach. Valuations should be the key parameter. Balance sheet should be a key parameter. In our view, markets are giving a very, very lucrative opportunity from a bottom-up standpoint of view. A lot of companies are available in a single-digit PE as of now, if we have a 2 to 3 year kind of a framework. So we continue to allocate incremental capital towards small caps and mid caps from here on.
So small caps and mid caps is what you're looking at from here on. In past conversations as well, you have been bullish when it comes to energy and upstream companies as well. With what's happening right now, how would you then combine the broader market perspective with your upstream and energy companies?
See, upstream, again, it's going to be a call on the crude. We believe this is going to be a temporary impact. 3 to 6 months of $100, $120 is manageable, but it can provide some kind of a benefit to Indian companies like on the upstream side. But we've seen that government intervention will come where any kind of excess profits will be taken away in terms of taxes. Hence, we do not want to allocate anything to the energy sector at this point of time. We remain on the sidelines, but there are a lot of ancillaries like offshore drilling companies. There can be some decent opportunity in these other names.
Rahul, just one small clarity that I wanted. You mentioned that compared to the previous cycle and the current cycle, banking, IT, and FMCG are the sectors where the valuations are materially bombed out. But that sector doesn't have too many small caps and mid caps, right? And you are in favor of investing in small caps and mid caps. So how do you combine these two? Do you look at NBFCs? Do you look at small PSU banks, small private banks? How do you kind of marry these two?
Right. So it's going to be small private banks. That is going to be our first preference. Since the NPS cycle is not there, the comfort is much higher on these smaller names. Even large cap have corrected, but we prefer to have the slightly beta in the portfolio, and we prefer to go with smaller private banks. Other than that, all the other sectors, small caps are preferring much more better alternatives now versus the large caps.
Rahul, some news flow and the last 2 days, Avenue Supermarts, for example, added 18 stores. That has gotten that entire retail space very, very activated. Now, I know you look at cycles fairly strongly, right? Avenue Supermarts for the last 4 or 5 years hasn't done anything in terms of shareholder returns after having a great listing. Is this a classic case of a large cap consolidating and waiting for a breakout? And can a breakout come into a retail business? Because even Trent, for example, went up all the way to 7,500, etc., and then came off. I'm not asking you to comment on individual names, but I'm just asking that what happens to the large cap retailers at the current context? Because the last 12, 18 months, they have not created wealth. Are they consolidating, and is the consolidation done?
Yes, definitely. See, the entry point of valuation for these names a couple of months, couple of quarters back was extremely expensive.
Right.
They were trading at almost 60, 70 times during those times. As of now, the valuation comfort is definitely there, but we'll have to be in a cautious mode. See, for them, larger names like these, right, where margin becomes very critical. Your QCR business, all the other optionalities are so high, which are impacting the businesses today. We've seen some improvement from the bottom, from where they were impacted. They are slightly improving, but whether they will be a large wealth creator, we'll have to wait and watch. Currently, we are preferring to be on the sidelines.
And with the way, Rahul, the rupee has been moving, we've surpassed and breached that 95 per dollar mark as well. Does that force you to get a shift in terms of strategy when it comes to positions in automotive, in paints, a lot of sectors where you have positions? So how do you look at the rupee movement versus shifts in the portfolio?
So rupee depreciation will help some of these sectors as well. For example, pharma. Right, IT, it's difficult to take a call. There'll be a defensive call at this point of time. Valuations are very cheap. But again, we'll not like to participate in the IT names at this point of time. Pharma and pharma exporters, again, small cap and large cap, both sides. There are lucrative opportunities in the pharma space for sure. So from the rupee perspective, pharma exporters will be one of the key beneficiaries at this point of time.
Just a follow-up there, because pharma seems to be coming in most conversations. Where within this pharma space are you more constructive? Is it the generic exporters? Is it the CDMOs? Is it the API players? What is looking strong?
As of now, what has happened is because of the logistical issue and the raw material issue, we are seeing a lot of API prices on the domestic end have increased very sharply. So some of the very small cap or mid cap names will see very strong basically benefits because of the raw material prices on the one side. The other impact will be negative or the gross margin impact for the larger guys. So some of the generic or API players will be the key beneficiaries in this cycle. Again, small cap, mid cap names will offer some of these names in terms of the exports plus higher API prices for the some of the companies. Just to give you a perspective, like paracetamol or para-aminophenol that we talk about, almost the prices were 400 rupees. Today it's at 600, 650. Now, if you go to paracetamol or a PAP, that is para-aminophenol manufacturers, there'll be some key manufacturers there which will have beneficiary in this cycle.
Pharma is the space, in fact, Neeraj and I were just talking about that a lot of fund managers, CIOs are of the opinion that probably pharma is going to be the new IT sector in 2026. Let's see if that holds water. But a quick question, cement and infrastructure, Rahul, your view, because price hikes are probably on the cards.
Right. See, 20% of the cost on an EBITDA per ton basis directly comes from the fuel side of it. That is petcoke or any other fuel sources that the companies are using. As of now, it's a slightly negative for them in the near term. They'll have to go for price hikes. But given the overall structural cycle at 6 to 7% kind of a volume growth for most of these companies, again, consolidation is happening in the sector as well. We believe here near-term impact may be there because of cost per ton basis increasing slightly higher, but any price rise will be positive. Here we will be selective in terms of mid cap and small cap. Again, large cap names are in a over competitive zone. We see them at best like a compounder at best, but some of the small caps, mid caps offer better valuation at this point of time.
Got it. Okay. Well, here's a fund manager talking about looking at small caps and mid caps at the current point of time, extra beta possible. Rahul Veera, thank you so much for taking the time out and being with us today.
Thank you.
In a large transaction in the NBFC space, International Holding Company buys out a large stake in Sammaan Capital with an infusion of $1 billion that has been committed, for which the first tranche has reached Sammaan Capital. Let's get chatting with the management. MD and CEO Gagan Banga is right here with us. Gagan, always a pleasure to speak to you on NDTV Profit. Many congratulations on this. What does this large capital infusion, Gagan, which has been a trend now in the financial services sector in India, what does this really mean for your competitive edge and for your growth?
Good morning. Thank you for having me on your channel. And on your point that it has become a trend, it's actually a global trend that in financial services, the big are getting bigger. There is significant consolidation which is happening, which I believe is a bigger de-risking sort of an exercise which is going on. So in that context, it was having fought an existential crisis which came between 2018 and 23, and then subsequently having stabilized the company through 24. It was almost imperative that for the company to be able to pursue a very, how should I say, steadily compounding growth journey from here. We needed strong parentage. And one could not have imagined getting a better promoter than IHC, which not only is infusing $1 billion, but given just their size and global reach, would strongly facilitate this entire growth journey from here.
All right. When you talk about, April 7th is one of the board meetings that is being conducted at Sammaan Capital. And on the agenda is the buyback of dollar-denominated bonds. Can you give us more details on that? And does this capital infusion, Gagan, also help you refinance your key raw material of funding at a lower cost then?
So over the course of the next 12 to 18 months, one of the primary goals of the company is to expand margins by a little over 200 basis points through cost of funds reductions. I see a positive trajectory on our credit ratings. And as a first step, we would use the liquidity available with us and the overall trajectory of our growth of our credit ratings to also engage with the market to see whether we don't need to wait for the next 12 to 18 months and we can perhaps buy some of our higher cost debt almost instantly. So that's the endeavor of this tender program that we hope to get approved on the 7th of April. We've also announced a similar program domestically to buy back some of our NCDs. So the whole thought is that over the next 12 to 18 months, most certainly the flow cost of funds would reduce. What can management do to also reduce the stock cost of funds?
All right, Gagan, that gives a lot of clarity about the future as well. 200 basis points improvement on the margin in 12 to 18 months is a target that you are really setting forth. From April 7th, board decision of really buying back the dollar denominated bonds, how much of the immediate impact will come in on this 200 basis points target?
No, these are small bond issuances that we have done. There are further ECB guideline restrictions on how much and what series can we buy and so on. But this is just one of the several initiatives. There's a larger bond program which we run domestically. There is engagement with our banks, which have been tremendously supportive through the years where the firm was having its own issues. We've also managed India's largest deleveraging exercise very successfully without causing pain to anyone, paying on or ahead of time close to about 1.3 lakh crores. So given that there is an overall appreciation on the credit, now with the parentage, I think the 200 basis points reduction should happen very, very quickly.
That's right. A strong parentage will also help you in the funding requirements as well. And of course, the funding that has really come in. But Gagan, how critical is it as part of the overall transaction for IHC to go above the 51 mark and above 60 mark in terms of the shareholding in the company to have more skin in the game and the controlling position as well? By way of the open offer, because the open offer is at 139 rupees per share and the stock price has moved above that. So are you expecting good tendering, and how critical is good tendering for the new buyers to come in?
So the Reserve Bank of India and the other regulatory approvals which have come are giving control to IHC. That control has really nothing to do with the shareholding percentage. It's just a notion that for control you need 51%. This is a listed company in which control can be had even with 20-odd%.
No, Gagan, I understand the voting right remains the same, and that has happened in many other transactions also in the other NBFCs. But the new buyers or the foreign investors want more skin in the game as the company is set to grow with their given capital. So I just want to understand in terms of the negotiations, will IHC be comfortable if the tendering is lower, if the stock price is higher than the open offer? I just want to understand that bit.
The comfort that IHC has, or rather the aspirations that IHC has around both Samman and the country, is demonstrated in the fact that despite UAE being in the middle of a war zone, they've turned around the actual allotment of the shares and the transmission of the money within 3 days of the approval coming from Reserve Bank and within 1 day of the approval coming from SEBI. So that just shows, is a testimony of their commitment. They are looking at this business long term. My strong advice to them has been work with the management to see how much more money can come into the company or its affiliates to pursue opportunity. And at 41%, they have more than adequate control. So I don't know, it is for the market to decide whether they want to tender shares in the open offer or not. And statutorily, if they do, they will take it and be happy about it. But as management, I would rather that it is company and its affiliates. I would much rather ask for a larger allocation to a credit fund that I hope to set up shortly. That's the engagement that one would want to do with them.
All right. Thank you so much, Gagan Banga, for explaining all of that, and wish you all the best for a new journey for Samman Capital. Thank you so much for joining us.
Thank you.
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power जैसा spice और पुणे वाली energy. Gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Good evening, I'm Vikram Oza. You're joining us on NDTV Profit for the big question, and tonight's big question comes at a rather crucial, a possibly decisive moment in the West Asia conflict, because the United States may now be preparing to end the Iran war with or without a deal. So US President Donald Trump has now, over the past few days, he's signaled that Washington does not necessarily need a formal diplomatic agreement with Iran to bring this conflict to a close. So in fact, this latest messaging that's coming through from the White House is suggesting that the objective is simple. Finish the military operation, degrade Iran's strategic and nuclear capabilities, and then leave Iran and this war. So in the president's own words, whether there is a deal or not may now be, in what he calls, it's a very important word, he says that may be irrelevant. So Mr. Trump has even spoken of a possible US exit within weeks. Once, as he puts it, Iran is pushed so far back that it cannot return as a nuclear threat. So now this raises important question. It raises the very real possibility that this war ends not with a peace signing, but with a strategic American withdrawal. But here's where it gets complicated. Israeli officials are indicating that they may not necessarily follow Washington's timeline. We've already seen reports of Israeli strikes targeting major Iranian gas assets, even as the US is insisting that it was not informed about this in advance. So while Washington says it wants to wrap up operations quickly and avoid long-term entanglement, Israel on its part continues to signal that total victory, not the timelines, remains their priority. So at the same time, we're seeing global markets watching one choke point very closely, and that hasn't changed, the Strait of Hormuz. repeated warnings from President Trump about keeping Hormuz open for business, threats of overwhelming retaliation if all flows are disrupted, underline why this conflict matters far beyond the battlefield. Rising oil prices, the risks of inflation, supply shocks, they are now firmly part of the strategic calculation across the world, including the US. So complicating matters now is the president's own shifting messaging as it's coming through. So in the span of days, even hours as well, we've heard declarations that the war is already won, warnings of massive escalation, pauses in strikes for talks, renewed threats if negotiations fail, and repeated assertions that the US can end the war whenever it chooses. So that raises a fundamental question. Is this calibrated pressure diplomacy, or is it a sign of impatience with yet another prolonged conflict for the US? So there is on paper a possible path to peace, a sweeping American proposal with far-reaching demands on Iran, matched against Tehran's insistence on guarantees, on reparations and sovereignty over Hormuz, the Strait of Hormuz. But the gap between these two positions is very wide. And looming over all of this is the wider geopolitical chessboard. Russia and China, they remain very quietly on the sidelines, perhaps shaping outcomes, benefiting from energy dynamics. There is a distracted United States right now, which is why they are watching from the sidelines. Traditional alliances are facing fresh strain. You add to that renewed questions about America's global commitments. One of them is the big one, which is NATO. From NATO to the Middle East, this conflict begins to look less like a standalone war, more like a test of American power and American patience. So the situation tonight is this. The US may be preparing to exit Iran without a deal. Israel, on its part, may choose to keep fighting. Oil markets are on edge over Hormuz. And the world, of course, is asking whether this is a deliberate American strategy or is it a calculated retreat which is dressed up as victory. Which really brings us to the big question that we're asking tonight. And that's right up there. Now that we are seeing the Americans signaling Iran exit from that war without an agreement, without a deal, does this mean it is a strategic retreat? Or do you think this is something that they are working towards, that they had already thought of as it happened right at the beginning before this war actually started? Let's take that across to our guests and our panelists who are joining us on the show. Let me introduce you to them. Tonight on the show, we're going to have West Asia strategist Dr. Wael Awad joining us from the national capital, and indeed Ambassador Mahesh Sachdev with us, President at Eco Diplomacy and Strategies in the national capital as well. Along with them, we have defense expert, retired Major General Sanjay Soy, and Vibhuti Garg is with us, Director, South Asia for the Institute for Energy Economics and Financial Analysis. And from Mumbai, we have Chief Economist at IDFC First Bank, Gaura Sen Gupta, rounding off our panel. Thank you all for joining us on The Big Question. Let me begin by asking you, Dr. Wael Awad, if Washington exits without a deal over here, what does that do to the balance of power in West Asia? Does Iran come out weakened or paradoxically more confident?
Thank you for having me. I believe the Iranian and the American are in a good term to find an end or a triumph exit for President Trump out of this quagmire he has started along with the Israelis, because the American public opinion is now turning against him, and he is worried about the midterm elections, and his popularity is falling down. Lots of pressure on the Americans. So therefore, if he wanted to find an exit, it's a good time to speak tonight. Otherwise, he may have also the strategic ambiguity of the American policy in this region, or it's the operation going on. It shows also that he may be for a surprise of attacking Iran infrastructure and civilian target after they have already exhausted all the military target, which would mean that a regional war is on the card and there will be more attack on a civilian target inside the Arab country, including the American technical and technology and artificial intelligence companies in the region.
But Trump is saying that Iran has been pushed back decisively. He says they've been pushed back even into the Stone Ages, Dr. Awad. But Iran remains intact. It remains intact politically. It remains intact militarily. So can this realistically be called an American victory if at all the Americans are going to push it across like that?
Well, if the American president thinks that he have already obliterated Iranian power, why he doesn't bring his warship to the shore of the Iranian, where they will be welcoming him and sending back the coffins of the American to the Washington? But I don't think he understands the politics, because what's happening here actually that the surrounding the President Trump are giving him videos that he is winning this war, and they're showing him the glorious attack by the American, where he is already giving this rhetoric in his tweet. And even the New York Times have carried out that he has been giving so much of news regarding the,